you got a cold in your throat? Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Hello, everybody, and welcome to the Liz and Jenny takeover of the morning show. My name is Liz Deerking. That beautiful brunette in Miami clothes is Jenny Andrews. How you doing, Jenny?
Good morning, Liz. Good morning. Like to see you representing in your red. Thank you very much.
Hey, I'm a fan. I'm so excited for Logan. I'm so excited for that team. What a Cinderella story.
Fingers crossed. I'm hopeful that they do well. Everyone's hopeful that they make it to the NCAA tournament because they haven't made it there in years, and they're 24-0. We'll see if tonight they become 25-0, the only undefeated team in the country.
How much farther? How many games do they have to get to the tournament? Yeah, there we go. I love it.
So for them, it's not necessarily like how many games do they have to play to get in the tournament, because their conference is not as difficult as some other conferences. It makes it harder for teams in the MAC conference to get into the tournament, but they're undefeated. And if they win the MAC conference, they're for sure in.
Okay.
I would think they'd be in. There's a lot of hype behind them. It's on ESPN tonight. So we'll see. Tune in. The games are so much fun to watch. Tune in. I think it's 9 o'clock Eastern time.
Ooh, it's a late one.
Well, it would be 8 our time, 8 or 8:30 our time. I posted it. I posted on Twitter. You can see the time. But if you are into college basketball at all, tune in. My husband, who, he was a college basketball player, he is already on his way. He's in his Miami clothes. He's on his way. He wouldn't miss it for the world.
Oh my goodness, I can't even imagine. And what an exciting, can we pop into Twitter real quick if that's okay, Laura? What an exciting time for these kids, though. So Jenny posted it right here, Miami, Ohio basketball. I mean, it's a senior year. It's very exciting. And the students, my favorite thing about this, and I know I love basketball, but my favorite thing about the Miami is the swimmers that show up at the
Okay, yeah. If you want to see something crazy, tune in, because the swim team wears their Speedos. They stand behind the hoop where the other team shoots their free throws, and it is so.
Not only their Speedos, they wear their Speedos and their swim caps just in case there's wind resistance.
Yeah, and their swim caps, and I don't know if you've seen hold swimmers up and they'll pretend like they're swimming. It's something to see, and very exciting for the school. And it's cool because basketball is getting revived over there. They did a pep rally last night. It was packed. And
whoa, hold on. They had a pep rally in a bar, which is my kind of pep rally.
Yeah, pep rally at Brick Street, a double-decker bar. It was insane.
Yeah.
And Wally Zerbiak was there. So Wally Zerbiak was a player at Miami, and then he was in the NBA. And he went back. He was there for the pep rally. And at the pep rally, he's like, I'm going to buy the next 100 pitchers of beer.
It's my kind of guy. I like it.
Yeah. And, Scott Sheridan, our very own Scott Sheridan, he went to Miami, too.
Yes, he did. Yes, he did.
And the alumni are all very, they all still have fond memories, very loyal, still love their days there.
They do. It's exciting, and we will be watching, and I am rooting. That's why, like I said, Ashvin, this is not for you. Sorry, Laura. Laura, our producer, is also from Louisville. This is not for you.
The red.
Now, while we're on Twitter, I just want to say this is a show about trading. We've got a big number coming out at 7:30. We have our very own Chris Vecchio joining us to break down everything Jenny and I need to know about the CPI.
Liz, do you think this is the first time we're going to get to be on air with Chris Vecchio as our guest?
Well, I've been on air with Chris Vecchio before because I used to do that IG stuff.
Oh, no, but I mean, but that wasn't broadcast here in the U.S.
No, it was not.
Here in the U.S., live with Chris Vecchio, he's like a celebrity to me.
I love Chris. I love him. He's so knowledgeable. Him and Ilya are both so knowledgeable about everything, macro and the CPI. Because Jenny and I, as much as she was an economist at U of I, we don't. That's not our forte. We're options traders. Since we've gotten that, I'm a derivatives trader. I don't up until maybe the last couple years, those numbers didn't mean anything to me.
It's so funny because I started trading. So yes, I have my degree in economics from the University of Illinois. A great program.
Great school.
A great program. Yes. But I started trading the day I walked off that campus, and so I never like kept up in that realm where I was just a trader on the trading floor. So, if you don't keep up with it, that's why there are, Ilya also has a degree in economics, and
that's why he has his own show called Macroeconomics.
Yeah. Maybe one day, Liz, if this show doesn't work out, I'll have to brush up on my economics and join Ilya.
No, but I mean, we kind of tease about this, but in full disclosure, traders, especially traders from the trading floor, we trade the markets, not the news, right? So even if you had the news ahead of time, you don't know what the market's going to do, and that's where we're at. But we are lucky to have somebody who's going to break it down for us and talk about what it actually means going forward, looking back. We've got our very own Chris Vecchio coming on, so we're excited.
Yeah, so looking forward to having him on. I don't know I don't even know where Chris went to school, or I think New York. I think isn't he from New York?
He's in New York right now currently, so I would imagine he's a New Yorker.
Yeah, I think so.
He's an Italian New Yorker, just like
So we have a busy day because, honestly, usually my favorite thing of being on the morning show is having Vanetta on, because we love Vanetta, but she's out of town. It's a long holiday weekend, and I'm not sure. I don't think it's warm enough for her to have taken out her bike yet, but she is somewhere.
She is somewhere. We don't know where she is usually my favorite. You will not get any news today. So in honor of the CPI coming out, we're going to jump. Today we're going to do, it's all confirm and send right now until we have Chris, the run of show. And then we've got Jamal coming on, Jenny. Did you know that?
Yeah, Jamal.
This week in stocks. I do love that segment.
I know. I love to see Jamal too. So we've got a lot of good guests coming on today.
We do have guests, and then we have we have fast market. So there's 10 trades, which is exciting because they actually say the trade instead of what's your assumption, where it's like they give the assumption, we come up with the trade. So it's kind of fun. And then you and I, Jenny, we're back in the driver's seat with one of Jacob's 0 DTE market measures.
I am very excited about that. Very excited about that. I will say, I know you mentioned no news, but before we get into confirm and send, we had as far as earnings go, you might notice that I am not in my DraftKings outfit.
Oh, I know, because
I'm not in my DraftKings outfit. Bad DraftKings down to 21.38. It's trading 21.38 right now. It closed yesterday at 25. I couldn't believe it. I had to rub my eyes when I was watching them fall after earnings.
Well, you're like, is it down to 20? Is it down to 22? I was like, Jenny, it's in the 21 handle. Oh, yeah. And so, I mean, and we'll get to all that. We what's great about
but I think people want to know, honestly, when me as a trader, when I turn on the markets in the morning or wake up in the morning, the first thing I want to know is what did all my stocks do that I have positions on? And so the big ones on earnings for us, Coin, that one's up $7, $7 or $8. DraftKings down quite a few.
So now we didn't trade it, but AMAT was up like 15%. AMAT is rising like a phoenix from the ashes.
And AMAT is closed at 328 and it's trading 361. So
Rivian up as well.
Oh, good.
Yes,
Rivian. That'll help me. I need my Coin and my Rivian's up to 17. Yeah, and that's a big move from 14 to 17. So that's a big move for Rivian.
Yeah. So Rivian and AMAT were the biggest movers to the upside today. Mm-hmm. Coinbase didn't even move its expected move. And Coin was the tale of two cities last night, Jenny, because I saw it up and I saw it down.
I know. And when last I looked, it was only up about $4. So now being up $8. Yeah, I guess those things, my Coin and Rivian will balance out my DraftKings. But I was just like, why can't DraftKings get it together, Liz? Why can't DraftKings?
One day they will. One day they will. And I mean, we're opening in full disclosure. Like the SPOOs are down 25 right now. This is the lowest I've seen them all morning. They when I got up pretty early this morning, they were only, pretty much unchanged, and we've slid all morning long.
Yeah. So is today going to be like yesterday? Yesterday got a little bit ugly.
We weren't bad, and then we just slid.
Right.
We didn't open bad, and then it went down all day.
No, we were up in the morning. We were up in the morning. We were up at 9 a.m. We just started falling shortly after 9.
But you know what is crazy, Jenny? I think today might be the reversal. What if the CPI is going to save us all? The CPI is going to save us all because it is Friday the 13th. It is a Freaky Friday where we are on the morning show. It is Friday the 13th and there's a CPI, and that usually doesn't happen, but it was because this the small government shutdown.
So we'll see. I mean, the market spoos are down, but who knows? The CPI can turn this whole market around, and we've got 20 minutes until then. So should we jump into confirm and send so we can be done by 7:30 watching the market when that CPI comes out?
Hit it, sister. I'm excited.
Okay. Here we go. Confirm and send. Let's take a look. When a strangle breaches the tested set strike and goes a few strikes in the money, Tasty Mechanics suggest converting it to a straddle and then possibly going inverted. Does it make sense to go inverted if the premium being collected is not effective enough to make total credits received surpass the width of the spread? Example, $2 wide inversion with credits totaling 230. What would be the next course of action?
So that is Tasty Mechanics. You roll your untested side, and sometimes you're going to be inverted. It's very challenging to this person's email when if you are rolling it and you're not taking in over the width of what it is. Like if you have 230 and you have 230 in collection, that's fine. But if you have $2 and you're $5 inverted, it's a struggle for me. Now I know what Tony says. Tony uninverts.
I uninvert. You'll never really find inverted positions in my account because why? So if you're just collecting that theta, if you're just collecting that premium, you can uninvert.
It doesn't matter what side.
Doesn't matter if you're inverted or you change them and you've got just that strangle again. You could adjust your strikes. You could also close your trade and ask yourself, what position do I want on now, and put that new trade on. To me, this is a hard battle to fight. You don't have to, TP says this all the time. Money doesn't care where your money doesn't care where it's coming from. You don't have to make the money back in this trade. If you're in a bad trade and you don't like it, you could close it and switch to something else or change your trade. You don't have to keep rolling the same position.
Correct. And I think you and I are not over, don't get me wrong. I'm an addict. I'm an over trader, but I'm not an over manager. There's a big difference. So I do place lots and lots and lots and lots and lots of trades, but I'm not micromanaging it. So meaning like right as it gets breached, I'm rolling up or rolling down or rolling my untested. I actually give it a little room to be wrong. And I don't know whether that's right or wrong, but so it's kind of it's kind of a personal question. I like uninverted. I like staying with the out of the monies instead of the in the monies because they're more liquid.
Let's think about what would have happened for people if they were, over managing their metals, right? Over managing their silver positions and rolling up puts and rolling up puts and rolling up puts and rolling up puts. And then we had that day silver was down 34%. So then they're rolling down calls and rolling down calls. And they would end up with this big inverted mess. Yeah. I think I don't like to trade like that.
I don't
and I don't know. I really don't. And I don't think you do either.
I know I don't. So, but the mechanics are that I just don't want to micromanage it. Okay. So let's move on to number 2.
Okay. Let's see. I'm wondering what the difference is in trading SPX options hold on. You know what? I'm just going to read these. I'm going to read because as big as this is, I'm 50 years old.
Because I'm 50. Do the kick.
I'm 50 years old. I'm 50. Okay. I'm wondering what the difference is in trading SPX options in comparison to ES and MES options. I understand the ES and MES are futures products, but I'm wondering how they compare with trade settlement and buying power. I know SPX options settle as cash, and so there is no true assignment. I don't know how futures products work, though. I have traded 0 or 1 DT SPX in the past. My account's under $25,000 PDT now, and so that is not something I'm looking to do right now. I'm wondering what to consider if trying to trade ES or MES options on a 0 or 1 day expiration compared to SPX.
Number 1, I got to give you a gold star. You read this one way better than you read the first one.
Because I couldn't see it. I couldn't.
So I feel like this is a good trading lesson. Know your limitations and work within those same parameters as the trading lesson. So from that perspective, so they're asking the difference between SPX, MES, and ES, right?
Yes, yes. And they have less than 25,000, so they're subject to the PDT. So sure, use the ES options or use MES. They want to know the difference. I mean, you get better margin in using the ES and MES.
You do get better margin. And the other thing I was going to say is they said they were under 25, so the pattern day trading rule. So we know a lot of people, we've got Mikey's and different things like that they trade the MES and the ES options because you're closing it either way. So that pattern day trading rule does take effect in SPX. If you're trading the 0 DTEs like we do at 25% profit or 50% profit or however it goes.
Right.
So they
said they're not ready for that. They're not ready for the SPX. But honestly, if your account's under 25,000 in ES, I'd be doing spreads. And so if they want to know what happens with expiration with those, if you're trading spreads and they're both in the money, they'll both exercise in the sign, or they're both out of the money, they'll both expire worthless. But if one's in the money and one's out of the money, you have to close that by the end of the day.
No, Jenny, and Laura, can we pop in the platform? Is that okay? I just want to give a brief kind of quick rundown. So SPX is big, and you have to, those are working orders. SPX is big. MES, to your point, if you're trading the 0 DTEs, I would still be doing spreads in ES, and you can replicate pretty much the same thing. The other thing is you can trade this now.
Right, yeah.
Yes, you can trade this now. So you should be trading spreads. The one thing I was going to say is if you did want to dip a toe in the water, MES is small enough that you could maybe trade naked options.
So, okay. We have MES is...
It's still a lot.
I mean, ES is 5, like a half a SPY, right? ES is half a SPY.
Yeah, 50
so it's like 5, I mean, not half a SPY, half a SPX. So ES is half of SPX, so it's like 5 SPY. And what's MES? 1 SPY?
I think MES is close to 1 SPY.
So which is still big. It for a $25,000 account, I think it's.
I would argue you can use ES. I think there's a little bit of and I think Frank will agree with us on this. Frank the Great in the chat. I think ES is a little bit of a liquidity issue versus SPX.
Yeah, but if they are stuck up with the PDT. Then they don't want to trade SPX because they want to get in and out in a day. But if you don't care about getting in and out in a day and you just want it to cash settle, you could use SPX or XSP.
Here, I was just going to show the buying power difference. I'm just going to use the 6,800. MES, you're getting, you have to cut the multiplier in half. It looks the same, but it's different. Your max profit here, you're collecting $19, but it's actually only 100. Your max profit is 98, and you're putting up 2,300 to do it, right? So it looks very similar. Then you're going to go to ES, and you can't put the SPX in. So then you're going to go to ES, which is open right now. You're using $38,000 and you're getting $9,000 in profit. So it's definitely a lot bigger, but it's 10 times.
Oh, is it 10 times? So then MES is like half
yes.
So then MES is like half a SPY.
Yeah. Then it's got to be half a SPY. And then you go to SPX, which is there. Now we can't trade this yet because it's not open. But then it's even bigger. So here you got $131,000 and your max profit is 54. So that's the biggest difference is define your risk, and I think have fun.
Define your risk and have fun.
And Frank the Great comes in. The ES and MES options are way wider and SPX are much more liquid. That is the biggest differential.
But again, when is this changing? I thought that this PDT rule was going away or changing to a much lower dollar amount, which would be super helpful for so many people. I know our kids.
Yeah.
Like definitely. There's so many people that have smaller accounts and they want to get in and out of trades.
Yeah, they do. And so, I mean, it's a proxy. And that is sometimes the cost of having a smaller account is maybe having a less liquid product. So maybe look at that for JD.
All right. Number 3, are you ready for it?
I'm ready.
If you sell a spread, then the underlying moves the direction you want, and the short leg is trading for 5 cents. Would you ever just buy back the short leg? 100%.
Heck, yes. I almost swore, but yes.
100%.
I was going to say, yes.
I mean, you saw me buy back that. Oh, was it Rivian? Yes. Yes, Liz. Yesterday, I bought back a call spread for 9 cents in Rivian that was at the 17 strike. And you said, oh, Jenny, that's really wishful thinking.
Because we had the 17 big lizard on. I was like, if it gets to 17. Yeah.
Oh, yeah. You were like, that's never getting to 17.
You know what? Honestly, Laura, I'm sorry to do this. Let's pop in the platform. So I'm going to pop out the side. This is the activity, all symbols. I'm going to say
You just never know. You never know what's going to happen.
You're right. On earnings, you never know. And look at what Jenny bought back. She bought back the 17.18 for 9 cents in the 7-day. So we'll have to take a look at that today.
I mean, this guy's right. I should have just bought back the short 18. I should have just bought back the short 17.
Yes.
Should have just bought back the short.
No. These were still expensive. Do you remember this?
Yeah.
Because each one was about 20 cents. That's why I was like, that's why I was looking at this saying 9 cents. That's kind of aggressive.
And you said that spread's expensive for being so far away. So someone knew something because it's right there. It's right back.
Somebody knew something. Right. So that's why we paid the 9 cents because it was way too way too expensive.
So today, I mean, we could see that Rivian will make $300 back in Rivian today, but we'll lose in DraftKings. But at least we cut down the risk of that one end of the trade. Yeah,
true.
And if you, I know we've got 9 minutes, but if you take a look, so there's Rivian 17. You mentioned AMAT.
AMAT was up a ton.
AMAT up $32.
Yeah. I mean, you'll see the percentages when it opens. Coin was up about $7. But I mean, this is, to be honest with you, I love doing a show right now because Coin's been all over the map and we don't know where it's going to be when it opened. You watched Chop open up $40 and then close down $40. So it was an 80-point swing in Chop after earnings.
Yeah. Well, I'm
hoping DraftKings reverses today.
And if you go to the DraftKings chart, it was only like 2 weeks ago that it really got a little. No, it's just that little green bar. Just last week.
I thought we were looking for
just that day last week where I had some real hope. I had some real hope for DraftKings.
Yeah, well, what are you going to do?
I mean, honestly, do you know how many users they have? I don't know what they said on earnings or I don't know how bad it was, but they have so many people on DraftKings. How can they not monetize that?
I don't know. They got every kid suckered in.
I mean, I'm at every fantasy league.
They got Jenny Andrews.
They got me on there. I don't
have an account. When I want to place a bet, I have to call my son. How sad is that?
I just don't know what
let's we are 7 minutes until showtime, Jenny. So
okay. All right. Next email. Do you avoid selling a 45 DTE if the ticker's earnings is within that 45-day range?
Well, I think you'll get differing opinions from us than you will from the boys. I do not trade neutral. I will sell premium directionally if it's under there, but I typically try not to sell neutral premium if the earnings are within the cycle. Reason being, you're going to fight. It's just more difficult. You're fighting that volatility will continue to increase. Doesn't matter if you get the move or not.
And what another thing I will look at, I'll look at the vol because sometimes, let's say earnings are in 2 weeks and then you've got the 45 DTE, your expected move for the earnings cycle might be very, very similar to options 2 weeks later. So why go out and sell premium and get $2 in 45 days when you can get $1.90 in 21 days? So you have to just look at what you're getting. And so that's when I might bring, again, to Liz's point, not sell neutral, waiting weeks for earnings. But if I'm directional, fine. But I will probably place the trade in the earnings cycle because you're getting paid almost the same.
Jenny, breaking news: the SPUs are rallying. We're only down 15.75.
I see that. I'm watching the platform right now.
You got your eyes on the market.
And I also see, where's Bitcoin today trading? How high is that?
Well, I'm just gonna take a look at IBIT. IBIT is up to 38.
Yeah, I know it's up like $1.15. So So that's pretty good. This is what I'm watching, Liz.
So it is so sad. It is so sad that we're like Bitcoin 67. That's great. It's up a little bit. It's so sad to me because 67 seems so low. I want it back in the 90s, and then I'll be happy. Just 90s.
I mean, when I bought myself my Bitcoin birthday present, I think it was 70.
Yeah.
So it's not. I'm like, how long in this year is that going to be a losing birthday present?
Yeah, I don't know. But you know what though? Speaking of birthdays, thank you very much, Laura. It is Vanetta's birthday on Monday, and she took the day off.
Yeah, good for her. I hope she's having a good time. I hope she's doing something fun.
She gave every one of us the day off for her birthday. So we say thank you, Vanetta.
Thank you very much, Vanetta. Friday the 13th, are you doing anything scary tonight?
I'm going out with my husband's old boss. It's kind of scary. I hope he's not watching. He's a very nice man.
Hey, and I'm going out with the Black Widow.
Ooh, that's dangerous on Friday the 13th.
Friday the 13th, I'm going out with the Black Widow.
That's dangerous.
Yeah.
Okay, Jenny, we've got, how many do we have left? 4 minutes, 2 questions.
Here we go. No, we're down to the last one.
Oh, this is the last one?
Last one. I have a smaller account. Because of that, I can do $1 or $2 wide spreads, or I can do 10 or so. Oh, I can do 1 or 2 wide spreads, or I can do 10 narrow spreads across more underlyings. So if he were in the same underlying, I would say do the couple wider spreads. But if he's saying he could do 10 across more underlyings, I'd rather do be more diversified, have 10 across more underlyings.
I'm glad you caught that because I can't read the things. And when you were reading it, I was like, no, you have to widen it out. And I was just going to show that widening out is in SPY or something like that is better. But you're right, because otherwise you're not diversified. Mm-hmm. So I do like your opinion of saying if you're going to diversify by different underlyings, I think that makes more sense to do narrower ones.
And I was just kind of picturing TP and many of TP's trade ideas that come out, and he does have a lot of narrower spreads, $2 wide, $3 wide, narrower spreads in many different products. And I think he would say the same thing. Maybe not dollar wide, but $2 wide, $3 wide, many different products, and set your GTCs for 50%. And yeah.
Well, and it's kind of like if you do widen it out and put most of your eggs in one basket, you're saying that's the one that's going to win. Do you know what I'm saying?
Right.
It's way easier to say to pepper the infield because the probabilities are in the words of TP, the probabilities are the probabilities are the probabilities. So you need a larger number of occurrences in order for those probabilities to work out. Just because if you put on one wide spread, that one wide spread could be a max loss. That doesn't mean that the probabilities aren't working out. That means that one spread lost.
Now, I will say, though, for smaller accounts, I am a big fan of naked options in very low price products. So if you're a small account and you're looking to, I think there's a difference. I think people see a difference in their performance when they start being able to do naked options. And so smaller account, low price products. And then I wouldn't do naked strangle, but I like naked puts in very low price products for small accounts. That's my preference.
No, I know, but that wasn't their question. So their question is if they need to stick with defined risk, I think it is better to pepper the infield.
But if you think about it, if you do $10 wide spreads, if you're collecting 30 cents, 30 cents, 30 cents, 30 cents, I'd rather do 4 naked puts in products that are under $20.
Yeah, but that's not apples to apples as far as I agree. But you're just using more capital than 10 spreads at 30 cents.
Well, not necessarily. Look at how many times we sell naked put and it's like using $200.
Yeah.
Yeah. I think you just have to me, I prefer naked options.
And I also think you also can pepper the infield with that. You could have some spreads, some naked, some this, some that, because diversification not only comes from product, but also comes by strategy. You can diversify by strategy and product.
That's true.
Yeah. And I don't think.
All right, let's jump in the platform because it's 7:29. Get in that platform. I want.
Oh my gosh! Look at this. So, we're only down 4.
So we're gonna watch the market as
Did it come out?
It's 7:30. It's 7:30. So it should be coming. It should be out. And let's see if we could get a rally and if we can sustain the rally.
So it's currently saving the market. I don't know what numbers are coming out. Now I know we have to take a break to bring in Chris Vecchio. Let's give it a couple of seconds. Spoozer.
Yeah, let's give him. I want to give him a couple minutes to kind of look at everything and see what's going on.
We're going to give him 30 seconds to read that report, digest it, and give us everything.
And then come on the show. But it's fun to be watching the market as the numbers coming out. We saw Spoos go from down 12 to up 10.
I mean, we've seen him as low as down almost 30 today, and now we're at least up. Can the market hold this rally? Let's see what the VIX is doing. Can the market hold this little bit of a rally? VIX 2067.
Jenny, no, is that yesterday's?
No, this is today's. Here's Feb 13. Okay, watch this. So Feb 13, Friday the 13th, you can see the open was 21.48. The high was 21.92. Now you can look at VIX futures though too, but the VIX was there. So here's the VIX futures today. The high of the VIX futures was 20.90. And that is open. The VIX futures are open.
Right.
So for turning green from being as low as we are, the VIX is still up pretty high. I mean, 2035, 2040 is still pretty high.
Well, it's only 731. I think it's like everyone wants to give this a little time to see how things shake out. But I'll take a 100-point rally today if it's in the cards. I hope so.
I'll take one too. If you're handing them out, I'll take a 100-point rally as well.
Yeah.
Because the S&P's as of this morning had given up its all of its gains on the year, and I am now bullish by chance, not by choice. Okay, fair enough. Because I was selling premium, I am now bullish by chance, not by choice.
I sell a lot of short puts, and now I'm just long a lot. I'm long
a lot of stock.
I don't know what to say, but I'm pretty long right now. And again, it's things I've chosen. It's not like I'm not long SPY, long Qs. I'm long products that I've chosen to be long. So
you're the decider. Okay, so let's take a quick break, see if we can bring in Chris Vecchio. We are now red again. Couldn't hold it.
We'll see what happens.
All right, we'll be right back.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. 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 Baby, your love is too good.
Hello, everybody. Welcome back to Tasty Extras, where we are joining my friend and yours, Jenny, Mr. Chris Vecchio. We are so happy to have you here today.
Welcome. Thanks for coming on.
I'm glad to be back. This is it's been an interesting week, more than a vacation.
Oh, everyone
yeah.
missed you. Everyone on the network missed you. I think they may have filled the viewers in that you had a flood in your house.
Oh,
Oh, no,
delightful.
they kept saying power outage. I don't know how the power outage, but yeah.
Well, it was both because a pipe burst, and the way that it burst, I came into my garage on Tuesday night, and it was spraying the electrical equipment in the garage. So we had the delight of replacing the entire circuit breaker panel and everything the past 2 days.
I like your positive spin, saying we were going to have to do it anyway.
We were going to have to do it anyway, so
There you
maybe this is a good thing.
Well,
Question mark?
it's never fun coming home from vacation to a giant mess and no power. So we're sorry about that. But you said you went to Quebec. What was your trip? What was your vacation?
Yeah, Carnival. It's this winter festival that goes on up there. It's been going on since the late 1800s. And so my wife and daughter had never been before. I haven't been in 20 years. And it's drivable from where we live in New York, just a little under 8 hours. So we drove up. We spent a few days up there, ice skating, dog sledding.
Oh, that sounds awesome.
Went to an ice bar, took a shot of maple bourbon out of a shot glass made of ice, which was,
fun.
Always fun to do that in the middle of the city during the day. But it was a good trip. It was just the three of us. We actually my in-laws came and took care of the baby. So my wife, daughter, and I just got to hang out together.
That's awesome. That's very cool.
Really nice.
Yeah. Nice time.
Oh, good. Well, CPI is out. I don't know what the market, what is happening to the market right now. We saw it go from red to green, and now it's sharply unched.
Well, green kind of ish. We're up 1.
So, Chris, what were you watching as the CPI came out? What were you looking for?
Well, I was looking to see what happened with the SR3 M6 ticker on the platform. Those would effectively be the June rate cut odds.
Okay. Should I jump in the platform?
Yeah, I think this is a good time to show it because you do see here SR3 M6 that the
put that in.
Oh, throw me a backslash in front as it's the futures ticker.
SR3
you do see that the market on like a 1 minute or 5 minute chart, when it gets pulled up, it had a ever so brief bounce. But then that's since faded. There was about a 16% jump in rate cut odds this morning for the month of June, and it's now back to like a 4% increase.
Today, I'm gonna go to I'm trying to get to the minutes. Hold on. I'll get it for you. 1 minute.
All right.
There we go.
Oh, there we go.
Right.
There's that bounce.
So there's that bounce right at the CPI release itself. It does come back in a little bit here, and that may be one of the reasons why stocks aren't holding on to those initial gains that we saw come onto the board. The market itself, first off, is convinced that we're not getting any more cuts before Powell's out of office. And given what's going on in Congress right now, the Senate Banking Committee's indicated that they're not going to push through any of Trump's nominations as long as these lawsuits, or at least threats of lawsuits, are lingering against Powell. So it's really June what we're watching, right? Because that's when we could effectively have a new Fed chair once Powell term ends. And that's when a Trump-appointed Fed chair could bring in the rate cuts that the president has been asking for. You can see here today, the market is looking at the data and saying, oh, this is good directionally, but it's not necessarily going to change anything right now in the short run. The reason, listen, Jenny, the economy is really doing good at the macro level. It's doing well at the macro level, even. I would say that if you look at the growth trackers, 2.5% to 4.5% growth with an unemployment rate that's holding below 4.5%, that's a strong economy. That's an economy that we would have died for in the 2010s after the global financial crisis.
Yeah.
Mm-hmm.
And the policymakers would have absolutely tolerated slightly above 2% inflation in those outcomes. It doesn't mean they'd be cutting. It doesn't mean they'd be hiking, but it certainly means they would not be cutting.
Mm-hmm.
So, the market has had problems over the past week or two. I know software continues to have its, difficulties, so to speak. It's had a little bit of a bounce here, I suppose, in recent days, but software and AI weighing down the market, and the prospect of cheap money not necessarily coming isn't great for those tech stocks still. The NASDAQ looks the worst to me. I mean, I really haven't looked at charts in a few days until this morning. The NASDAQ's probably the worst looking chart on the board of the major equity indexes. I'm curious what you all think here, but that's largely informed by the fact that it also carries a 36.5 IVR, way higher than the S&P, the Dow Jones, or the Russell.
That it does. Hold on. I'm going to go. There we go.
Well, there's just like quite a few NASDAQ stocks that have really taken a hit more than like the Dow stocks, or I don't know. What do you think?
The NASDAQ has taken a hit over the Dow stocks. And even as a matter of fact, like you watch.
Wait, let's go to the NASDAQ. Can we go to the NASDAQ?
I'm sorry. I was just looking at it on the side. So I'm just going to go to triple Qs just because it's easiest.
Sure.
But yeah, that seems to be taking the biggest hit. Not like the Dow, unlike the Dow. Wait, Chris, can I ask you a question while I've got you? Because you are our macro guy. What was the CPI print?
It came in just slightly under expectations, 0.2% versus 0.3% expected. The core reading came right in line at 0.3%, if I recall correctly. And yes, I got that correct. And the year-over-years were in line at 2.5% of the core, 2.4 versus 2.5% of the headline. So slightly lower, but it's still above
Where
the Fed's desired target of 2%. And, you know, you could just do a little bit of math here. If you take a 0.2% month over month run rate and you extrapolate that over 12 months, over the course of the year, inflation would still be slightly above 2%. So the Fed's like sweet number is a 0.18% month over month run rate of inflation. Obviously, nothing's ever going to work out perfectly for them. So I'd still like to see it come down a little bit more before they can credibly argue that rate cuts are necessary. And I think for most people out there, they could probably feel why rate cuts are necessary. You know, consumer confidence right now is giving you that K-shaped reading where if you're a high income earner, you're feeling pretty good about things. If you're a low income earner, you're not. And lower rates would certainly help people at the lower income rungs right now, even if it would do things like perhaps inflate the price of financial assets. So rate cuts may be necessary for a larger part of the economy than what the broader macro narrative and numbers are indicating here right now, because it feels pretty hollow when you look at some of the sentiment data.
No, is this what you expected from the CPI print, number one? And do you think that the market reacted as it should have?
Yeah, the stability is good. I think after what it was a pretty rough day, the past few sessions, we actually we haven't exactly been trading higher here, and vol's been expanding. Seeing that CPI directionally is steadying, if not coming in a little bit softer than anticipation, is good enough for the market right now to stop getting panicked about maybe the Fed not being able to cut rates again this cycle. There are a few macro people that I follow who think that the next move the Fed's going to do is hike, which is they're just not going to end up cutting this year because the economy is too strong, right? And that's not a problem for stocks. We see the stock market rally when the economy is so good that the Fed can't cut. But
where Chris, Liz and I are much older than you are, and we lived through decades where rates were high and nobody was, I don't want to say like crying for the Fed to cut rates, but I don't see that they usually need to keep rates high enough so if there's a real problem, they have room to cut them. So if they start cutting them when there's not a real problem, what are they going to do when there's a problem?
QE. We've all seen the money printer memes. They have other tools that they can use to help us. To help the economy. What do I say? Why do I say traders?
That's pretty funny. It's pretty funny. Okay, so now, what the heck? And I know you don't have the answer to this, but I just want to hear Chris Vecchio's rationale behind this. What the heck happened the last 2 days
in the market?
Chris.
Oh, because actually plenty's happened the last 2 days.
What the heck happened in the market the last 2 days? What the heck?
You would take I just looking around for a quick second. The earnings haven't been terrible. They also haven't been great. The news flow about OpenAI, about Anthropic, and some of these valuations, maybe that's drawing some concern.
You think that's why we'll open up and then fall?
Well, maybe. I'm not sure in the Tom camp about that, but I don't know if you guys saw, there was a story yesterday about this company that works in AI logistics. I suppose that's what it's called. I just got to pull this up real quick on my screen here because it was just such a ridiculous headline.
We love ridiculous headlines.
Yeah, apparently a company had come out and said that it was working in the AI logistics space, and I think maybe it makes puzzles or
puzzles.
Just I have to check this out okay, here we go. Earlier on Thursday, AI company Algorithm Holdings said its semi-cab platform and live customer deployments was helping its customers' internal operations to scale freight volumes by 300 to 400% without a corresponding increase in operational headcount. Shares of the company soared 26%. Old Dominion, XPO, right? The logistics and transportation sector, which has really been holding up the market. If you're like a Dow Transports theorist, DJT, the OG DJT, had been breaking out to new highs over the past few weeks. This company apparently has nothing to do with is happening. This company, Algorithm Holdings, is a Florida-based penny stock company that sells karaoke machines.
Oh my God, I did see this headline. The karaoke machine headline.
Yeah, and it's kind of reminiscent of what was happening during the Bitcoin blockchain craze in the late 2010s. I like to go back to the Long Island Blockchain Company, which was a beverage distributor that rebranded itself, and its stock price went up triple digits over the span of a few days. Of course, It was nonsense. But when you have these companies that are able to just rebrand and make claims that they're doing things, and it's like, oh my gosh, no one's even bothering to look at the primary line of business. It's clearly a market that's like on tenterhooks and is very skittish right now. So what triggered it this week? You know, VIX didn't really go up for any reason from my read of things. I've only been following tangentially, but isn't that the more concerning problem when you get this like tangle of reasons for why volatility may be coming up, and it's not just one short-lived thing that causes a spike that you can fade, but it feels a little bit more complex. This one feels a little bit different than other volatility rises, just from being more of a sideline participant over the past 5 trading sessions.
I would say you, Jenny, but I agree. This does feel different.
You know, but if you look at the NASDAQ and you look at the SPY, their charts look similar, and they've just been choppy for months. They've been in that range, right? We've been in this range for months. If the market stays like this, if we continue to just chop in this range, that's actually a really good market for option traders.
Especially with the inflated volatility. That is true.
Right. We get the inflated vol, but we never go too far out of this range. If you look at the triple Qs, we've been in this range since what? The fall?
September, October for both of them.
Right.
Mm-hmm.
No, so what's it going to take to break out of this range one way or the other?
No, but I do agree with Chris. This feels different. Well,
that's why I was, gonna say, like, why isn't this working and why does it feel different? 2 weeks ago, I raised the point that maybe what it's going to take for stocks to rally is for the metals fever to break. At a certain point, if gold and silver reach a certain point where traders say, the risk-adjusted returns on these rocks is not as good as buying the stock market, which in fairness, those shiny rocks have outperformed the S&P 500 since the turn of the millennium. So maybe we shouldn't just call them shiny rocks anymore. I digress. The point that I'm getting at, though, is maybe we would reach that point, and then we did see metals break down. Mm-hmm. And while stocks like S&P made another attempt at 7K, and it's failed there. And so if that thesis were correct, one of two things should have happened. Well, stocks didn't break higher, so metals should have rebounded back. Or if metals are staying down, stocks should be up, and neither of those two things have occurred. So it seems like that's a little bit more capital flight than capital reallocation that's been transpiring. And then with this kind of slow, steady rise in the VIX without any meaningful catalyst, no big earnings report or piece of macro data, are really bent out of shape that the economy is still adding jobs after a year where the revision showed that we actually added 1 million fewer jobs than we initially estimated in 2025. I don't know. It feels weird.
Maybe this, level of VIX, this increased VIX with no real reason, is a tell that we've got a bigger chance of the market falling than going up, because the VIX is usually right.
The VIX,
we are here at that time of the year. There is a seasonal window, and at the start of the month, I pointed this out, and we kind of blew the first half of the month. But if there is a window with which the S&P and the NASDAQ have a chance to rise in February, it's usually through Valentine's Day. And for better or worse, that being tomorrow, the market's closed. Today is that halfway point of February. We didn't really get that rally. The second half of February onwards, if you look at the S&P and the NASDAQ past 10, 20 years, S&P going back to 1950 even, it's that second half of February into those first 10 days of March that are usually rough. And then you get this window from mid-March through effectively the summer where the market picks itself up and then rallies into the summer months. But this is now like that 3 or 4 week window where stocks tend to suffer and volatility has one of its 2 big spikes during the year, if you look at the seasonals, and the other one, of course, coming in the fall. So having not capitalized on positive tailwinds, okay, that's not great. And we could add in some other like fun facts. Okay, we didn't really have the Santa Claus rally this year, and years in which we don't have a Santa Claus rally, the rest of the year produces very meager returns. It's also year 2 of a president's term, and midterms, the first go around, have not been great for stock markets. It does run a little bit counter to year 6 of a president's term, which you kind of could maybe chalk up to Trump right now, which would be very good. But you could put together a narrative right now when I'm looking at like the data that I look at and say the table isn't set comfortably for bulls here, and fading the VIX at 20 or 21 for no clear catalyst for why it's risen. Maybe be a little bit more patient.
I like like your fun facts, Chris. I like your fun facts. Those are
I love having Chris on. It's been our pleasure, Chris. I don't want you to be late for school drop off.
Okay, I got one more question for you though, Chris, because I think I've heard
7:55.
Liz, I know.
I have time. I have 5
Bullish or
minutes.
bearish metals?
I feel like I have a personality disorder when it comes to metals because I've been so heavily invested and long in them, and I've been joking like I renamed my son Luke Silver. So I'm still very constructive on the space because despite the egregious and meteoric run up at the start of this year, the reasons why I've been long to me have not changed, and it's because of what's going on in the global economy with respect to the U.S. and these trade deals, and how central banks abroad are just continuing to buy gold left and right. So there is a floor underneath these markets, as far as I'm concerned. Volatility hasn't come out of them. A period of stability here, given the meteoric rise, it wouldn't be the end of the world. And I'm just sitting pretty. I started the year when gold was at like 4,400 an ounce. I picked up some 5,000, 5,100 call spreads.
I heard that. Yeah.
70 odd days to expiration. So I'm just going to sit on my hands.
She knew you were long. She is too. She just wanted to have someone to be on her side.
I love my shiny rocks. I'll just put it
someone on her side.
Listen, and you just got to talk to Frank if you're ever feeling lonely about this stuff, okay?
Oh, speaking of.
Happy birthday, Frank. All right, Chris, we're going to take a break and let Chris go. We'll be right back. Everybody stay tuned. Thanks for coming on.
And happy birthday, Frank. All right, thanks, Chris.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with forex on Tasty Trade. Get in on 80 plus forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good.
We've got another one of our good friends in the house, Jenny Andrews. Give a warm welcome, slow clap to Jamal Chandler.
Jamal, welcome.
Ladies, how you doing? Thank you. What's going on? What's shaking?
Everyone got the red memo today. Everybody.
Yeah. You have the M. What is that? Is that Maryland?
Wait. He'll appreciate this because he's basketball. Jamal's my basketball guy.
For sure.
Jamal, Miami, Ohio, 24-0, only D1 basketball.
Oh, that is Miami, Ohio.
Tonight on ESPN. I know you're a basketball guy. Tune in tonight, ESPN, 8 p.m. Central Time, 9 p.m. Eastern Time. The games are bonkers to watch because the school is going nuts because this is the first time in a long time that the team is on fire.
Who do they play tonight?
Akron, Ohio.
Okay. All right. Yeah, no, that's right. They're the only remaining undefeated team, actually. Arizona lost. God, was that earlier this week or late last week? I already forgot. I think it was earlier this week. So yeah, you guys are the only remaining undefeated team. The
only undefeated D1 team in college basketball. So we'll see if we can keep it going. Can we get 25-0 tonight?
I think you can.
Look at you, got you watching games now. Look at that. Look at that.
My husband's already in the car on the way. I was gonna go, but then between the morning show and the Michigan, we're speaking to you, today. Between all of our stuff going on, he's like, "I'm not waiting for you. I'm going early."
Yeah, so, you're busy.
He's already on his way. It's the games are crazy. You can't even get your hands on tickets.
Oh, I'm sure. Yeah, it's how it goes, right? When something's fun, everybody wants to be there. Everybody wants to be a part. It's awesome. It's really sweet.
Yeah, we're excited. We're also excited for This Week in Stocks, Jamal.
Yeah, it's been an interesting week. Can I show you guys a couple of things here? Some things I've been looking at. All right. Look, this is the ES. Okay, we're down on the week so far. Even though we just had CPI, we bounced up a little bit. But NASDAQ, 2 weeks in a row, a little bit of trouble here in fantasy land, right? And the main reason why is all of these software stocks. You guys trading any software stocks?
I just put on a new Microsoft position. I get in and out of Microsoft. Liz, I think you do as well, in and out of Microsoft. It's been tough. It's been real tough.
It's been real tough with the whole space, right? There's been all these fears. AI is going to replace everything, right? IGV is a software ETF. I mean, that's looking real ugly right about now. Yeah. Again, this is just the 1 year, but this thing is looking really ugly more recently because all these names have been getting smoked. Intuit is another good example of a name. CRM. I just got long CRM maybe about a week ago. CRM and Snow are two of the names that I've gotten long. Now it's
hard not to dabble at these levels because these were so high for so long. When they get that little bit of a pullback, it's very hard not to dip a toe in the water.
Agree, Liz, and I'm trying to be sort of very, very specific about the ones I choose. Like Now is a good example of a name that's down, but it's down, but. Look at these markets. 410 and 470, they're kind of criminal, right? ServiceNow is actually a little better. Another question, why is NOW now and SNOW is not SNOW? I don't understand this. It doesn't make any sense.
Jamal, Liz and I have been talking about
this. That one in your back pocket. Do you have that written down somewhere?
I've actually been thinking about this a lot. As a matter of fact, me and the wife the other night started watching Gallagher. You remember Gallagher, that comedian?
Yes.
He used to do stuff like that. I forgot. She reminded me.
Gallagher with the watermelon?
Yes, Gallagher with the watermelon. Yeah.
I can't remember what city we were in, but we had one of our road shows. There was a giant gong. Do you remember that, Liz?
Oh God, yeah.
And so we got to hit the gong on the road shows. So that was kind of fun. I think Gallagher had one of those.
I'm sure he did. Yeah, he did actually.
Also look at, because TP sent this. He said, take a look at CHRW, down big on AI disruption.
So that Jenny, you are ahead of me. It's like you're in my head, okay? Because that's exactly where I was going next. So this week was these names were attacked yesterday. CHRW transportation name was hit. The IYT transportation index also kind of hit. So these are the names that I shouldn't say that. IYT maybe is something interesting to trade, but even that doesn't have great options. CHRW, these options kind of trade by appointment. I wanted to sell a put in here yesterday, but you don't stand a chance. So that one got beat up.
Trade by appointment in 10 years.
I love that trade by appointment.
I mean, they do, right? And we all know what that means. These options are so wide. You could put mid market out, and you might not get filled.
But okay, so I have noticed it's only 8:07 now. 8:30 markets are still wide. If you wait until like 9:30, some of these wider markets start tightening up.
Not in this name. Not in this name. Trust me, I looked yesterday, and you would think like at a time where this is down so big, there's people actually trading. No, not in this one yesterday. What you see right now, even as it's closed, is going to be similar to what it is during the open. CBRE, very similar too. Commercial real estate got smoked. Again, another big name, another name that would be awesome to sell a put in, but it's just not available. However, it's just interesting to see the story, right? Like commercial real estate, all of a sudden, there's some worries about AI taking over that space and putting people out of jobs. Same thing with CHRW, transportation. I got to say, though, the biggest things on the week, and we know that gold and silver rolled over big time yesterday, right? Believe it or not, gold is still up on the week. And again, these are weekly charts, and so is silver, at least as of now. But the biggest thing to me, bonds. Look at that. ZB yesterday, big move, or I should say on the week, big move up to 117. I mean, the last time we were here was beginning of December. So I would say that was probably the scariest thing about this week is that not only did we turn down, we've seen markets where ES is down, NASDAQ's down, the rest of them, gold and silver even roll over, volatility pops up, but bonds being up, I think is kind of, I don't know, it's potentially a little scary.
OTP sent that breaking news into us that the 10-year treasury yield lowest has been in 2 months.
Yeah, it's like 4.1 now, right? It's actually under 4.1. This is it right here. Under 4.1, big move on the week. That's I mean,
to me, bar of the week. Yeah.
To me, that's kind of saying that the market wants a rate cut, essentially. And we could possibly continue to see a little more volatility until we get a little clarity around that. Which, again, we're not expected to get a rate cut maybe until June, until we get a new Fed chair. And I'm sorry, I don't mean to talk too much Fed and CPI stuff. I know you guys were just on with Chris. I'll give you a little break here. But but it's true. That's kind of what's going on right now. We're seeing this. You see this big move on the week in a 10-year yield. That means the market is discounting something.
Yeah, and we were talking a little bit about this with Chris. This move feels weird. It just feels weird all around.
The market moved this week. The market moved this week, I think.
Yeah.
You know what else is a trip? VIX futures over here in the left here. You can see it's 28.85 bid. Even though we're basically in backwardation essentially, right? But I tell you, it's kind of weird to me that the H contract is still below the April contract, which almost says like even though we're down, we're not in panic territory quite yet, if that makes any sense. I mean, it's a little bit strange. Again, there's a little bit of dip here between the G and the J. So this is still below April. It's not full on backwardation just yet, but it still is backwardation considering that the G is trading in front. So
right. Well, because 2020 is still high, so I think whenever the VIX is in the 20 handle, it's still high where the back months are not, they think it's going to come down a little bit.
Yeah, no, it's true. And then, of course, I mean, honestly, the same things have been. The other thing about this is that the dollar index is actually down on the week. If I would have told you that we had a week where markets were down on the week, I just showed you ES and NASDAQ down on the week, where we're basically in backwardation and bonds are up the way that they are, and Bitcoin is rolled over and so is gold and silver, you would have probably thought, okay, the US dollar is probably up too. Nope, that is down. So that's what makes this week weird. All those things that I just said, right? Markets, equities are down. The volatility's up some. Even we're essentially even in backwardation. The bonds are up. Bitcoin's down, and gold and silver rolled over yesterday, and yet the dollar hasn't really moved. That's what makes this a really strange week.
Everything about this feels a little bit weird. I mean, and I'm not putting a parallel on this, but do you remember last year? Now, granted, last year Bitcoin was higher, all this stuff, where we got the move down a little bit, so there was implied volatility everywhere. So a lot of traders then decided to sell premium, and then they dropped the hammer. And then because it's kind of like we talked about, a dip a toe in the water. It's easy to sell a put in Microsoft or your CRMs, or your Snows, or your knows. And then all of a sudden we got hit with a bigger down move. And so now it's like, oh, it hurts. But then you've got that. If the shoe falls again is when it hurts worse.
I know. And
you're absolutely right about that.
that was that was painful. Last April, that was painful because that was after we already had started falling.
And you get the boosted implied volatility because, to your point, Jamal, the VIX is still in backwardation, so we're kind of like, it's okay to sell premium, right? Where you still feel a little bit okay being like, oh, maybe we should look at this as an opportunity, and that's where it gets a little bit on the dangerous side.
Yeah, it's true. And again, I mean, the only one thing I could say, like in my defense with these, again, I talked about how I got long CRM, I got long snow. I did sell upside in this. I sold a call spread, risk defined, in an app yesterday. This is one of the software names that's gotten hit, but it also had earnings too.
After earnings, you sold
after earnings.
Those
yeah, I did. Because it was such a huge move, even after earnings, right?
Yeah.
So I think that's kind of the opportunities. I think maybe to look for today, especially if we get a little bounce, maybe a little bit of those, maybe some selling, some upside call spreads. Because again, volatility is a little bit on the upside too, and especially in some of these names. If there is a hammer that continues to drop, that probably helps a little bit. But yeah, it's kind of weird, and we don't know what to make of it yet. Because you're right, that's exactly how last year went.
Yeah.
The only difference, I guess, is the looming thing last year. And again, it's fun to make these parallels. They're not the same things, right? But it's fun to make parallels.
Past performance is not indicative of future results, but we've all traded.
There it is.
Yeah.
We might even have it at the bottom of the screen. I'm not even sure. But it's last year the whole thing was the tariffs, right? And it was just like that story was hanging around. And in some ways, even though I think it's silly, this AI story has been hanging around. It's like AI is eating the lunch of these different sectors, whether it's commercial real estate or whether it's transportation or whether it's software. And it's dabbled into a bunch of other industries throughout this week. Some of them we just don't really pay much attention to, honestly. Or is this just the regular rotation? I mean, look at XLP, right? Walmart, Costco, the like.
Mm-hmm.
I think they're in there at least. Well, let me start with there because their charts really look good over the last.
Costco's up. It can't stop.
Yeah, Costco's been up. Matter of fact, it's poised for its first close over 1,000 since I think June. It has been a while, and these names have really looked good. So XLP has been strong. I mean, this is like what, I don't know, 7 weeks in a row. This thing has been up. Consumer staples. So is it more of just like there's a rotation into this this is where the money's going, basically, out of the software and the tech into stuff like this, for good reason. I mean, people, and also, lest I forget, utilities have also been strong. Who wants to trade these though? I mean, but it is what it is. This is the area where money's going right now. If you've been wondering, it's out of Bitcoin, it's out of software, it's out of tech a little bit, and into stuff like this.
It's into consumer staples. Yeah, take a look at the Clorox or all those old. If you look at that chart, it had this week. Do you see the move that it's just had in the?
Yeah,
it's been just going
Clorox,
straight up.
Coke.
This year. Yeah,
it's like we're in the 80s.
Pepsi.
Right?
I know, right?
The names you remember from did you see Caterpillar? Like it's the names you remember that were in the portfolio.
Holy cow.
Yeah.
Is Deere doing the same thing? Yes, it is.
A little bit.
It's up. Every now and again, we get reminded of this, right? That these other sectors of the market exist. And I think it's good because think about like just 2 years ago, talk about parallels, how much we were talking about, there's so much concentration in these tech names and it's going to end badly. It's going to be, well, maybe this is the ending badly that we've been talking about for some time.
Just rotating back into the old standards.
So do you think, I mean, I don't expect you to have the answer to this, Jamal, but I asked Vecchio this too. Well, I didn't, but I think in my head I was going to. Bitcoin, I can't remember if you are, or cryptos in general, I'm not just going to pigeonhole Bitcoin. Are you, I feel like you were not a Bitcoin believer, right? Do I remember correctly?
No, that's not necessarily accurate. I find it is an interesting, I think, I started this idea like probably just before I came to Tasty 2019. This idea of like, there's nothing wrong with sprinkling money, especially long term, into things like this and Ether. As long as it's not money that you really need for something major, there's nothing wrong with sprinkling money into things like this. So I don't have a problem with cryptos at all. As a matter of fact, in a personal account, I've gone out and sprinkled some in some of those little smaller coins, the Solanas, the Cardanos of the world. I mean, these are the times where you just sprinkle some money into it if you can, because look, these prices don't come around too often. You just don't know where this is going to go. And maybe it does go lower. That's why you do, small amounts and not a whole bunch. So it's going through a tough time. I mean, essentially, we're getting to a point where we talk about crypto winter, which was something I remember really prevalent in 2018 when crypto again got dropped by like 50%. I guess, from highs, it's there. Again, we're not at all-time lows or anything, nowhere near still, but it's just having a tough time.
Yeah. So go ahead. I'm sorry, Jenny.
Oh, no. If you have a crypto question, go ahead, Liz.
No, go ahead.
I was going to change the subject when we're finished talking about crypto. Before Jamal leaves, I want to know what he thinks of DraftKings, because DraftKings had earnings and they got hammered again. It's ugly.
Yeah, I don't really trade this thing. I don't know all of the problems, but when I see this stock chart, that tells me there's a lot. They're not monetizing everything, is what it seems to me, right? I don't know. I don't know anything about it. I actually don't pay much attention to their internals and all that stuff. But you see the stock chart. I mean, it seems like they're just not making all the money hand over fist from the gaming that we thought they were. I mean, I don't know. What do you think?
Well, I thought you
trade a lot.
I think of you as our sports guy, Jamal, and I know your son's involved in sports. You've got all your kids involved in sports. I thought you might have some inside information.
You want to know where you place your bets, so you don't.
I don't gamble as much as I used to, if that tells you anything. But it's mostly out of sort of spite. I don't feel like it's 50-cent tax annoyed me statewide, and I'm just like, I don't really care as much anymore. And I feel like the markets are different. We talk about markets all the time, and people love to compare this to the stock market, and I feel like things have changed so much after widespread adoption. Now that these apps have become a lot more prevalent, it was so much better to play on these. And honestly, I used to do more on what's the other one? The blue one. I see it now. Not DraftKings, but
wasn't there a Penn Gaming?
No, the main two. There's DraftKings and Flutter is the parent company of the other one. I can't think of it right now.
Is there something called Fliff?
I don't know, but you know the other one I'm talking about, FanDuel.
Yeah.
Yes,
thanks,
FanDuel.
FanDuel is Flip all the time.
I used to use this one quite a bit, but look, it's happening to both of them. The charts look exactly the same. I don't know what's going on in these. Like, is there legislation? What's the problem?
I think the poly markets are gonna, the betting markets.
I guess that's part of it.
I think that's why they're taking the hit. That's the only thing I can come up with, but I have no idea.
Like everyone I know is on DraftKings for their fantasy leagues. I just don't know why they can't somehow monetize the number of people on their site.
Yeah, I don't know. Good question. Not really sure. I haven't paid much attention to these, but yeah, I guess now that you mention it, prediction markets are probably messing with these a little bit and eating their lunch some. And I mean, it's just cleaner, I guess. It's just binary. That's what people want more than anything, versus these murky outcomes, if you will. Although that said, as we're winding up here, I did see something recently where the CEO of DraftKings, they were asking him about the idea of insider trading, the way people can do things. There's really not the questions that they ask on some of those. No, it wasn't DraftKings. Sorry. I mean, one of the prediction markets, Kalshi, I think. It's kind of murky. Some of the questions that they ask, it's hard to really come to a conclusion of a real outcome. I feel sometimes the questions are a little bit murky. You know what I mean?
Yeah, I heard people talking about that after the Super Bowl with a lot of.
Will we land on the moon someday? And then there's like a state called Moon, and it's like, oh well, that was what we meant. Well, really, we didn't know. It could have been the real moon. I don't know. I'm just making stuff up.
No, I heard there was a lot of talk about that after the Super Bowl bets.
It's true.
But who was it who had like most Super Bowl bets go through one of those other sites, like not through DraftKings, was one of those prediction market sites.
It was?
I think so.
Really?
I think I thought I heard Tony and Nick talking about it.
Yeah,
I haven't traded.
I don't even have DraftKings account. This is out of my pay grade.
Where they weren't just betting on the sports; they were betting on the halftime show and who would be the special guest and who would there was all these other bets, not just on the game.
Gatorade color and all that stuff. I mean, they do that on the DraftKings and the FanDuel.
Yeah, you can do that on DraftKings.
Well, Liz and I are both in DraftKings. We've got DraftKings in our show account, and it's been it's not looking good.
Right.
It's back to the old days. Remember, Liz, when DraftKings was like 17? I hope we don't see the teens again.
Oh, for 21. Hold.
It's still an adult. If it goes below being adult, you guys might have to get out. I don't know.
All right, Jamal. Now, last question. What are you doing for Valentine's Day?
We're just hanging out. We're not doing dinner. We don't do that rigmarole anymore. I mean, it's such a pain in the ass to get like a reservation. So nothing crazy. Just
I read a headline that couples that do not celebrate Valentine's Day are stronger couples. So I just want to put that out.
like that.
I
These
do
are
like
all
that.
Hallmark holidays anyway, right?
Yeah, I do like that. My husband is on his way to Miami for the game, so tomorrow he'll be in Miami. He'll drive home, but we're not going out. We don't like to fight the crowds.
Oh, I was about to ask. So you guys don't have big expectations? What's the deal? I mean, what do you need at a minimum for Valentine's Day? Come on.
I need nothing.
Everybody wants to know this, by the way, in the chat. What do you need?
No, I need
for a
nothing.
minimum
I've been married for almost 25 years. I need nothing, but I do have a hot date tomorrow. He told me he's taking me out, so I said, "Great, put on a dress.
Oh, okay.
I'll see you later."
Okay.
I tell my husband, don't buy me anything, because when I want something, I just get it for myself.
You can't buy a gift for Valentine's Day. Your birthday is what you're talking about.
No, like if I want something, I'll just get it. So I tell him, don't buy me anything, because I've been married for 24 years. He's never been a good gift selector. Like he's not good at picking things.
He's kidding. I hope you're watching in the car, Keith.
He's not watching.
See, you heard it, chat. Don't get anything, okay? Don't get anything.
All right. Well, thank you very much, Jamal. Enjoy your weekend. We have to take a quick break before we come in for opening bell. Thank you very much.
Tasty Trade has crypto, and you can trade with 0 commissions.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
Hold on.
She's wrong. I'm right.
High school party. High school kind of.
Yeah, because it wasn't in school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back, Jenny, and we made it for opening bell. How much time do we have left?
It's 8:27, so we have a little bit of time. Let's pop in the platform, though. We could watch what's going on. Spoos are down 2. We'll see what is going to happen today. And VIX, let's see what VIX is doing.
But since the CPI report, we've kind of been right here. It hasn't gone very far. I'm going to go to VIX futures just in case, because I know we usually look at the VIX, but the VIX futures are open and running. I don't know if the VIX is. Here we've got today. It's very small today.
No, and it is. And if VIX was moving, it was
moving too, but it's still a pretty small range today. But we were talking about with Jamal, it's still pretty high.
Oh, 21. It's almost 21. So it is. It's. I don't know what to say. Is it going to be another down day today?
Well, and that's why I'm just remember the last year. It's totally coming. We were lulled into saying this is an opportunity where then you added a little bit more premium, and that was part of the problem. And that's what happened to me yesterday. I looked at yesterday as I was like, I'm looking at this like an opportunity.
I know, but
sometimes that's bad.
Jamal brought up a good point. Like, it was the tariffs last year that really hit the market. We don't have that looming, like,
we have a looming lawsuit, whether they're illegal or not.
So we'll see. Okay, we have got 2 minutes. We can take a look at where all the earnings trades and what they're doing pre-market.
Jenny, I want to show you this because this is something that is open during pre-market. So this is our ES trade that we did with Punished Pixels yesterday. It is a bullish trade. I mean, this is not something we're going to take off. We're looking for a couple $100 here. If we get a little bit of an up move, we should probably put an order in to close.
Maybe put an order in. If we paid 13 for it, let's put an order in to close it at. If 15 would be $100.
Let's go. Can I say 17? $200.
That's aggressive, but we're not gonna. I don't think we're gonna see
split the difference. I'm gonna go 16 because 15 is 100. This is $150.
Okay, 150. I think that's fair.
I think so too. And it's just a day order, so we'll take a look at that. If we get $150, that's great, and we'll say thank you for Pixels. So that order is in.
All right. Do you want to, while we wait to start?
Were you shocked that Jamal was selling calls in AppLovin? Here.
Call spreads.
Okay, call spreads. But still, I was like, after the move, he was selling them here.
Maybe he's onto something.
No, but that's just it. To each his own. Call spreads and far out puts, it doesn't matter. One is bullish, they're neutral to bullish, neutral to bearish. Both people can win.
I mean, AppLovin down the last couple of days. Today, it's looking like it's unchanged.
Yeah.
Take a look at Microsoft. What was that doing today? Jamal brought up Microsoft. That's up. That's up $3.
But Microsoft was up yesterday. Oh, there we go. The opening bell, Jenny Andrews. I love to hear it live with you.
All right, and Spoos opened sharply unched. So we'll see.
Okay, so let's go. You guide me because you have a list of things you want to go through.
Yeah, I want to look at everything that had earnings. So I'm going to start at the list that I have and just go tap down. Coin was the first one on the list. We saw it before pre-market up about 8. Is it still up? Yeah, up 850, 6%. So let's hope that coin could just keep on moving. Next, pins.
You didn't go to AMAT?
Oh, it's on the list. I've got a list. It's just not in alphabetical order.
Okay, there you go.
All right, pins down 4.
Down 20%. That's a big move for pins.
Yes.
Do you want to jump into pins after?
I was going to say, let's jump into pins. Go to March, trade page, March.
There's nothing.
Whoa.
Yeah, not a fan of pins, so we're not like that's not a knife I want to jump in front of.
You're not kidding when you said there's nothing. Wait, go back to the trade page, and I want to look at that again. 28 cents. There's no way. It's not open yet.
It's not updating, yeah, because 28 cents, and then if you look at the corresponding calls, that's how you know it's not open yet.
Okay, so hold on, just stay there for a minute on pins. So the fact that those are yesterday's prices. So the 14 put, you can see the 14 put was 28 cents yesterday when pins was $4 higher. There we go.
19 is where you they're just open. I was going to say where the calls and puts are the same price. It's still, but look at how wide this is, 71 cents at 124.
And you'll see that with some of these individual products right on the open. I would say we let it shake out and we can come back to pins because I think we could get in with some short puts, but we'll come back to it.
Okay.
ANET. A-N-E-T.
That's up 6%.
Up 6%. Rivian, We can just go to our Rivian position. We had those 17 puts in Rivian. They're going to be out of the money.
Oh, look at that.
Rivian.
I'm going to buy these back. Close position. Thank you very much, Rivian. We had the 17 big lizard on, so that's good. Do we want to get back into Rivian at some point here?
Sell those 16 puts for 85 cents or 88 cents.
Okay, we're done. Okay. Rivian, done and dusted.
All right, Toast, T-O-S-T.
T-O-S-T, up a little bit.
Up a little. So Toast, and that's like a competitor of Square. Take a look at XYZ.
That was down a ton. That was down a ton yesterday.
Yeah.
Yeah, yesterday.
And are we in it? Do we have puts in XYZ?
I don't believe so. No, we're safe.
And so take a look in the trade page. I wouldn't mind getting into XYZ puts after the big move down.
So it's got two days in a row, which actually is good because actually 1, 2, 3. So you've got 3 days in a row in XYZ going to the downside. Oh, they didn't have earnings. I thought they did. Would you want to wait until earnings to trade it?
I know we looked at this the other day. If we were selling a strangle, yes. If we're just selling puts, I don't think it matters.
I mean, the markets are a little bit wide. It's also got a decent. Let's just hold off until earnings because I want this. I want to come in with tighter markets.
Oh no, but you know what? It was on. Oh, okay, yeah. So Toast was the one with earnings. XYZ says it's not till February 26th.
Yeah.
All right. DraftKings. We're down.
I know this isn't on your list. This was a couple days ago. We wound up buying a call. I'm closing this. We're going to take our $50 and run like a thief in the night.
Hey, that was the Pacific.
Yeah. Pacific Gas and something.
Yeah.
And so we're going 79. Let's see if we can get filled. We might have to take that down a bit, but it's still a profit. So I'm going to take it to.
Those is just closing positions we have.
Okay, good. We got filled at 70 cents. That's pretty good.
That was an earnings trade from a couple days ago.
Okay, now let's take a look at DraftKings. DKNG,
we had a call spread. It's going to be all out of the money. And we have one March call that's synthetic stock. Now it's almost at the money.
But honestly, what are we doing? Nothing.
Yeah, right. I mean, there's nothing to do. Our call spread's out of the money. That March 20 call, I don't think we need to do anything with it. So we don't need to manage it. Down 380, down 15%. That's a big move.
It's a huge move. Take a look at this. And it was interesting looking at Jamal's charts because I was like, what are you looking at? Because it was
I know. His charts were on they weren't day to day. They weren't day to day. It was almost like week to week. Or it was a different type of chart than we usually have pulled up.
Let's take a look. I want to see when the last time it was.
While you're doing this, I'm going to get everything pushed out on the follow page.
Last time DraftKings was at 21, and it was right here. So we're looking at, what year is this? 2023.
Okay.
2023, and it's 2026. So 3 years ago, it was at 21.
DraftKings.
Killing me. Honestly, so while you're doing that, I'm going to price out the Kai's Studies SPX trade.
Oh, wait, we still have more earnings that came out that I just thought let's check on and see what everything did on earnings.
Okay.
So after DraftKings AMAT.
Oh, we already did AMAT, remember?
We looked at that earlier.
Yeah.
That was up $30.
14%, which is pretty good.
EXPE, Experian.
Expedia, isn't it?
Oh, I don't know.
Expedia is down 7. So you notice we're getting big moves in both directions.
Down 7%. Brothers, I think it's
BROS.
Is that Dutch Brothers?
Dutch Brothers. And that's up 7%. So not bad. I mean, it's been a tale of two cities. Can't wait to see what Kai's
Moderna. We've got 3 more. Moderna. That's up.
Okay.
And CCJ.
Ooh. This was Victor Jones special, remember?
Yeah.
But that's high.
I know.
Yeah, CCJ is high from where Victor Jones, where it was his.
And AAP.
That's not AppLovin. It's Advanced Auto Parts. And that is up. So it's been pretty much, what's crazy is I don't think it's been good for premium sellers, meaning that a lot of these have been either up or down more than their expected move. Not AAP, but that's a fringe player.
No, but there have been a lot of big movers.
A lot of big movers. Yes. I think a lot of them have gone way outside their expected move for the cycle. Okay, so while you're pushing things out, Jenny, I want to price out the, now we have done, there's many ways to trade 0DTE SPX, but Kai's studies are always done on the open with the 0DTEs, 20 deltas, $20 wide. I just want to price, we want to price it out.
So we're trading 68.30. You're getting to the 67.65. So you're pretty far down. And then to the upside, 20 delta. To the upside, it always seems to be in a little bit closer.
You're getting $6. Now, this is very Jack Tucker-esque. I think he does it a little bit later. But so the later you are, the closer you'll be in. But sometimes the market is shaken out a bit.
I looked at this, the 20 delta wide, $20 wide, 20 delta iron condor yesterday. I looked at it a little after 9 yesterday, and I was only getting like $4.95, and I didn't do it. I thought, oh, that's not enough. So here you're getting $6.15. It's going to get less and less expensive as the morning goes on. But if the market's moving, obviously your strikes are going to be different. So,
no, here's my question, Jenny, because I usually don't do the iron condor, and I definitely don't do the $20 wide. I know Jack Tucker, I want to be him when I grow up, but I don't price these things out that much. So you were saying that the 20 delta, $20 wide was only $4, but were your strikes insignificantly?
Yeah, yesterday the strikes were tighter. The width, the width between your short put and short call was narrower, and I was only getting 4.85. This was at a little after 9 yesterday.
68.80. I'm writing down just our shorts because we know it's $20 wide. 68.85 and 67.65.
But vol is higher. Look, the vol is higher. I think we've got a little bit of vol in this market because everyone's waiting to see how this market is really going to shake out today.
Yeah.
Are we going to get a repeat of what we've seen this week? And, down day, down day, down day, down day. We're going to have another 100-point down day by the end of the day. So if you have 100-point, how much room do we have? We have 35, 45, 55, 60 points in room. We have 60 points in room. So we could be down 70 points before we hit that short put.
And it's pretty interesting because it almost gives you, now granted, I know it's 20, but look at the brown bar and look at where our short strikes are. So we've got 60 points in width, and the expected move for today is 54.26. It's pretty interesting how it kind of sets up like that.
Right. So I don't think this looks bad. We could be down 70 and just be at our put. And you see that they'll do some management. Jack will do some management, like rolling down calls.
Jack doesn't do it at 8:30. He's a 9:05.
No, he waits. Yeah.
Yes, but Kai's studies are all done at this time. So we have the prices marked. I have that. We're going to take a look at that in a little bit and kind of keep going. But we are going to place what we do is we place our SPX trades around 9:05 because Jacob's studies have kind of leaned us in that direction. And we
wait until
today.
To wait until the market shakes out and wait till things settle down. But honestly, the last few days, 9:05, the move started after that.
It did, but look at this. So we opened unchanged. We are now down 25.
25.
So what we have seen the last 2 days, which I thought was kind of crazy, is we'll put it in, and then, I mean, literally, when we walked from the train to the SIBO, we dropped 70 points.
I know.
In a walk. From in a short walk, we dropped. And the traders on the trading floor had no idea why. Now, the good news is we are getting a little bit of a lift in IBIT. I wanted to talk to you. We don't have to do this today. This can be another story for another day. We have this iron condor in here. I do want to put a GTC in for it.
It's just a jade lizard. Yeah, it's a jade lizard.
Yeah, I'm going to go, I'll go like 35% just because that's usually what we take out of it.
It's not far. You see, we sold it for $1 trading 70 cents. So it's a $30 winner.
Oh, then I was close. Yeah.
Yeah.
I'll put that in and let it come to us. But the one thing I was going to say, and we can do this another day, I do not want to spend the time on this right now. This IBIT 100 shares is holding up. Hold on. If I close it, you're getting back $1,500, which is a lot. So
and a $38 product.
And a $38 product. So I was thinking about maybe switching it to a longer term not jade lizard, zebra or something, because it only holds up about 600 then. But
price out the March. That's fine. We've got a few minutes.
I was just saying capital because as the vol increases, so if I go 50 delta, 70 delta, it's only $6.
So we'll get 1,500 back from the stock and just put the zebra on. And sure, yeah.
It just made a little bit more sense for capital.
Yeah, I don't have a problem with it. It's
No,
funny
I also don't have a problem if we just, well, it's kind of expensive, but if you're just going to spend $700 and cut it in half, you're paying 50 cents extrinsic value. It's not
So the thing is, what I like about the zebras, we had zebras. IBIT got down to where those were at the money. Then there was a lot of extrinsic value in those. We sold them out, replaced it with stock. If we want to put new zebras on, that's fine. If IBIT falls again, we could sell those out for the extrinsic value and replace them with a new zebra or stock. It doesn't.
Yeah, it just kind of keeps replaced. Look at this. Who's down 40? It's happening.
It's happening. It's happening.
But this is where we were before the CPI print. We were down. I saw them down as low as about 40 this morning. So this is where we were before the CPI.
Yeah, I mean, every day this week has been kind of ugly, but the vol's been telling you it's going to happen. Like the VIX has kind of been saying, don't get comfortable.
Yeah. Yeah, you're going to be uncomfortable being comfortable. Okay. I'm just trying to keep an eye on time. Are we supposed to be done right now?
Yeah, we got, I think, 2 minutes.
I thought we were supposed to be done at 8:40. That's the only reason I'm
let's see. Yes.
Yeah, so that's what I'm saying. I was like, I know we dilly-dally. We will switch that into a zebra another day. I just wanted to show capital to capital. We can keep kind of adjusting and bobbing and weaving because we are traders and we will go back and forth with it.
All right.
Take a quick 90-second break.
And we'll be back with Fast Market. Stay tuned.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9. Yeah. It's same thing. It was right there. Right when we started.
He was my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus 1. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Jenny, we are back.
Fast market, Liz. Fast market. We've got a busy morning. The time flies during this morning show.
I know. Well, there's lots of segments, lots of people, lots of things handed to us.
I really do enjoy having guests on.
It is fun. I love having a guest on.
Yeah.
So far, Chris Vecchio and Jamal can join our show anytime they'd like.
They're welcome anytime. And we told TP he's welcome every Friday.
Yeah, we did. Does he know he's not on today?
What's today?
Friday.
Oh, you know what? I'll text him that. I'll text him. He's going to be on. TP's going to be on with me next Friday because you are going to be out of town.
I will be out of town. That's correct. He'll be on a full TP show next Friday. All right. But
I am telling TP right now. No Liz and Jenny show today.
Just so he's aware. Oh, I bet we got filled on for 63 cents, which is great. So we let the market come down.
On that Jade Lizard. Okay.
Yeah, we've got about I think I put it in for 40% profit, which is great. So we can put another IBIT in later. But let's take a look at fast market. Are you ready for the first one, Jenny?
Fire them up.
Oh, there we go.
There we go.
I love the music. Okay, Baidu, sell the 130 puts or go wide with put spreads in March.
Hold on 1 second, please. Because what I think what the viewers see, there we go. Now it's up. Now it's up.
Oh, I didn't know they didn't see it. Sorry about that.
Okay, yeah, here. Now we've got it. All right, go ahead.
So in Baidu, sell the 130 puts or go wide with put spreads in March. There's solid support around that level, and I'd like to take it off before earnings if it's working. This is Sean from Hong Kong.
All right, let's take a look at Baidu.
From Hong Kong, we for sure are taking a look at Baidu. Okay, so then we're going to go back to, hold on, let me get into the platform. Baidu, you wanted March, right?
Yeah, now we're green. Now the market's green. We were down 40, now we're green.
Now we're green. Yeah. Where's the, hold on. I just typed in March.
Cancel crash.
Let me go to the VIX. VIX is still up.
It is.
Mm-hmm. Which makes me a little bit nervous. Okay, so he was looking at put spreads in March. So
he said put naked puts or wide put spreads. Can I see the chart? I like to look at the chart.
You can see anything you want to. There you go.
Uh-huh.
It looks like a lot of other things that has pulled back lately.
Yeah.
Okay, so if we go in now, I would feel more comfortable in a put spread in Baidu because I feel like we've been Baidu'd before, haven't we? Or we've been
I don't know, but I would feel more comfortable at the 120 level or lower.
So if you're gonna do, he wanted a wide.
God, you can't do a spread there. That market's too wide.
You can't
like on that 110. You see that 110, 85 at $3.
I mean, look at all these: 250 at 385, 140 at 250. We can't trade these as spreads, and we can't trade them as naked options either.
The one, honestly, if I really wanted to be in Baidu, if I really, maybe the one I tried to sell the 115 for $2 mid market there, 115 for $2.
No, it's too wide. Honestly, we're gonna have to we have to stick with liquidity. This is not. We had an entire segment on it this week, so we have to pass.
Right, and maybe as the day goes on, they'll tighten up a little bit. But right now, those markets are very wide. And again, what is going on? I mean, the markets we're used to like tight markets in so many of these products, and we've been seeing some wide markets this week.
We have been seeing wide markets, especially Baidu. You wouldn't expect it. There are certain products that's already liquidity vetted, and you would think Baidu is one of them.
Yeah, it used to be like Baidu used to be something we traded all the time.
Yeah.
I don't know.
Okay, number 2, Jenny, are you ready?
Yes. Path sold. I know I've never traded Path. Sold 10 puts in March. IVR is high and liquidity is decent. Jeff from Miami.
Okay, let's take a look at Path. I don't know what it is.
I don't know. Type it slowly so I can read the name. Well, let's see. Path. No, I don't know what it is. But the 10 puts you're getting.
But take a look at this. So this stock that we don't know, that we'd never traded before, has tighter markets than Baidu in March.
I know, but it's like 55 at 68. And if you look at go to open interest. I was going to say there's no open interest, but that's volume. You could keep Delta up. Just change volume to open interest.
Why can't I see open interest? Oh, there it is.
But you better leave Delta because we're going to need it when we go back into SPX.
Okay, fine. I'll switch it to Delta. Yeah, look at this. So you got a lot of open interest there, and I don't mind it. These are tighter markets. What strikes were they again?
The 10.
10. Okay.
Yeah, we'll jump in with yin path. Although I feel like if you look at this chart, it's going to be one of those that's gone from like 3 to 10. Oh no, it's gone from 20 to 10.
Look at this. I'm for sure in path.
We're in. We're in.
Okay, mid-market. Let's see if we can get filled. Why is our offer going up? Oh, there we go.
Yeah, it's there.
Okay, we'll
You know what's so funny? I traded something yesterday, and it was. Now I've heard of things being quoted and quoted in nickels, but this was quoted in dimes. You couldn't even get it to nickel.
Really? Was it very expensive?
I can't remember what it was, but I put in a trade in something and I was like, you got to be kidding me. I'll see if I can find it. But I couldn't believe it was quoted in dimes, not nickels.
That is pretty crazy. So a lot of times they're quoted in nickels, traded in pennies. Spoos are down 14 again. I'm going to go back. So we got
what a wild day.
I know it is a wild day, but I mean, that VIX being up said it's still a price to move. Okay, number 3.
Could it have been coin? Could coin have been quoted in nickels and dimes? I don't know.
It's a real possibility. Okay, so next up is Roblox.
Back near 60, sell the 60, 70, 75 Jade Lizard for a $5 credit. No upside risk. Chris from Austin.
I love a good Jade Lizard.
60, 70, 75. Sure.
Okay, are we still in March?
Yeah, it's got to be March.
RBLX. So I'm going to go to March. Yeah, there's no earnings on the horizon. So 60, 70, 75. Now this has 250 wide strikes, so we could narrow this thing a bit. Here's what
if we wanted to like narrow the call spread, and that gives us more room. Roblox uses a lot of buying power though for a $63 product.
That it does. Here, so I'm just going to take this up to the 57.5, and I'm going to buy. So we're only going to use $700. We still have, this is 250 wide, and we're collecting almost 290, so 40 cents over.
Sure, I think that looks good.
Okay, shipping it. And that's good. You know what's crazy is we're not getting filled. In this path and in Roblox. We'll go in after the fact and kind of adjust accordingly.
We can make adjustments. Okay, so that is Roblox. Amazon, Walmart's PE is almost twice Amazon's. That's crazy. I'd rather own Amazon long term. Maybe short a 35 delta. Put spread or run a June, even the other day someone was talking about how IBM's PE was greater than, do you remember this?
No.
Can't remember what they were comparing IBM to, but some of these are getting nuts. Walmart's PE is almost twice of Amazon's. I'd rather own Amazon long term, maybe short a 35 delta put spread or run a June-March poor man's covered call, or even like we could take a look at a diagonal. Let's just take a look at Amazon for a bullish trade.
So Amazon, we don't have anything in. I am long Amazon. I usually have a diagonal in here. So Amazon has been down. I cannot look at that.
Yeah.
So I'm just going to go through theirs because they were looking at a 35 delta put, which would be right here. So 35 delta put, you're using $3,000, you're getting $450. That is not a bad return on capital. We're going to get a little bit more creative than that because we don't have that much capital.
I think at this point I'd do a March-April diagonal.
I do not mind a March-April diagonal. So March, if you're doing a March-April, the nearer term is March, so you're selling in that. You can go with the 215, right? So you're collecting at least 276 in premium. And then I'm going to go to the April.
So you've got the 200, 215 for 840, half the width, which is about what we expect. And then you've got another sale in there.
There's quite a few sales if you wanted to go weekly.
But maybe we just do a put spread. 27 rank. Maybe we just keep it simple and do a put spread. $5 wide for $1.
Let's take a look. In March, can we get a $5 wide for $1? Yeah.
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 I mean, I know we would love $1.60. That's a third, but I know you can't really, it's almost impossible.
No, and keep in mind, there's 35 days left versus 45, so you know there's going to be a little bit less in there. So I'm shipping it. We're turning into something else. Ooh, we're filled. Okay. Amazon. Thank you very much. I didn't mean to sound so downtrodden. Jack from Philly, we appreciate that Amazon trade.
While you're in here, I'm going to be pushing these trades out as we're going to go.
Number 5, SPX. What time is it? It is 5 to 9. Yesterday was ugly across the board with elevated IV today. Sticking to a routine iron condor feels like the right one. Daniel from Boston. It's almost as if we planted this here and we didn't. So I'm going to go back in and reprice out our SPX iron condor. So
the one, like price out the one we pulled up and see the.
So I have it still. I still have it pulled up. The exact strikes, because I didn't clear it out yet. At 8:30 in the morning, it was trading for 625, and now it's trading for 680. Now the strikes are going to be different because if you open this up, they're not that crazy.
No, it's not that different. It's not that different. Your call is still around the 20 delta, and go down to the put side.
And the put side is still the 20 delta.
20 delta.
And so VIX is higher. So at this morning, this was trading for 625. Now it's trading for 680, 665.
That's crazy. And the market's still right about where it was.
That is not what you're used to seeing, right?
So this elevation in VIX, this rise in the VIX doesn't bode well for what's to come today.
No. And look at that. We've been down 40, then unchanged, now down 20.
I know.
And so we talked about that a little bit. On a day like today, I know we're on air. I'm a little bit more apprehensive to be selling those put spreads because we're all over the place.
I agree. The fact that VIX is up $1, it might be a day where that is giving me a tell that, this might be a down day, and I don't know if I'd do it.
I know. So looking at those iron condors, I mean, I'm glad we still had it up and priced because the 20 delta, $20 wide is usually kind of where you land. It's interesting that if you would have done it in the morning, I would have said, if I would have done this morning, I would have said, and
by now I would think even with the movement, it would be at least 30 cents less.
With the same strikes, for sure. Yes. And in fact, it's the opposite. It's, 45 cents more.
Right.
So it's pretty interesting. Okay. So then thank you very much, Daniel from Boston.
Okay, Shop. It had a big reversal after earnings, not overly bullish, but with 40% IV rank, there's premium to sell. Looking at the 95-130 strangle in March in Shop. Tom from Raleigh.
That seems wide, 95.30 in March.
Didn't you say Shop had a big move up on earnings?
No, Shop went, look at this. So let me show you this day. This was earnings, I think, right? So Shop opened, where did it opened?
140.
140. And then it closed 118 and its low was 109. That was one day move. It opened up and then it was a huge wide move. So that was kind of crazy. Wait, but let me go back because I just went that. They're looking 95-130 strangle in March.
Yeah, I'm too afraid to do a strangle in Shop.
Oh, so am I, but I'm going to price it out for this guy.
130. He had his call in. He had the call was lower one strike.
So 130. Sorry, Tom. I gotta tell you, here's what I love about it, Tom. You have found a very good return on capital in a strangle.
If it doesn't blow through one of the strikes.
Correct. Like I said, I was like, I'm scared too, but I'm going to price this out for Tom. But so if you look at this isn't something that I would want to do because you've seen these wild swings. So he was 130, and what was that? 95, right?
95.
So within this range. So it was just 95 back here. 130, it was literally 133 days
3 days ago. 3 days ago. Again, Tony from Mexico has a saying, you got to risk it to get the biscuit.
You got to risk it to get the biscuit. What I could do in Shop is something like this.
Absolutely. Let's throw on the $5 wide for $1.89. I can...
That's a number I can live with. I agree. I mean, it was funny because you were saying I'm too scared. I was like, me too, but we got to price it out for Tom from Raleigh. Okay, so we're working that. Aren't we?
189 was a lot for that $5 wide.
Yeah, we'll see if we get it. This is AJW from LA. There's a whole lot of letters there. AJW from LA, PayPal, Johnny Trade, just trying to engage in PayPal, thinking the March 37 put and 42 call for a simple strangle.
All right, let's go to PayPal.
No, aren't we in PayPal?
No, we're in Shop. Oh, you mean aren't we in it?
Yeah.
yeah. We just have the 40 put. So we've got the 40 put. What
do we sell for? We sold it for 119.
119.
No.
Nah. We're just gonna leave our put. 36 rank. If you want to sell premium in PayPal, we just have a put. I don't want to add on a call.
No, I kind of agree with you. Okay, so I'm gonna go back. 7. Next. C.
Citigroup. Eric from
Jenny, when I go
Minneapolis.
like this, do you see it as a C or does it look like a backwards C?
Oh, I see it as a C.
Oh, good. Because it's backwards to me. I was just wondering if I'm like mirrored.
No.
Okay. So small positive delta iron condor, 95, 105, $10 wide. Oh, and then a $5 wide call spread.
95, 105 put spread, $10 wide, and a $5 wide call spread.
Yeah.
Yeah. 95, 105. So $10 wide put spread, $5 wide call spread. In March, it was the 120, 125 and the 95, 105. But Citigroup is so high.
I don't
let's take a look at the chart, right? Oh no, it fell. Okay, yeah.
It fell. It fell. It's got a 38 rank.
It's funny because when Logan turned 18 and opened his account, Citigroup was one of the stocks that he put in his account, and it was literally, I think, when he turned 18 and put Citigroup in his account, it was 53.
Oh, hope he still has it.
No.
No, I like I said, it's a little tight. It has fallen. It's got a 38 rank. We don't know which direction it's going. I just did a little tweak where I bought it from the 95 to the 97.5 because I saw that these were only a little bit more expensive. Are you okay with that? So we got a chicken on the top. You got a chicken on the top, and you got 250 on the downside.
I don't know. I mean, I don't love the risk to the downside in Citigroup.
I don't love the risk to the downside either, but it's fast market. It's a very small level of commitment. I'm going to see if we can get filled mid-market. If we get filled mid-market, great. If not, we're not going to pick it up. Okay.
I feel like there's easier places to make money than Citigroup.
I think so too, but with this is the segment we're with right now. Okay. Micron, based on today's action, I don't see MU dropping much into earnings. Considering a 20 delta, $20 wide iron condor in March. This is
Brian from Denver. Sure. Okay. 20 delta iron condor in March. Micron. You're going through earnings.
Yeah.
He said he doesn't see it moving much through earnings. So, but I don't think you're gonna get out of this between now and earnings. So I wouldn't throw in an iron condor.
So this is I don't think if you are this is a hill I'm willing to stand on. I know a lot of people will because they don't think it's going to move going through earnings, but then this is your earnings trade because it's like you're running on sand. Can you get from point A to point B? Yes, but it's a lot harder and you're going to work much harder to get that decay that you're looking for.
Listen, if Micron drops, you're not getting out of this. If Micron goes up, you're not getting out of this. If Micron stays right here, you're still not getting out of this.
You're still not getting out of it.
You're still not getting out of this.
Yeah, so then you might as well give yourself a better footing and do it right before earnings.
Yeah, like if you want just one side, then a move in Micron will get you out of that trade. But to put on both sides and just sit here and wait for earnings, I know there's a 78 rank right now, so there is a chance that you'll get out of this because the 78 rank is really high. It's possible there's only a 50 rank when earnings come. So there's a chance you could take a little bit of money out of this, but you're not going to take a lot out of it. I don't think it's worth the hassle of having this on your sheets for so long.
I kind of agree. And that was one of our questions today from Confirm and Send too. Okay, so thank you very much, Brian from Denver, Colorado. Ooh, Jenny.
Andrew from Puerto Rico, Oklo sitting at long-term support. Good, I hope so. Going big and selling the 55 puts in March. So Andrew from Puerto Rico, I'm in it.
Are you Andrew from Puerto Rico, Jenny?
Hey, I am Jenny Andrews.
It's true. Okay, OKLO.
I believe we have something. Yes, we do in March. We're with you. Look at that.
It's you. You're.
How about selling those 55 puts in March? We have them.
Filming from Puerto Rico.
I wish.
I know. Yes, we do. We like the 55 puts from March. I'm just going to take a look at our position and see what price they were when we put them on. Oh, so we're
right here.
Right here. So yes, we are right there with the 55 puts in March. So I'm glad about that. Okay.
Well, so we're still working Path. We're still working Roblox.
I think we got to let these things come to us, because I'm kind of going with, and not that they're earnings trades, because I don't like paying up for an earnings trade. Let's see if these come to us. If they don't, then they're not meant to be.
What did we get filled on? Do you want to pop out the side and see what we got filled on?
Activity, all symbols today. Okay. So today, Amazon.
Or just from the fast market.
And that's it. Amazon.
Just Amazon. 1 out of 10. Girls, you got a 1 out of 10.
Here, I'll do this one. I'm going to replace. 57, final offer. Path. All right. Okay.
2 out of 10.
2 out of 10.
No, but a lot of them we already had.
Shop, I'm taking it down by 1 penny.
Yeah, take shop down by...
No, these markets are wide. And 2 of them we threw out because of wide markets, and this is wide markets.
We take it down by a nickel.
Fine.
We need at least like a 30%.
Yeah. So that is, we took it down by a nickel. Other than that, Roblox, I don't want to take this down by that many cents. Look at this, 196.
I know.
No, the markets are too wide. So Jenny,
we're in a very strange market. To have all these wide markets, it's bizarre to me. Every day on the train to Liz, I would say, like, these markets are wide. It's 8:30. I'm trying to make trades, and these markets are wide. What is going on with the world?
I have no idea. And it's pretty crazy because we are going back up. We were down, and now we're going back to unchanged with the spoon.
I know, and it's 908, and we didn't put on the SPX trade. But we talked about with the VIX up $1. I don't know if I would.
I don't know that I would either. Let's take a look at the VIX before we take a break, and then we'll take a quick 90-second break. VIX is still up.
I know. It's weird.
You know what I'm gonna do? Hold on. Just because it's not up as much as it was, I want to take a look at this because I kept it up. So now look at this, Jenny. Now it's 585. This is what we should have seen.
Right. Instead of up to 680.
Yeah. That was why we were both a little bit gun shy on that, when we had the priced out and kept it up.
Right. So
all right. So let's take a quick 90-second break. Sorry.
We've got a market measures to get to when we come back. Stay tuned, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Jenny, we're back again.
We are back. We are back. The morning is flying by. Market was green.
Market is officially green. We're up 11. I keep telling my dog, Will Ferrell, he's got 50 minutes before his potty break. So just hold tight, little guy. Hold tight, little guy.
I said, I've got 2 dogs sitting here with me. I'm trying not to move too much, not to make too much noise. I don't want them to wake up.
Yeah, that's true. Shh. You know what I'm excited about, Jenny? We have a 0DTE SPX study from our beloved Jacob today.
Jacob, we miss you. We love your studies.
We do. We love them.
And when I say we miss you, that's because the boys get these now.
I know. We're really trying to get that changed. Keep going. I have 2 things to look at real quick. Well,
okay, we've got a market measures sponsored by the SIBO. We love market measures. We love Jacob, and we love the SIBO. So 3 of our favorites.
Okay, hold on. That's what I thought. This is what I was looking up. Oh no, never mind. I thought our ES got hit when we got up.
How far out to win when you're wrong? How far out to win when you are wrong?
0DTE.
You ready for this, Liz?
I'm ready. Every 0DTE trader knows the pain. Yes, it's true. You sell puts at the open, SPX gaps down, and suddenly you're fighting to break even. Is he talking about today?
This sounds like Wednesday, this sounds like the last few days where our put spreads, and you could add spread. You sell put spreads because most people, I don't know anyone selling naked SPX puts. Most people are selling spreads. Like in our realm, in our world of traders.
Because 0DTEs allow you to do spreads. It could be, you can be synthetic, but it's going to be, you can be wide, but nobody I know is selling 0DTEs.
All right. Your initial distance out of the money determines how much room you have when the market moves against you.
Okay, that makes sense. And we were just kind of looking at that with the 20 delta. Selling far out of the money feels safe, but are you giving up too much premium? Selling the at the money premium pays well, but can you survive the wrong days? I need to put my regular punctuation there.
On days when direction works against you, put spreads on red days, call spreads on green days, which strikes actually stay profitable?
Ooh, interesting.
How far out to win? So how far out we're looking at, 20 delta, 30 delta, 20 delta, 15 delta. We'll see. How far out?
You have to make sure you're making enough. Okay, so here's the study. Using nearly 3 years of data in SPX 0DTE options collected every 10 minutes.
Examine selling 0DT $20 wide vertical spreads at market open using short strikes ranging from 50 delta straddles through far out of the money 15 delta strikes and closing winners if they reached 15%. Now, 15% of max profit is like nothing. So we saw that iron condor this morning when we looked at it, and it was a little over $600. Well, 15% on that is just going to be $90. So that's not much. You're not taking much out of those.
Yes. So they close everything at 15%, right? Am I reading that? Okay, everything at 15%. So analyze the performance only for days that went against you. This might be Kai. I don't know who wrote this. Because Jacob usually does them at 9, unless he does it differently for them.
Yeah, maybe Kai did, and we love Kai too. We love Kai too. He puts together some great stuff too. So this might be from him.
So analyze the performance for days that only went against you. And I love that that's in red. Put spreads on days SPX closed lower and then opened, and call spreads when the SPX closed higher.
And I feel like this could be Kai because Kai has done studies where you're collecting only 15%. That, and I know, and lots of our viewers are trading these 0DTs, and they're looking for more than 15%. I know Jack Tucker is usually looking for a 40%.
So, and then the next line says, repeated the analysis using 25 and 35% of profit targets for confirmation.
Okay. All right. All trades were assumed to exercise at mid-price. All times are Chicago. And next.
Okay. Closed at 15%. Selling puts on down days. I just got to get my bearings. So you're selling puts, but this is just puts, not put spreads, Jenny.
This is just the puts, and we're looking at short strike. and obviously the 15 delta, 20 delta, 25 delta all have higher win percentages than the 50 delta or the 40 delta. Mean daily P&L.
I mean, it doesn't turn
over 3 years.
It doesn't turn a corner until you get to the 25 deltas. You're negative until you go farther out in time.
Oh, this is on down days. So
it's
this
only
is
on down days.
Only on down days.
That was in red. It was only on down days.
Which you saw us a little bit like nervous about selling our put spread today because would you have called today a down day? It started down. We started down.
So I don't know what you call a down day or what you don't call a down day. But the funny thing is taking a look at this, I usually do the 50 delta on all days. I usually do the 50 delta short strike, but I do a spread.
And you're looking for more than 15%.
And I look for 50%. So,
but I think these numbers are going to change when you are looking for more than 15% because I think 15% is so low. Like we saw with that $20 white iron condor, if you're taking 15%, so you're taking less than $100 out of it, you have one full loss where you lose $1,500. You need 15 winners to make up for one loss. That's the difference between this and like what you and I have been doing, which a narrower spread. We've got it doesn't take many winners to make up a loss.
Yeah, we've got a 50% drawdown, so it's just going to take 2 wins to make up for it.
Okay.
Is this number 3? Next one. There we go.
Now close at 25%. It's getting worse.
It did get worse. All the numbers got worse, and you don't turn the corner until you're getting down to the short strike. But now this is did it
ES?
Say they did it
was
say,
that our ES?
No, it was not our ES. It was our Citigroup. Does it say what? Did they ever close it at a percentage of max loss, or they just let it go to expiration?
No, it sounds like close to 25% are left. Okay, let's move on to the next slide, please. Now here, closed at 35%. That 50 delta does not look good. The 40 delta does not look good. Honestly,
I'm telling you, if you're closing it for 30%, you need the 20 delta, which is what all the studies have been on, is the 20 delta.
Yeah. 20 delta is looking okay. But that's not great considering the risk you have in the trade. Like mean daily P&L, $25 for a $20 wide.
So, and keep in mind, you got to cut it in half because this is just the puts. So this is selling put spreads on down days. So if we were getting 6, you're getting 3. So you're risking $1,700 on down days.
Oh, like yeah, I see what you're saying.
Which is a lot of risk.
Okay, so far I don't see anything jumping out at me that looks like I got to do this trade.
No, it doesn't. Okay, let's go to the next one. Whoa.
And we have, this isn't surprising because
you know what? It's jumping out at me. Just do the puts.
What we have seen in other studies. Remember the one where if the market's down this much or up this much, or what happened on up days? The up days continued their rally and would blow through the calls, and that's what we're seeing here. We could just move on to the next slide.
It's gonna get worse. It's going to get way worse, right? Because if you close at 15%, yes, this is getting worse because then they go 15%, then they go 25%, then they go 30%, and it should be getting worse and worse. They're all negative all across the board. And we have had studies like this before where I'm sick of getting like ruined to the upside.
Because when we've had rallies, they'll start out slow and then build as the day goes on. Up 20, up 30, up 40, up 50, and then we're having quite the green day. We've had a lot of those in the last 3 years, and this is just 3 years of studies. Okay, let's see slide 8. Let's see when they combine them to the iron condor.
Okay, this is still it's getting worse, which we expect to see. So at 35%, it should be worse. And then do they combine? I don't think they combine them.
And let's see at the final slide, 9 of 9.
No, I think 9 of 9. No, that's the takeaways. Yeah. Okay, there we go.
Okay, as expected. Yeah, sure. Well, let's go to the takeaways. None of these are good. Nothing as expected. Directional at the money.
But you know what's crazy? Before we even get to the takeaways, I know they gave us the puts first. So they gave us the puts first, and none of them were glaringly obvious, jump off the table. But we have to keep in mind, Jenny, before we get to these takeaways, we have to keep in mind that those were during only down days, and the other ones were during only up days. You got to keep that in mind. Those are the worst, not the worst case scenarios, but they're giving you the worst case scenario for just those, right? And so they gave us the puts first, and none of those were glaringly obvious. But if you would have put the puts second and the calls first, we would have been like, just do the puts.
Or what about on a down day, just sell the call spreads, or on an up day, just sell the put spreads?
Yeah, they didn't put that in there.
So as expected, directional at the money premium sellers took big losses when the market moved against them.
Yes. However, traders who sold puts around 20 delta were able to profit even on days when SPX fell. That's what I was going to say is if they would have put those studies in reverse and given us the calls first, we would have said 20 delta. But when you're looking at it, the profit potential was so little because somebody in the chat even said this. When you're taking in $3 and you're risking 17, you're taking 15% winner. If you're taking 15% of $3, that's not even $90.
There's a fine line between, you're collecting enough, taking a big enough profit target so that you can't set yourself up so that you need 15 winners to offset one loser. It just doesn't work like that. It's not going to work out.
That's the common sense side. And I think on paper, when you say 20 deltas wide, just the puts, taking 15%, you're literally taking $45 out of that. You're going to take $45 out of that trade for the risk of 1,700.
Yeah.
Yeah. Yeah.
Yeah. With the overall upward tear of SPX, there has been no way to profit from only selling calls, but using 30 delta or 20 delta, we're able to cushion the pain.
And we've seen studies like this from Jacob, and that's why we lean towards just the puts, because I'd rather take the loss on the aggressive puts than have those calls in there.
But maybe my lesson here is don't do them on the down days.
Yeah. I mean, when you say this, but hindsight's always 2020. I know we're saying, is it officially a down day? We don't know. I mean, we're red right now. It's an unchanged market. Is it when we open down, then don't do it? Or is it, this is a massive down move? So when you looked at the last couple days, and we'll get to the last takeaway, the last couple days, even was it yesterday and the day before, we opened up.
You're right.
Then, do you know what I'm saying? We opened up and then we dropped like a hammer.
I know.
And we dropped like a hammer after 9 o'clock, which I thought was crazy.
And I've been good with my SPX, trying to do, my put spreads or the narrow, risking very little, put them on around 905, set my profit target. I've been good. And I'll say I'm still up, but this week took a little hit. But this week I got carried away. I kept trading more. Sometimes when I'm down on it, I keep trading more and more zero DTs, trying to make back my loss.
Yeah. Yeah. I mean, I think we're getting a rally. Bitcoin seems to have rallied. Coinbase seems to have rallied.
If Bitcoin rallies, the market will rally. The market seems to follow Bitcoin, I think.
Bitcoin is rallying and SPOOs are still slightly unchanged, but that's okay. The closer to the at the money, the higher your profit targets, the more you will make in the market moves. So that's our takeaways.
This was a tricky one because, but again, it was on down days or up days. So if you want, my takeaway is I'm not going to do those put spreads on big down days.
I know, but so that my question was, and I would like to know who created the study, was when you're doing we did the put spreads. When you did the put spreads at 8:30 when we were on the train, market was up 20. And then I did the put spreads. We were only up 13 at 9 o'clock. We were down 105 by the end of the day.
Yeah, but that's one strange day.
Yeah.
It's not unusual. It's not one strange day. So if you have one or two strange days, that's why I like the less risk. One strange day or 2 odd days, it's not taking out 15 days of profits.
Correct. That's why I do like the lower drawdown.
Mm-hmm. All right. We're going to take a quick break. And when we have come back, are going to be joined from someone from the trade desk.
We are. And we can jump in the platform too. So we'll be right back in 90 seconds.
Stay tuned.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Hello, everybody, and welcome back. This is live from the trade desk, and I'm super excited. We have a very special guest today.
We do, Jenny. But before we bring him in, do you? Let's just take a quick rundown of the market because SPOOs have made a turnaround. SPOOs are up 27. Bitcoin is rallying. Coinbase is rallying. There's a lot of rallies in the alley. Get your stock. Now we're not up as much as we were yesterday, or not as up as much as we were down yesterday. But there's at least some bright spots.
Let's see if our special guest knows the song.
Oh,
are you ready? Are you ready to bring him in?
Let's bring him in.
Liz,
Jason, welcome.
Jenny, how are we? Thank you.
Thank you for joining us. This is exciting. We've got to be on the road with you. I don't know that we've ever been able to have you as a guest on our show. We'd like to formally invite you to come on our show anytime you would like to.
Well, I got to fight that with Quentin first. But I do have a question for you ladies, which I know this is totally taboo and I shouldn't be asking, but I'm going to go for it anyways. But how old are you? You don't have to answer. You don't have to answer. And I'll tell you a little sneaky way on how, like, for example, my mom will ask other folks how old they are without asking them how old they are. By asking
somebody's got a little birthday coming up here on March 3rd. 3-3 is that lady's birthday.
Oh.
Yeah, so and I'm turning 50, so we were all just in Mexico, 14 girls celebrating our 50th birthdays. So I hopefully I don't know. I think I might know what you're going to talk about, and hopefully there are good things to say about people turning 50 this year.
Well, no, he's going to tell us how you ask how old you are without asking how old you are, right?
So with that said, do you guys know your Chinese zodiac? Like, what's your sign? I'm not talking about like Aquarius and Cancer. Like, I'm talking about, what your Chinese zodiac sign is? Are you a bunny? Or you
I think we're going to be the same because we were born in 76, right? Won't we be the same? And I think we're the dragon.
The dragon. Okay. And so
you think so?
I think I could be wrong.
Well,
I don't know.
I grew up here, so I'm kind of a bad Asian here. But anyways, the thing is that what a sneaky way of asking how old you are without asking how old you are, which is what my mom does all the time, is what's your zodiac? And
what's your Chinese zodiac?
Because Monday is Lunar New Year Eve or Chinese New Year Eve, and so we're gonna come from the snake to the horse, and so I just figured what better way to segue that into by asking what your zodiac is, because there's 12 zodiac signs, and so you can back into it.
Can you tell us if we're right or not on 76?
Yes, you know.
19. Oh man, I don't even.
1976.
Yeah, it's the dragon.
It's the dragon. Yes.
I'm the dragon too. 2000.
You're the dragon too. I was like, Laura, you are not 76. I was about to call bullshit on that one, but okay, it makes sense if it's 2000.
And Jason, what are you?
I'm a bunny. So apparently bunnies love attention, and we always have to be the center of attention. And I'm still working on the charisma piece, but yeah, I think it's about it.
So what do you know about the dragons? What are we supposed to be? Me, Laura, and Jenny, and tread lightly because there's 3 women.
Yeah, I got Laura on the hook. Like I said, I'm a bad Asian. I don't know much. I grew up here. I don't know much about it. Only thing I know, my knowledge pretty much extends to like when you go to a Chinese restaurant and they happen to have that as a placemat. I'm like, oh, okay, I'm that. So yeah.
So since we're talking Chinese New Year, Jason, what have you seen in the past? What do you think is going to happen with all of Asia being closed next week? How many days will the Asian markets be closed?
Great question. So pretty much all of Asia is pretty much closed next week. How that'll impact the market? I mean, as a result of people being on holiday, you're probably going to probably see less activity overnight as a result of it. And then like when everyone's, back from the holidays, that's when activity will spike. So I don't know if anything Marty ever taught me is like, you don't short a sleeping market. So maybe if next week's a sleeping market, then I don't know if his advice will hold. I don't know if not advice.
That makes sense.
His pointer.
This is what Marty taught you?
Oh yeah. So I mean, you can tell it to my P&L, but I mean, look, it's that's what Marty is. What Marty's told me.
Don't short a sleeping market. I see that.
Exactly.
I like it.
But
we've got this weekend Valentine's Day, Lunar New Year, Vanetta's birthday, Frank's birthday,
Martin Luther King Day. We've got it. It's a lot.
President's Day.
I'm sorry, President's Day. So wait a minute. When is what is it going to be next? What does it switch to? I know you said it.
It'll be the year of the horse. We're
Okay,
coming
you're
from
the
the
horse.
snake to the horse, I believe. Yeah,
Snake to the horse.
snake to the horse. And so to all my Mandarin speaking viewers, 恭喜发财红包拿来, which means happy wealth and prosperity, and give me my red envelope. So like red envelopes is when you
I love that. I love that. I did the kids in the neighborhood one year on Chinese New Year. We went over to a neighborhood party and I brought red envelopes with money for all the kids.
Yeah.
Oh, that's fun.
Yeah.
Yeah.
Yeah. So one thing that's kind of funny, I guess I had to like learn this later in life, was, giving money, in Western cultures is kind of like an impersonal thing. It's like, oh, you're just giving me cash. Well, in our culture, we kind of prefer that. So it's like, hey, here's some cash, and they're really happy about it. You can go ahead, go buy a PS5 or something. I don't want to.
Yeah. No, I like the idea of the red envelope.
Yeah.
I
So
like it too.
yeah, they'll just stuff money into it, and then the tradition is, as the kids become older, and our parents get older, that's when we start giving the red envelopes back. So it's a cycle.
Tell me that. So I may bring that to my family Christmas party. So as the kids get older, then it switches. Then they start giving envelopes of money to the elderly parents.
Yeah, typically, yeah. I mean, look, if you want to break the mold that way, but you're like, hey, I'm not gonna say no if my mom keeps giving me a red envelope, but
Yeah, but it makes sense because as people get older, they're more on a fixed income. They're not working anymore. It makes sense that they could use the red envelope.
Yeah, and speaking of,
I can't wait till the day when my teenage children give me a red envelope. I've given so much cash out in little white envelopes to them that I can't wait for a red envelope.
but
Oh my gosh.
yeah. But speaking of fixed income, I think this is a good segue for, hey, Laura, I want to bring it up.
Good job. Way to fix it.
So, for those of you that have IRAs and are looking for your tax forms, you've done a distribution from your IRA past this last calendar year, your traditional or Roth, you have already received a 1099-R. So you can go ahead and find that in our tax center. But what I have pointed out here in our manage page in our tax center is our tax calendar. So with that, we've been seeing a lot of emails about customers saying, hey, where's my 1099 at? If you don't see one now, then chances are you're going to be part of the second run. There's 2 runs. The second run, we expect to see that second tranche of 1099s for our taxable accounts, our non-IRA accounts, to arrive in the range of Feb 24 to Feb 28, so towards the end of the month. So if you don't see it yet, hold tight. Again, go to our go to our tax center from the manage page at my.tastytrade.com after logging in. Again, manage tax center, and then you can see this tax calendar right there. The tax documents right to the left of the 3 is actually where you can download those forms too. So just a little friendly PSA there. After you do see your 1099 form posted, and you want to hurry up and go into TurboTax or Tax Act or H&R, do know that that data won't be available until roughly 72 hours after your forms are posted. So I know we have a long weekend. This is when people like to jump on their taxes. Look, if you go on TurboTax, you're like, wait, where's my data? It's broken. It's just probably not available yet. So enjoy this weekend before you start hopping on taxes.
I've been in this every day, Jason, because my in-laws opened a Tasty account recently, but in the end of 2025. And so every day my mother-in-law is calling me, I want to do my taxes. I want to do my taxes. So I'm in their account every day trying to get their tax forms for them.
Yeah, and just another FYI when it comes to IRA contribution. So if you contribute to a Roth or traditional, you have technically up until tax day, April 15th, to make a prior year contribution, 2025. And as a result of that tax day deadline of making that deposit, that's the form 5498, which is the form that shows what you've contributed for a certain tax year, won't become available until June. So if you do need some sort of record in the meantime, you can always refer to your monthly statements for those contribution records. And of course, last but not least, if you do need more information on like how to import your tax data into said tax software, if we can do the next image, please. The other slide right there is the tax software data integration. Again, the top 3 are your TurboTaxes, your H&R blocks, and your Tax Act. Trade log's a different thing. That's like the quicken for traders. But when it comes to this, it's mainly just the top 3. So
you have a wealth of information.
Oh, yeah.
Do you think people should give, should I give my accountant access into my account so he can go in and get certain things. Usually I just download and send him my downloads of my tax forms, but I wonder if
if you're just using, like, for example, a lot of people that have accountants, they'll just download their forms, print them out, or just send them the PDFs to them. That's but if you're a do-it-yourselfer, that's where the tax software comes in. So it sounds like if you're not doing it yourself, you're going through an accountant, printing it out seems to be okay. But if you're gonna do it yourself, then that's where the tax software comes in.
Seems like it makes it easy to do it yourself with all that software right there.
Yeah, and it's super easy nowadays. The only thing that can get a little bit wonky is if you're super active. I believe, don't quote me on this, but I think back in the day there was like a 2,000 line item limit. So if you've done more than 2,000 transactions, then you could just like time it out, and all you have to do, nothing to fret about. All you have to do is just put in the totals, and you'll be good.
Yeah, I would say we've done more than 2,000 transactions in the year.
Yeah, I think they upped it, but trade small, trade often can add up.
We say that at the end of every show, Jason.
All right. Speaking of trading small and trading often, what is happening today? What are the most active stocks?
All right, let's get down to some business, shall we? Starting at number 20, we have SoFi at 19. Oracle.
SoFi, I'm shocked. SoFi's been on there for a couple days.
It has, yeah.
Sorry, I won't interrupt.
No, you're good. Oracle at a 97. SanDisk at a 77. Spot at a 26. D-Dog at a 47. Meta at a 22. PLTR at a 25, AMD at a 41, TLT at a 14, TQQQs at a 35, running last 10, Google with the L at a 20, Netflix at a 35, iBit at a 62, GLD at a 51, MU at a 74, SLV at a 59, NVIDIA at a 31, Amazon at a 26, Microsoft at a 34, and last but not least, Tesla at a 4.
Like, this surprises me because we have a lot of big movers on earnings that aren't on this. So we've got like AMAT, Rivian. There's a lot of coin, a lot of big moving earnings stocks that didn't make the list.
So were they on there yesterday? Was your Coinbase on there yesterday? I didn't see the list yesterday. Do you know what I mean? Because coin you would think would be.
Yeah. But that kind of goes back to, like I said, some of these stocks, the markets are wider. They're not as active as they used to be. The markets seem wider than they used to be. So maybe people are just playing these key players that you see on the list all the time.
Because they're liquid, yeah.
And plus, Asia's on break. So who knows? Maybe you got a bunch of people not trading too. I don't know.
That's a good point. That's a very valid point. I mean, and that's kind of stuff that I'm glad you brought that to our attention. When you have a certain percentage that is sitting on the sidelines and not doing anything, that does change. That changes the patterns.
Mm-hmm, definitely.
Well, Jason, a 9:48. We may let you go so we could jump back in the platform and do a little bit of cleanup before the weekend starts.
All right. Well, happy Year of the Horse, and ladies, thank you for letting me be on. Thank you.
Is that how we would say it? Like, if I see someone, Happy Year of the Horse?
You could, if you want to learn how to say Happy New Year in Chinese. Here, let's do a little Chinese lesson right now, huh?
Yeah.
新年快乐. So,
新年快乐.
Yeah.
Again, from the top.
All right, so try to break it up in syllables. 新 means new. 年, which means year. 新年. 快乐, which means happy. Together means happy.
新年快乐. We're gonna butcher this, Liz.
新年快乐, everyone. So that's it.
Thank you, Jason.
Thank you so much, Jason.
All right, thank you.
Happy Year of the Horse. All right, Liz. Should we? Are you prepared to jump into the platform? No. Let's take a quick break. We'll come back for like the last 10 minutes. We could be back on the platform and clean up whatever we need to clean up before the weekend.
Yeah, like a quick 30-second break if we could, Laura.
Yeah.
I know we're just throwing Laura under the bus.
I guess we don't. I guess we don't have to. But it'd be nice to be able to get back in that platform and see what the market's doing.
I know. Well, I mean, we can look at the market right now too. You can look at yours and I can look at mine because SPOOs are down again. Now SPOOs are down 3. We saw them up high when when Jason was coming on. I was saying there was like a big Bitcoin rally. So iBit's up 179. Bitcoin is catching a little bit of a bid. NASDAQ is down 12. So you're getting a tale of two cities. You got the Dow up, but you got everything else kind of down and unchanged. Can you see the market right now too, Jenny, or no?
No. But well, let me try to get into my platform. I was just watching on my phone. I was watching on my phone the things moving, and I could tell from my personal P&L what the market was doing. Like I could see, when it was at its high point, we had some kind of turnaround because my P&L took a quick move. So I knew that the market was probably not up anymore.
So the metals are still catching a little bit of a bid. Silver SI, I'm going SI instead of SLV, is up 2%, so it's up about 163. You can look at GC too. Those metals are the shiny rocks, as Chris Vecchio likes to call them, have kept their wings up. Everything else is a tale of two cities, where it's been up and it's been down, it's been up and it's been down.
Yeah,
we did wind up getting filled on our Citigroup or our Citigroup trade as well, because that moved in our direction. Other than that,
I've got the platform up now. I see I'm pushing out the rest of our trades. We got filled in Path too. So Path and Citigroup, we're still working Shop and Roblox.
Yeah, but we're going to let those come to us. I don't think we're going to actually push the envelope to try to do that.
Can you believe with SPOO's up 40, we never got filled on that ES?
No, and we had the GTC in for it. So now, granted, I will tell you though, Jenny, and we talked about this morning with one of our confirm and sends. They were asking the difference between SPX and ES. And I will say that is part of the problem with ES. It's a little bit trickier to get into and out of. The liquidity is a slight bit of an issue.
In ES. Yeah, we get those wide markets.
Yeah.
We get those wide markets in ES. SPOO's up, what do we have? SPOO's up 7. Curious what that. Do you remember what those strikes were on that SPX Iron Condor in the morning?
Let me look. I'm sure.
And I'll pull. I could.
Okay, SPX. I've got it still up, so I can look at my platform, but I am not sharing because we didn't take the break. But we have the exact same strikes pulled up, meaning I didn't move it at all. It's now trading for $5. It was the 67.65 and the 68.85, $20 wide. So originally in the morning it was 6.25. Then we looked at 9 o'clock. It was about 6.80, and now it's $5. So everybody,
$5.
if we put that on in the morning, we would have been okay, and you actually would have been at. This is your 15%. You're out if you're looking for 15%.
Yeah, you'd be out. You've got more than 15%. But today was a weird day, and I think people might have been a little bit leery of putting that on with the CPI number out and not knowing what the market was doing, because we've been up, we've been down, we've been all over the place.
Yeah, we have been all over the place.
Now, are metals still up? What's silver up right now?
Yeah, that's what I was just quoting, and I don't know, you were probably trying to pull up your markets. Silver and gold, those shiny little rocks, are still up. Silver is up 2%, and gold, SI is trading 77, and GC was still up. And it's and to Jamal's defense, it's been crazy with the bonds. The bonds are up a full 14 ticks. ZB is up 14 ticks.
I know, that's crazy. That is crazy that we've got ZB 117.22. 117.23.
117.23. Now, another public service announcement too. We are obviously not doing the Liz and Jenny show because we've just done 3 hours on the morning show. So they will be playing VOD. But we'll be back on Tuesday live from the SIBO as well.
And I know we said the metals are up, but like yesterday, SLV was as high as 71.30. Right now, it's still trading in the 60 handle. It's like 69.80. We need a $10 move in SLV between now and next Friday for our little put to make a comeback.
That's how long it has left. Is it only next Friday?
Yes, next Friday, and it's $10.
We can roll it out in time too. There's still quite a bit of premium there.
We've said before I want
to wait. I want to wait until the bitter end because I think that's the right thing to do. But
as far as our show account, we have nothing that's in the money that we need to actually deal with today. Nothing that's we would risk exercise or assignment on.
No, we closed all of that today. The show account seems good. Now, Jenny, let's talk predictions, okay? So you and I, we know metals are up a little bit. They caught a little bit of a bid. They were down a lot yesterday. We've got Bitcoin catching a little bit of a bid. Now, and the markets are all over the place. I mean, SPOOs are up 11 now, but we've seen up 40, we've seen down 30, and we've seen unchanged. Where do you think we're going to end the day?
I mean, this might be wishful thinking, but I think we're going to end the day SPOOs up
100?
60. SPOO's up 60. I'm going to say SPOO's up 60. That's going to be my guess on the day. Only because with crypto up, Bitcoin up to over 2,000, back up to almost 69,000. I feel like that kind of is a, market leader a little bit. Like if that goes up, maybe the market will follow, because Bitcoin percentage wise, it's up almost 4%.
I know. I needed a little bit more. I want a little bit more of a rally in Bitcoin. And I'm kind of I'm gonna jump off on what Jason said. Never sell a sleeping market. Maybe we get a little bit of a lift next week.
Got a big move in Hood today, up 550.
Oh yeah, Hood's up. Yeah, Hood's up, coins up. But all those, remember we talked about those before, are slight crypto proxies anyway. So they're all a little bit of a lift from this market.
Yeah, now coin up $22.
I know, $22. All right, Jenny.
All right, are we out of time? We are out of time. And again, our show is not going to be on. So we figured you had enough of us.
Yeah.
From 7 a.m. to 10.
But we will be back live from the SIBO next Tuesday because we're off on Monday.
Oh, yeah. Monday's a holiday. All right, everybody, enjoy your long weekend. Don't forget, tune in 8 p.m. Central Time, 9 p.m. Eastern Time. Where's my Miami? Right here.
Miami. I'll be watching. We'll all be watching. Everybody have a wonderful Valentine's Day. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. Everybody have a wonderful weekend.
Welcome back to Tasty Extras, where we are joining my friend and yours, Jenny, Mr. Chris Vecchio. We are so happy to have you here today.
Welcome. Thanks for coming on.
I'm glad to be back. This is it's been an interesting week, more than a vacation.
Everyone missed you. Everyone on the network missed you. I think they may have filled the viewers in that you had a flood in your house.
Oh no! They kept saying power outage. I don't know how the power outage, but yeah.
Well, it was both because a pipe burst, and the way that it burst, I came into my garage on Tuesday night, and it was spraying the electrical equipment in the garage. So we had the delight of replacing the entire circuit breaker panel and everything the past 2 days.
I like your positive spin, saying we were going to have to do it anyway.
We were going to have to do it anyway, so maybe this is a good thing.
Well,
question mark.
It's never fun coming home from vacation to a giant mess and no power. So we're sorry about that. But you said you went to Quebec. What was your trip? What was your vacation?
Yeah, Carnival. It's this winter festival that goes on up there. It's been going on since the late 1800s. And so my wife and daughter had never been before. I haven't been in 20 years. And it's drivable from where we live in New York, just a little under 8 hours. So we drove up. We spent a few days up there, ice skating, dog sledding.
Oh, that sounds awesome.
Went to an ice bar, took a shot of maple bourbon out of a shot glass made of ice, which was fun. Always fun to do that in the middle of the city during the day. But it was a good trip. It was just the three of us. My in-laws came and took care of the baby, so my wife, daughter, and I just got to hang out together.
That's awesome. That's very cool.
Really nice.
Yeah. Nice time.
Oh, good. Well, CPI is out. I don't know what is happening to the market right now. We saw it go from red to green, and now it's sharply unched.
Well, green kind of ish. We're up 1.
So, Chris, what were you watching as the CPI came out? What were you looking for?
Well, I was looking to see what happened with the SR3 M6 ticker on the platform. Those would effectively be the June rate cut odds.
Okay. Should I jump in the platform?
Yeah, I think this is a good time to show it because you do see here SR3 M6 that the
put that in?
Oh, throw me a backslash in front as it's the futures ticker. You do see that the market on like a 1 minute or 5 minute chart, when it gets pulled up, it had a brief, ever so brief bounce. But then that's since faded. There was about a 16% jump in rate cut odds this morning for the month of June, and it's now back to like a 4% increase.
Today, I'm going to go to I'm trying to get to the minutes. Hold on. I'll get it for you. 1 minute.
All right.
There we go.
Oh, there we go. Right. There's that bounce.
So there's that bounce right at the CPI release itself. It does come back in a little bit here, and that may be one of the reasons why stocks aren't holding on to, those initial gains that we saw come onto the board. The market itself, first off, is convinced that we're not getting any more cuts before Powell's out of office. And Given what's going on in Congress right now, the Senate Banking Committee's indicated that they're not going to push through any of Trump's nominations as long as these lawsuits, or at least threats of lawsuits, are lingering against Powell. So it's really June what we're watching, right? Because that's when we could effectively have a new Fed chair once Powell term ends. And that's when a Trump-appointed Fed chair could bring in the rate cuts that the president has been asking for. You can see here today, the market is looking at the data and saying, oh, this is good directionally, but it's not necessarily going to change anything right now in the short run. The reason, listen, Jenny, the economy is really doing good at the macro level. It's doing well at the macro level, even. I would say that if you look at the growth trackers, 2.5% to 4.5% growth with an unemployment rate that's holding below 4.5%. That's a strong economy. That's an economy that we would have died for in the 2010s after the global financial crisis.
Yeah.
And the policymakers would have absolutely tolerated slightly above 2% inflation in those outcomes. It doesn't mean they'd be cutting. It doesn't mean they'd be hiking, but it certainly means they would not be cutting. So, the market has had problems over the past week or two. I know software continues to have its, difficulties, so to speak. It's had a little bit of a bounce here, I suppose, in recent days, but software and AI weighing down the market, and the prospect of cheap money not necessarily coming isn't great for those tech stocks still. The Nasdaq looks the worst to me. I mean, I really haven't looked at charts in a few days until this morning. The Nasdaq's probably the worst looking chart on the board of the major equity indexes. I'm curious what you all think here, but that's largely informed by the fact that it also carries a 36.5 IVR, way higher than the S&P, the Dow Jones, or the Russell.
That it does. Hold on, I'm going to go. There we go.
Well, there's just like quite a few NASDAQ stocks that have really taken a hit more than like the Dow stocks, or I don't know. What do you think?
The Nasdaq has taken a hit over the Dow stocks, and even as a matter of fact, like you watch.
Wait, let's go to the Nasdaq. Can we go to the Nasdaq?
I'm sorry. I was just looking at it on the side, so I'm just going to go to triple Qs just because it's easiest.
Sure.
But yeah, that seems to be taking the biggest hit. Not like the Dow, unlike the Dow. Wait, Chris, can I ask you a question while I've got you? Because you are our macro guy. What was the CPI print?
It came in just slightly under expectations, 0.2% versus 0.3% expected. The core reading came right in line at 0.3%, if I recall correctly. And yes, I got that correct. And the year-over-years were in line at 2.5% of the core, 2.4 versus 2.5% of the headline. So slightly lower, but it's still above where the Fed's desired target of 2%. And, you could just do a little bit of math here. If you take a 0.2% month-over-month run rate and you extrapolate that over 12 months, over the course of the year, inflation would still be slightly above 2%. So the Fed's sweet number is a 0.18% month-over-month run rate of inflation. Obviously, nothing's ever going to work out perfectly for them. So I'd still like to see it come down a little bit more before they can credibly argue that rate cuts are necessary. And I think for most people out there, they could probably feel why rate cuts are necessary. Consumer confidence right now is giving you that K-shaped reading where if you're a high income earner, you're feeling pretty good about things. If you're a low income earner, you're not. And lower rates would certainly help people at the lower income rungs right now, even if it would do things like inflate the price of financial assets. So rate cuts may be necessary for a larger part of the economy than what the broader macro narrative and numbers are indicating here right now, because it feels pretty hollow when you look at some of the sentiment data.
No, is this what you expected from the CPI print, number one? And do you think that the market reacted as it should have?
Yeah, the stability is good. I think after what it was a pretty rough day, the past few sessions, we actually we haven't exactly been trading higher here, and vol's been expanding. Seeing that CPI directionally is steadying, if not coming in a little bit softer than anticipation, is good enough for the market right now to stop getting panicked about maybe the Fed not being able to cut rates again this cycle. There are a few macro people that I follow who think that the next move the Fed's going to do is hike, which is they're just not going to end up cutting this year because the economy is too strong, right? And that's not a problem for stocks. We've seen the stock market rally when the economy is so good that the Fed can't cut. But
where Chris, Liz and I are much older than you are, and we lived through decades where rates were high and nobody was, I don't want to say crying and crying and crying for the Fed to cut rates, but I don't see they usually need to keep rates high enough so if there's a real problem, they have room to cut them. So if they start cutting them when there's not a real problem, what are they going to do when there's a problem?
QE. We've all seen the money printer memes. They have other tools that they can use to help us. To help the economy. What did I say?
To help us.
What did I say? Traders.
I mean, that's pretty funny. It's pretty funny. Okay, so now, what the heck? And I know you don't have the answer to this, but I just want to hear Chris Vecchio's rationale behind this. What the heck happened the last 2 days
in the market?
In the market, Chris.
Oh, because actually, plenty's happened the last 2 days.
What the heck happened in the market the last 2 days? What the heck?
You would take I just looking around for a quick second. The earnings haven't been terrible. They also haven't been great. The news flow about OpenAI, about Anthropic, and some of these valuations, maybe that's drawing some concern.
You think that's why we'll open up and then fall?
Well, maybe. I'm not sure in the Tom camp about that, but I don't know if you guys saw, there was a story yesterday about this company that works in AI logistics. I suppose that's what it's called. I just got to pull this up real quick on my screen here because it was just such a ridiculous headline.
We love ridiculous headlines.
Yeah, apparently a company had come out and said that it was working in the AI logistics space, and I think maybe it makes puzzles or
puzzles.
Yeah. Yeah, just I have to check this out from. Okay, here we go. Earlier on Thursday, AI company Algorithm Holdings said its semi-cap platform and live customer deployments was helping its customers' internal operations to scale freight volumes by 300 to 400% without a corresponding increase in operational headcount. Shares of the company soared 26%. Old Dominion, XPO, right? The logistics and transportation sector, which has really been holding up the market. If you're like a Dow Transports theorist, DJT, the OG DJT, had been breaking out to new highs over the past few weeks. This company apparently has nothing to do with is happening. This company, Algorithm Holdings, is a Florida-based penny stock company that sells karaoke machines.
Oh my God, I did see this headline. The karaoke machine headline.
Yeah, and it's kind of reminiscent of what was happening during the Bitcoin blockchain craze in the late 2010s. I like to go back to the Long Island Blockchain Company, which was a beverage distributor that rebranded itself, and its stock price went up triple digits over the span of a few days. Of course, it was nonsense. But when you have these companies that are able to just rebrand and make claims that they're doing things, and it's like, oh my gosh, no one's even bothering to look at the primary line of business. It's clearly a market that's like on tenterhooks and is very skittish right now. So what triggered it this week? VIX didn't really go up for any reason from my read of things. I've only been following tangentially, but isn't that the more concerning problem when you get this like tangle of reasons for why volatility may be coming up, and it's not just one short-lived thing that causes a spike that you can fade, but it feels a little bit more complex. This one feels a little bit different than other volatility rises, just from being more of a sideline participant over the past 5 trading sessions.
I would say you, Jenny, but I agree. This does feel different.
But if you look at the NASDAQ and you look at the SPY, their charts look similar, and they've just been choppy for months. They've been in that range, right? We've been in this range for months. If the market stays like this, if we continue to just chop in this range, that's actually a really good market for option traders.
Especially with the inflated volatility, that is true.
Right. We get the inflated vol, but we never go too far out of this range. If you look at the triple Qs, we've been in this range since what? The fall?
September, October for both of them.
Right. So what's it going to take to break out of this range one way or the other?
No, but I do agree with Chris. This feels different. This feels different.
Well, that's why I was gonna say, like, why isn't this working and why does it feel different? 2 weeks ago, I raised the point that maybe what it's going to take for stocks to rally is for the metals fever to break. At a certain point, if gold and silver reach a certain point where traders say, the risk-adjusted returns on these rocks is not as good as buying the stock market, which in fairness, those shiny rocks have outperformed the S&P 500 since the turn of the millennium. So maybe we shouldn't just call them shiny rocks anymore. I digress. The point that I'm getting at, though, is maybe we would reach that point, and then we did see metals break down. And while stocks like S&P made another attempt at 7K, and it's failed there. And so if that thesis were correct, one of two things should have happened. Well, stocks didn't break higher, so metals should have rebounded back. Or if metals are staying down, stocks should be up. And neither of those two things have occurred. So it seems like that's a little bit more capital flight than capital reallocation that's been transpiring. And then with this kind of slow, steady rise in the VIX without any meaningful catalyst, no big earnings report or piece of macro data, are we really bent out of shape that the economy is still adding jobs after a year where the revision showed that we actually added 1 million fewer jobs than we initially estimated in 2025? I don't know. It feels weird.
Maybe this, level of VIX, this increased VIX with no real reason, is a tell that we've got a bigger chance of the market falling than going up, because the VIX is usually right.
The VIX,
we are here at that time of the year. There is a seasonal window, and at the start of the month, I pointed this out, and we kind of blew the first half of the month. But if there is a window with which the S&P and the Nasdaq have a chance to rise in February, it's usually through Valentine's Day. And for better or worse, that being tomorrow, the market's closed. Today is that halfway point of February. We didn't really get that rally. The second half of February onwards, if you look at the S&P and the Nasdaq past 10, 20 years, S&P going back to 1950 even, it's that second half of February into those first 10 days of March that are usually rough. And then you get this window from mid-March through effectively the summer where the market picks itself up and then rallies into the summer months. But this is now like that 3 or 4 week window where stocks tend to suffer and volatility has one of its two big spikes during the year, if you look at the seasonals, and the other one, of course, coming in the fall. So having not capitalized on positive tailwinds, okay, that's not great. And we could add in some other like fun facts. Okay, we didn't really have the Santa Claus rally this year, and years in which we don't have a Santa Claus rally, the rest of the year produces very meager returns. It's also year 2 of a president's term, and midterms, the first go around, have not been great for stock markets. It does run a little bit counter to year 6 of a president's term, which you kind of could maybe chalk up to Trump right now, which would be very good. But you could put together a narrative right now when I'm looking at like the data that I look at and say the table isn't set comfortably for bulls here, and fading the VIX at 20 or 21 for no clear catalyst for why it's risen. Maybe be a little bit more patient.
I like your fun facts, Chris. I like your fun facts. Those are
I love having Chris on. It's been our pleasure, Chris. I don't want you to be late for school drop off.
Okay, I got one more question for you though, Chris, because I think I've heard
7:55.
Liz, I know.
I have time. I have 5
Bullish or bearish metals?
I feel like I have a personality disorder when it comes to metals because I've been so heavily invested and long in them, and I've been joking like I renamed my son Luke Silver. So I'm still very constructive on the space because despite the egregious and meteoric run up at the start of this year, the reasons why I've been long to me have not changed, and it's because of what's going on in the global economy with respect to the U.S. and these trade deals, and how central banks abroad are just continuing to buy gold left and right. So there is a floor underneath these markets, as far as I'm concerned. Volatility hasn't come out of them. A period of stability here, given the meteoric rise, it wouldn't be the end of the world. And I'm just sitting pretty. I started the year when gold was at like 4,400 an ounce. I picked up some 5,000, 5,100 call spreads.
I heard that. Yeah.
70 odd days to expiration. So I'm just going to sit on my hands.
She knew you were long. She is too. She just wanted to have someone to be on her side.
I love my shiny rocks. I'll just put it.
Someone on her side.
Listen, you just got to talk to Frank if you're ever feeling lonely about this stuff, okay?
Oh, speaking of.
Happy birthday, Frank. All right, Chris, we're going to take a break and let Chris go. We'll be right back. Everybody stay tuned. Thanks for coming on.
And happy birthday, Frank. All right, thanks, Chris. Jenny, we are back.
Fast market, Liz. Fast market. We've got a busy morning. The time flies during this morning show.
I know. Well, There's lots of segments, lots of people, lots of things handed to us.
I really do enjoy having guests on.
It is fun. I love having a guest on.
Yeah.
So far, Chris Vecchio and Jamal can join our show anytime they'd like.
They're welcome anytime. And we told TP he's welcome every Friday.
Yeah, we did. Does he know he's not on today?
What's today?
Friday.
Oh, you know what? I'll text him that. I'll text him. He's going to be on. TP's going to be on with me next Friday because you are going to be out of town.
I will be out of town. That's correct. He'll be on a full TP show next Friday. All right. But
I am telling TP right now, no Liz and Jenny show today.
Just so he's aware. Oh, I bet we got filled on for 63 cents, which is great. So we let the market come down.
Oh, on that Jade Lizard. Okay.
Yeah, we've got about I think I put it in for 40% profit, which is great. So we can put another IBIT in later. But let's take a look at Fast Market. Are you ready for the first one, Jenny?
Fire them up.
Why it won't go? Oh, there we go.
There we go.
I love the music. Okay, Baidu, sell the 130 puts or go wide with put spreads in March.
Hold on 1 second, please. Because what I think what the viewers see, there we go. Now it's up. Now it's up.
Oh, I didn't know they didn't see it. Sorry about that.
Okay, yeah, here. Now we've got it. All right, go ahead.
So in Baidu, sell the 130 puts or go wide with put spreads in March. There's solid support around that level, and I'd like to take it off before earnings if it's working. This is Sean from Hong Kong.
All right, let's take a look at Baidu.
From Hong Kong, we for sure are taking a look at Baidu. Okay, so then we're going to go back to, hold on, let me get into the platform. Baidu, he wanted March, right?
Yeah, now we're green. Now the market's green. We were down 40, now we're green.
Now we're green. Yeah. Where's the, hold on. I just typed in March.
Cancel crash.
Let me go to the VIX. VIX is still up.
It is.
Mm-hmm. Which makes me a little bit nervous. Okay, so he was looking at put spreads in March. So
he said put naked puts or wide put spreads. Can I see the chart? I like to look at the chart.
You can see anything you want to. There you go.
Uh-huh.
It looks like a lot of other things that has pulled back lately.
Yeah.
Okay, so if we go in now, I would feel more comfortable in a put spread in Baidu because I feel like we've been Baidu'd before, haven't we? Or we've been.
I don't know, but I would feel more comfortable at the 120 level or lower.
So if you're gonna do, he wanted a wide.
God, you can't do a spread there. That market's too wide.
You can't
like on that 110. You see that 110, 85 at $3.
I mean, look at all these: 250 at 385, 140 at 250. We can't trade these as spreads, and we can't trade them as naked options either.
The one, honestly, if I really wanted to be in Baidu, if I really, maybe the one I tried to sell the 115 for $2 mid market there, 115 for $2.
No, it's too wide. Honestly, we're going to have to, we have to stick with liquidity. This is not, we had an entire segment on it this week, so we have to pass.
Right. And maybe as the day goes on, they'll tighten up a little bit. But right now, those markets are very wide. And again, what is going on? I mean, the markets, we're used to like tight markets in so many of these products. And we've been seeing some wide markets this week.
We have been seeing wide markets, especially Baidu. You wouldn't expect it. There are certain products that's already liquidity vetted, and you would think Baidu's one of them.
Yeah, it used to be. Like Baidu used to be something we traded all the time.
Yeah.
I don't know.
Okay, number 2, Jenny, are you ready?
Yes. Path sold. I know I've never traded Path. Sold 10 puts in March. IVR is high and liquidity is decent. Jeff from Miami.
Okay, let's take a look at Path. I don't know what it is.
I don't know. Type it slowly so I can read the name. Well, let's see. Path. No, I don't know what it is. But the 10 puts you're getting.
But take a look at this. So this stock that we don't know, that we'd never traded before, has tighter markets than Baidu in March.
I know, but it's like 55 at 68. And if you look at go to open interest. I was going to say there's no open interest, but that's volume. You could keep Delta up. Just change volume to open interest.
Why can't I see open interest? Oh, there it is.
But you better leave Delta because we're going to need it when we go back into SPX.
Okay, fine. I'll switch it to Delta. Yeah, look at this. So you got a lot of open interest there, and I don't mind it. These are tighter markets. What strikes were they again?
The 10.
10. Okay.
Yeah, we'll jump in with you in Path. Although I feel like if you look at this chart, it's going to be one of those that's gone from like 3 to 10. Oh no, it's gone from 20 to 10.
Look at this. I'm for sure in Path.
We're in.
Okay, mid-market. Let's see if we can get filled. Why is our offer going out? Oh, there we go.
Yeah, it's there.
Okay, we'll
You know
leave
what's so funny? I traded something yesterday, and it was. Now I've heard of things being quoted in nickels, but this was quoted in dimes. You couldn't even get it to nickel.
Really? Was it very expensive?
I can't remember what it was, but I put in a trade in something and I was like, you got to be kidding me. I'll see if I can find it. But I couldn't believe it was quoted in dimes, not nickels.
That is pretty crazy. So a lot of times they're quoted in nickels, traded in pennies. Spoos are down 14 again. I'm going to go back. So we got
what a wild day.
I know it is a wild day, but I mean, that VIX being up said it's still a price to move. Okay, number 3.
Could it have been coin? Could coin have been quoted in nickels and dimes? I don't know.
It's a real possibility. Okay, so next up is Roblox.
Back near 60, sell the 60, 70, 75 Jade Lizard for a $5 credit. No upside risk. Chris from Austin.
I love a good Jade Lizard.
60, 70, 75. Sure.
Okay, are we still in March?
Yeah, it's got to be March.
RBLX. So I'm going to go to March. Yeah, there's no earnings on the horizon. So 60, 70, 75. Now this has 250 wide strikes, so we could narrow this thing a bit. Here's what I'm
suggesting. If we wanted to narrow the call spread, and that gives us more room. Roblox uses a lot of buying power though for a $63 product.
That it does. Here, so I'm just going to take this up to the 57.5, and I'm going to buy. So we're only going to use $700. We still have, this is 250 wide, and we're collecting almost 290, so 40 cents over.
Sure, I think that looks good.
Okay, shipping it. And that's good. You know what's crazy is we're not getting filled. I'm in this path and in Roblox. We'll go in after the fact and kind of adjust accordingly.
We can make adjustments. Okay, so that is Roblox. Amazon, Walmart's PE is almost twice Amazon's. That's crazy. I'd rather own Amazon long term, maybe short a 35 delta put spread or run a June. Even the other day, someone was talking about how IBM's PE was greater than. Do you remember this?
No,
I can't. It might have been. Can't remember what they were comparing IBM to, but some of these are getting nuts. Walmart's PE is almost twice of Amazon's. I'd rather own Amazon long term, maybe short a 35 delta put spread, or run a June-March poor man's covered call, or even we could take a look at a diagonal. Let's just take a look at Amazon for a bullish trade.
So Amazon, we don't have anything in. I am long Amazon. I usually have a diagonal in here. So Amazon has been down. I cannot look at that.
Yeah.
So I'm just going to go through theirs because they were looking at a 35 delta put, which would be right here. So 35 delta put, you're using $3,000, you're getting $450. That is not a bad return on capital. We're going to get a little bit more creative than that because we don't have that much capital.
I think at this point I do a March-April diagonal.
I do not mind a March-April diagonal. So March, if you're doing a March-April, the nearer term is March. So you're selling in that. You can go with the 215, right? So you're collecting at least 276 in premium. And then I'm going to go to the April.
So you've got the 200, 215 for 840, half the width, which is about what we expect. And then you've got another sale in there.
There's quite a few sales if you wanted to go weekly.
But maybe we just do a put spread. 27 rank. Maybe we just keep it simple and do a put spread. $5 wide for $1.
Let's take a look. In March, can we get a $5 wide for $1? Yeah.
Yeah. I mean, I know we would love $1.60. That's a third, but I know you can't really. That's almost impossible.
No, and keep in mind, there's 35 days left versus 45, so there's going to be a little bit less in there. So I'm shipping it. We turned it into something else. Ooh, we're filled. Okay. Amazon, thank you very much. I didn't mean to sound so downtrodden. Jack from Philly, we appreciate that Amazon trade.
Well, you're in here. I'm going to be pushing these trades out as we're getting out.
Number 5, SPX. What time is it? It is 5 to 9. Yesterday was ugly across the board with elevated IV today. Sticking to a routine iron condor feels like the right one. Daniel from Boston. It's almost as if we planted this here and we didn't. So I'm going to go back in and reprice out our SPX iron condor. So
the one, yeah, like price out the one we pulled up and see the.
So I have it still. I still have it pulled up. The exact strikes, because I didn't clear it out yet. At 8:30 in the morning, it was trading for 625, and now it's trading for 680. Now the strikes are going to be different because if you open this up, they're not that crazy.
No, it's not that different. It's not that different. Your call is still around the 20 delta, and go down to the put side.
And the put side is still the 20 delta.
20 delta.
And so VIX is higher. So at this morning, this was trading for 625. Now it's trading for 680, 665.
That's crazy. And the market's still right about where it was.
That is not what you're used to seeing, right?
So this elevation in VIX, this rise in the VIX doesn't bode well for what's to come today.
No. And look at that. We've been down 40, then unchanged, now down 20.
I know.
And so we talked about that a little bit. On a day like today, I know we're on air. I'm a little bit more apprehensive to be selling those put spreads because we're all over the place.
I agree. The fact that VIX is up $1, it might be a day where that is giving me a tell that, this might be a down day, and I don't know if I'd do it.
I know. So looking at those iron condors, I mean, I'm glad we still had it up and priced because the 20 delta, $20 wide is usually kind of where you land. It's interesting that if you would have done it in the morning, I would have said, if I would have done this morning, I would have said,
by now I would think even with the movement, it would be at least 30 cents less.
With the same strikes, for sure. Yes. And in fact, it's the opposite. It's, 45 cents more.
Right.
So it's pretty interesting. Okay. So then thank you very much, Daniel from Boston.
Okay, Shop. It had a big reversal after earnings, not overly bullish, but with 40% IV rank, there's premium to sell. Looking at the 95-130 strangle in March in Shop. Tom from Raleigh.
That seems wide, 95.30 in March.
Didn't you say Shop had a big move up on earnings?
No, Shop went, look at this. So let me show you this day. This was earnings, I think, right? So Shop opened, where did it opened?
140.
140. And then it closed 118 and its low was 109. That was 1 day move. It opened up and then it was a huge wide move. So that was kind of crazy. Wait, but let me go back because I just went that. They're looking 95-130 strangle in March.
Yeah, I'm too afraid to do a strangle in Shop.
Oh, so am I, but I'm going to price it out for this guy.
130. He had his call in. He had the call lower one strike.
So, 130. Sorry, Tom, I got to tell you, here's what I love about it, Tom. You have found a very good return on capital in a strangle.
If it doesn't blow through one of the strikes.
Correct. Like I said, I was like, I'm scared too, but I'm going to price this out for Tom. But so if you look at this isn't something that I would want to do because you've seen these wild swings. So he was 130, and what was that? 95, right?
95.
So within this range. So it was just 95 back here. 130, it was literally 133 days
3 days ago. 3 days ago. Again, Tony from Mexico has a saying, you got to risk it to get the biscuit.
You got to risk it to get the biscuit. What I could do in Shop is something like this.
Absolutely. Let's throw on the $5 wide for $1.89. I can...
That's a number I can live with. I agree. I mean, it was funny because you were saying I'm too scared. I was like, me too, but we got to price it out for Tom from Raleigh. Okay, so we're working that. Aren't we?
189 was a lot for that $5 wide.
Yeah, we'll see if we get it. This is AJW from LA. There's a whole lot of letters there. AJW from LA, PayPal, Johnny Trade, just trying to engage in PayPal, thinking the March 37 put and 42 call for a simple strangle.
All right, let's go to PayPal.
No, aren't we in PayPal?
No, we're in Shop. Oh, you mean aren't we in it?
Yeah.
yeah. We just have the 40 put. So we've got the 40 put. What
did we sell it for? We sold it for 119.
119.
No.
We're just going to leave our put. 36 rank. If you want to sell premium in PayPal, we just have a put. I don't want to add on a call.
No, I kind of agree with you. Okay, so I'm going to go back. 7. Next. C.
Citigroup. Eric from
When I go like this, do you see it as a C or does it look like a backwards C?
Oh, I see it as a C.
Oh, good. Because it's backwards to me. I was just wondering if I'm like mirrored.
Okay.
So small positive delta iron condor, 95, 105, $10 wide. Oh, and then a $5 wide call spread.
95, 105 put spread, $10 wide, and a $5 wide call spread.
Yeah.
Yeah, 95, 105. So $10 wide put spread, $5 wide call spread. In March, it was the 120, 125 and the 95, 105. But Citigroup is so high.
I don't
let's take a look at the chart, right? Oh no, it fell. Okay, yeah.
It fell.
Mm-hmm.
It fell. It's got a 38 rank.
It's funny because when Logan turned 18 and opened his account, Citigroup was one of the stocks that he put in his account, and it was literally, I think, when he turned 18 and put Citigroup in his account, it was 53.
Oh, I hope he still has it.
No.
No, like I said, it's a little tight. It has fallen. It's got a 38 rank. We don't know which direction it's going. I just did a little tweak where I bought it from the 95 to the 97.5 because I saw that these were only a little bit more expensive. Are you okay with that? So we got a chicken on the top. You got a chicken on the top, and you got 250 on the downside.
I don't know. I mean, I don't love the risk to the downside in Citigroup.
I don't love the risk to the downside either, but it's fast market. It's a very small level of commitment. I'm going to see if we can get filled mid-market. If we get filled mid-market, great. If not, we're not going to pick it up. Okay.
I feel like there's easier places to make money than Citigroup.
I think so too, but with this is the segment we're with right now. Okay. Micron, based on today's action, I don't see MU dropping much into earnings. Considering a $20 delta, $20 wide iron condor in March. This is
Brian from Denver. Sure. Okay. 20 delta iron condor in March. Micron. You're going through earnings.
Yeah.
He said he doesn't see it moving much through earnings. So, but I don't think you're gonna get out of this between now and earnings. So, like, I wouldn't throw in an iron condor.
So this is I don't think if you are this is a hill I'm willing to stand on. I know a lot of people will because they don't think it's going to move going through earnings, but then this is your earnings trade because it's like you're running on sand. Can you get from point A to point B? Yes, but it's a lot harder and you're going to work much harder to get that decay that you're looking for.
Listen, if Micron drops, you're not getting out of this. If Micron goes up, you're not getting out of this. If Micron stays right here, you're still not getting out of this.
You're still not getting out of it.
You're still not getting out of this.
Yeah, so you might as well give yourself a better footing and do it right before earnings.
Yeah, like if you want just one side, then a move in Micron will get you out of that trade. But to put on both sides and just sit here and wait for earnings, I know there's a 78 rank right now, so there is a chance that you'll get out of this because the 78 rank is really high. It's possible there's only a 50 rank when earnings come. So there's a chance you could take a little bit of money out of this, but you're not going to take a lot out of it. I don't think it's worth the hassle of having this on your sheets for so long.
I kind of agree. And that was one of our questions today from Confirm and Send too. Okay, so thank you very much, Brian from Denver, Colorado. Oh, Jenny.
Andrew from Puerto Rico, Oklo sitting at long-term support. Good, I hope so. Going big and selling the 55 puts in March. So Andrew from Puerto Rico, I'm in it.
Are you Andrew from Puerto Rico, Jenny?
Hey, I am Jenny Andrews.
It's true. Okay, OKLO.
I believe we have something. Yes, we do in March. We're with you. Look at that.
It's you. You're.
How about selling those 55 puts in March? We have
them. Filming from Puerto Rico.
I wish.
I know. Yes, we do. We like the 55 puts from March. I'm just going to take a look at our position and see what price they were when we put them on. Oh, so we're
right here. Yeah,
right here. So yes, we are right there with the 55 puts in March. So I'm glad about that. Okay.
Well, so we're still working Path. We're still working Roblox.
I think we got to let these things come to us because I'm kind of going with, and not that they're earnings trades because I don't like paying up for an earnings trade. Let's see if these come to us. If they don't, then they're not meant to be.
What did we get filled on? Do you want to pop out this side and see what we got filled on?
Activity, all symbols today. Okay. So today, Amazon.
Or just from the fast market.
And that's it. Amazon.
Just Amazon. 1 out of 10. Girls, you got a 1 out of 10.
Here, I'll do this one. I'm going to replace. 57 final offer. Path. All right. Okay.
2 out of 10.
2 out of 10.
No, but a lot of them we already had.
Shop, I'm taking it down by 1 penny.
Yeah, take shop down by.
No, these markets are wide, and 2 of them we threw out because of wide markets, and this is wide markets.
You know, we take it down by a nickel.
Fine.
We need at least like a 30%.
Yeah. So that is, we took it down by a nickel. Other than that, Roblox, I don't want to take this down by that many cents. Look at this, 196.
No, I know.
No, the markets are too wide. So Jenny,
we're in a very strange market. To have all these wide markets, it's bizarre to me. Every day on the train to Liz, I would say like, these markets are wide. It's 8:30. I'm trying to make trades, and these markets are wide. What is going on with the world?
I have no idea, and it's pretty crazy because we are going back up. We were down, and now we're going back to unchanged with the spoon.
I know, and it's 908, and we didn't put on the SPX trade, but we talked about with the VIX up $1. I don't know if I would.
I don't know that I would either. Let's take a look at the VIX before we take a break, and then we'll take a quick 90-second break. VIX is still up.
I know, it's weird. It's weird.
You know what I'm gonna do? Hold on. Just because it's not up as much as it was, I want to take a look at this because I kept it up. So now look at this, Jenny. Now it's 585. This is what we should have seen.
Right, instead of up to 680.
Yeah, that was why we were both a little bit gun shy on that when we had the priced out and kept it up.
Right. So
all right. So let's take a
got
quick 90-second break. Sorry.
We've got a market measures to get to when we come back. Stay tuned, everybody.
Jenny, we're back again.
We are back. We are back. The morning is flying by. Market was green.
Market is officially green. We're up 11. I keep telling my dog, Will Ferrell, he's got 50 minutes before his potty break. So just hold tight, little guy. Hold tight, little guy.
I said, I've got 2 dogs sitting here with me. I'm trying not to move too much, not to make too much noise. I don't want them to wake up.
Yeah, that's true. Shh. Be very, very quiet. You know what I'm excited about, Jenny? We have a 0DTE SPX study from our beloved Jacob today.
Jacob, we miss you. We love your studies.
We do. We love them.
And when I say we miss you, that's because the boys get these now.
I know. We're really trying to get that changed. Keep going. I have 2 things to look at real quick. Well,
okay, we've got a market measures sponsored by the SIBO. We love market measures. We love Jacob, and we love the SIBO. So 3 of our favorites.
Okay, hold on. That's what I thought. This is what I was looking up. Oh no, never mind. I thought our ES got hit when we got up.
How far out to win when you're wrong? How far out to win when you are wrong?
0DTE.
You ready for this, Liz?
I'm ready. Every 0DTE trader knows the pain. Yes, it's true. You sell puts at the open, SPX gaps down, and suddenly you're fighting to break even. Is he talking about today?
This sounds like Wednesday, this sounds like the last few days where our put spreads and you could add spread. You sell put spreads because most people, I don't know anyone selling naked SPX puts. Most people are selling spreads.
Yeah,
like in our realm, in our world of traders.
Because 0DTEs allow you to do spreads. It could be, you can be synthetic, but it's going to be, you can be wide, but nobody I know is selling 0DTEs.
All right, your initial distance out of the money determines how much room you have when the market moves against you.
Okay, that makes sense. And we were just kind of looking at that with the 20 delta. Selling far out of the money feels safe, but are you giving up too much premium? Selling the at the money premium pays well, but can you survive the wrong days? I need to put my regular punctuation in there.
On days when direction works against you, put spreads on red days, call spreads on green days, which strikes actually stay profitable.
Ooh, interesting.
How far out to win? So how far out we're looking at, 20 delta, 30 delta, 20 delta, 15 delta. We'll see. How far out?
You have to make sure you're making enough. Okay, so here's the study. Using nearly 3 years of data in SPX 0DTE options collected every 10 minutes.
examine selling 0DT $20 wide vertical spreads at market open using short strikes ranging from 50 delta straddles through far out of the money 15 delta strikes and closing winners if they reached 15%. Now, 15% of max profit is like nothing. So we saw that iron condor this morning when we looked at it, and it was, a little over $600. Well, 15% on that is just going to be $90. So that's not much. You're not taking much out of those.
Yes. So they close everything at 15%, right? Am I reading that right? Okay, everything at 15%. So analyze the performance only for days that went against you. This might be Kai. I don't know who wrote this. Because Jacob usually does them at 9, unless he does it differently for them.
Yeah, maybe Kai did, and we love Kai too. We love Kai too. He puts together some great stuff too. So this might be from him.
So analyze the performance for days that only went against you. And I love that that's in red. Put spreads on days SPX closed lower and then opened, and call spreads when the SPX closed higher.
And I feel like this could be Kai because Kai has done studies where you're collecting only 15%. That, and I know, and lots of our viewers are trading these 0DTs, and they're looking for more than 15%. I know Jack Tucker is usually looking for a 40%.
So, and then the next line says, repeated the analysis using 25 and 35% of profit targets for confirmation.
Okay. All right. All trades were assumed to exercise at mid price. All times are Chicago. And next.
Okay. Closed at 15%. Selling puts on down days. I just got to get my bearings. So you're selling puts, but this is just puts, not put spreads, Jenny.
This is just the puts, and we're looking at short strike. And obviously the 15 delta, 20 delta, 25 delta all have higher win percentages than the 50 delta or the 40 delta. Mean daily P&L.
It doesn't turn
over 3 years.
It doesn't turn a corner until you get to the 25 deltas. You're negative until you go farther out in time.
Oh, this is on down days. So this
only
is
on down days.
Only on down days.
That was in red. It was only on down days.
Which you saw us a little bit like nervous about selling our put spread today because we would you have called today a down day? It started down. We started down.
So I don't know what you call a down day or what you don't call a down day. But the funny thing is taking a look at this, I usually do the 50 delta on all days. I usually do the 50 delta short strike, but I do a spread.
And you're looking for more than 15%.
And I look for 50%. So,
but I think these numbers are going to change when you are looking for more than 15%, because I think 15% is so low. Like we saw with that $20 white iron condor, if you're taking 15%, so you're taking less than $100 out of it, you have one full loss where you lose $1,500. You need 15 winners to make up for one loss. That's the difference between this and like what you and I have been doing, which is a narrower spread. We've got it doesn't take many winners to make up a loss.
Yeah, we've got a 50% drawdown, so it's just going to take 2 wins to make up for it.
Okay.
Is this number 3? Next one. There we go.
Now close at 25%. It's getting worse.
It did get worse. All the numbers got worse, and you don't turn the corner until you're getting down to the short strike. But now this is did it
ES?
say they did it
was
say,
that our ES?
No. It was not our ES. It was our Citigroup. Does it say what? Did they ever close it at a percentage of max loss, or they just let it go to expiration?
No, it sounds like close to 25% are left. Okay, let's move on to the next slide, please. Now here closed at 35%. That 50 delta does not look good. The 40 delta does not look good. Honestly,
I'm telling you, if you're closing it for 30%, you need the 20 delta, which is what all the studies have been on, is the 20 delta.
Yeah. 20 delta is looking okay. But that's not great considering the risk you have in the trade. Like mean daily P&L, $25 for a $20 wide.
So, and keep in mind, you got to cut it in half because this is just the puts. So this is selling put spreads on down days. So if we were getting 6, you're getting 3. So you're risking $1,700 on down days.
Like yeah, I see what you're saying.
Which is a lot of risk.
Okay, so far I don't see anything jumping out at me that looks like I got to do this trade.
No. All right, let's go to the next one. Whoa.
And we have, this isn't surprising because
you know what? It's jumping out at me. Just do the puts.
what we have seen in other studies. Remember the one where if the market's down this much or up this much, or what happened on up days? The up days continued their rally and would blow through the calls, and that's what we're seeing here. We could just move on to the next slide.
It's gonna get worse. It's going to get way worse, right? Because if you close at 15%, yes, this is getting worse, because then they go 15%, then they go 25%, then they go 30%, and it should be getting worse and worse. They're all negative all across the board. And we have had studies like this before where I'm sick of getting ruined to the upside.
Because when we've had rallies, they'll start out slow and then build as the day goes on. Up 20, up 30, up 40, up 50, and then we're having quite the green day. We've had a lot of those in the last 3 years, and this is just 3 years of studies. Okay, let's see slide 8. Let's see when they combine them to the iron condor.
Okay, selling. This is still it's getting worse, which we expect to see. So at 35%, it should be worse. And then, do they combine? I don't think they combine them.
And let's see at the final slide, 9 of 9.
No, I think 9 of 9. No, that's the takeaways. Yeah. Okay, there we go.
Okay, as expected. Yeah, sure. Well, let's go to the takeaways. None of these are good. Nothing as expected. Directional at the money.
But you know what's crazy? Before we even get to the takeaways, I know they gave us the puts first. So they gave us the puts first, and none of them were glaringly obvious, jump off the table. But we have to keep in mind, Jenny, before we get to these takeaways, we have to keep in mind that those were during only down days, and the other ones were during only up days. You got to keep that in mind. Those are the worst, not the worst case scenarios, but they're giving you the worst case scenario for just those, right? And so they gave us the puts first, and none of those were glaringly obvious. But if you would have put the puts second and the calls first, we would have been like, just do the puts.
Or what about on a down day, just sell the call spreads, or on an up day, just sell the put spreads?
Yeah, they didn't put that in there.
So as expected, directional at the money premium sellers took big losses when the market moved against them.
Yes. However, traders who sold puts around 20 delta were able to profit even on days when SPX fell. That's what I was going to say, is if they would have put those studies in reverse and given us the calls first, we would have said 20 delta. But when you're looking at it, the profit potential was so little, because somebody in the chat even said this. When you're taking in $3 and you're risking 17, and you're taking 15% winner, if you're taking 15% of $3, that's not even $90.
There's a fine line between, you're collecting enough, taking a big enough profit target so that you can't set yourself up so that you need 15 winners to offset one loser. It just doesn't work like that. It's not going to work out.
That's the common sense side. And I think on paper, when you say 20 deltas wide, just the puts, taking 15%, you're literally taking $45 out of that. You're going to take $45 out of that trade for the risk of 1,700.
Yeah.
Yeah. Yeah.
Yeah. With the overall upward tear of SPX, there has been no way to profit from only selling calls, but using 30 delta or 20 delta, we're able to cushion the pain.
And we've seen studies like this from Jacob, and that's why we lean towards just the puts, because I'd rather take the loss on the aggressive puts than have those calls in there.
But maybe my lesson here is don't do them on the down days.
Yeah. I mean, when you say this, but hindsight's always 20/20. I know we're saying, is it officially a down day? We don't know. I mean, we're red right now. It's an unchanged market. Is it when we open down, then don't do it? Or is it, this is a massive down move? So when you looked at the last couple days, and we'll get to the last takeaway, the last couple days, even was it yesterday and the day before, we opened up.
You're right.
Then, do you know what I'm saying? We opened up and then we dropped like a hammer.
I know.
And we dropped like a hammer after 9 o'clock, which I thought was crazy.
And I've been good with my SPX, trying to do, my put spreads, or like the narrow, risking very little, put them on around 905, set my profit target. I've been good. And I'll say, like, I'm still up, but this week took a little hit. But this week I got carried away. I kept trading more. Sometimes when I'm down on it, I keep trading more and more zero DTs, trying to make back my loss.
Yeah. I mean, I think we're getting a rally. Bitcoin seems to have rallied. Coinbase seems to have rallied.
If Bitcoin rallies, the market will rally. The market seems to follow Bitcoin, I think. Well,
Bitcoin is rallying and SPOOs are still slightly unchanged, but that's okay. The closer to the at the money, the higher your profit targets, the more you will make and the market moves. So that's our takeaways.
This was a tricky one because, but again, it was on down days or up days. So if you want, my takeaway is I'm not going to do those put spreads on big down days.
I know, but so that my question was, and I would like to know who created the study, was when you're doing we did the put spreads. When you did the put spreads at 8:30 when we were on the train, market was up 20. And then I did the put spreads. We were only up 13 at 9 o'clock. We were down 105 by the end of the day.
Yeah, but that's like one strange day.
Yeah.
It's not unusual. It's not one strange day. So if you have one or two strange days, that's why I like the less risk. One strange day or 2 odd days, it's not taking out 15 days of profits.
Correct. That's why I do like the lower drawdown.
Mm-hmm. All right. We're going to take a quick break. And when we have come back, are going to be joined from someone from the trade desk.
We are. And we can jump in the platform too. So we'll be right back in 90 seconds.
Stay tuned.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. Cboe is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the Cboe's SPX pit. Watch Liz and Jenny live from the Cboe, only on tastylive.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and it is a fantastic Friday. E-minis up 35, NASDAQ up 140, Bitcoin up 3,500. And just as we thought, Coinbase had one of the worst earnings ever recorded in the history of anything Coinbase related, and the stock is up 17%. What do you think about that, Jamal?
Just mooning. It just keeps on going higher. I mean, how about it? What can you say? I don't know how much do you think that this day is coming into play on its move? Because obviously Bitcoin is up 3,000. Like, I wonder if it would be doing this if Bitcoin wasn't up today. You got to wonder.
Yeah, they're definitely highly correlated. I mean, when you look at the numbers, like they reported terrible numbers. But just like we said yesterday, maybe the market was expecting even more of a terrible number, and it was less terrible than expected. So they're mooning the stock, especially because the stock was trading at lows that we haven't seen since April of last year. So I think any glimmer of hope is going to be a bullish sign for any of these crypto stocks. But yeah, it's always surprising when you have such a bad number and then the stock just moves the opposite direction. It just proves that the random nature of earnings is always in play.
The double calendars have worked. I mean, they've been working. They've actually, it's been better than what I normally, like for the longest time, I was just going straight calendar calls, but they've been working. Like, you feel covered on both sides. Wow, this stock just keeps ticking higher. It does not slow down.
Yeah.
It's amazing.
This thing was, and these are really sensitive when you do like the long 7-day, short 0-day.
Yeah.
This morning on the open, when Coinbase was at like 145, it was like a 20-cent winner. And I looked at the extrinsic value, the short option, and it was like $280. So I was like, okay, I'm just going to hold on to this for a little bit. But unfortunately, it just ripped right through the short strike and long strike. So I kind of need a late day sell-off here, closer to 150. But again, this is going to be really sensitive. Like right before we started the show a few minutes ago, this was down $210. Now it's down $190, and the stock hasn't moved too much. So if you get a 10-point sell-off in Coinbase, maybe you get some risk off at the end of the day here, going into the holiday weekend. This can quickly move from a small loser to a pretty big winner. So I'm just going to hold on to it. And then worst case scenario, given that we've got the short option in the money at the 150 strike, I'll probably just close the call side, which is basically trading for a scratch, and then just leave the put side on for next week and see if we get any kind of big reversal. But either way.
Oh, yeah, I'm tripping. I forgot you did the 150s. I got the 160s. I was like $14. I was like, wait, what?
So you're golden. You're golden at 160.
Yeah.
But yeah. Yeah, we'll see. Literally, if this thing goes down to 160 or just slightly below it, the entire package will be probably a scratch or a small win. As we can see, this thing's not moving and it's flying around still, super sensitive. So I'll keep my eye on that. Might even throw in a GTC order just in case there's a big move quickly. But yeah, that's the one thing I've got my eye on today. Other than that,
calendar spreads are far and away my favorite way to play earnings. I mean, I just generally believe most earnings will move. Maybe it's the names that I choose as well. Again, I'm not doing these in like Coke and Pepsi on earnings, right? Like I like doing them in names like this that actually move. And you add the double calendar to it, you cover it on both sides. It's kind of nice, especially if they make the move.
Yeah, and we talked yesterday, we were analyzing the implied volatility crush potential, and we said worst case scenario for this calendar spread is a 30% or more volatility crush, and that's exactly what we got. We got like a 35-36% volatility crush. This 7-day was trading for trading at 108% or something like that. Now it's down to 73. So huge volatility crush in the 7-day, which really just emphasizes where the stock price is relative to your strikes. So Jamal's at 160, looking a lot better than mine at 150. But yeah, any kind of sell off here, you can see this is coming in a little bit as well. But yeah, any kind of sell-off will be golden, and we'll see if it happens at the end of the day today. Other than that, I haven't done anything yet in this portfolio. We're of course seeing a lot of green on the P&L day since we're leaning bullish in a lot of these positions, and we're seeing a nice E-mini Nasdaq Bitcoin rally here. Have you done anything else? Any new trades? Any management?
I have, I think. Nothing major. I think, what did I do? The only thing I did today was ZB. I actually just, I rolled my put spread up to the 118, 116. I still believe, much like we've seen the market bounce back some today, I still believe that this bond situation is going to reverse itself as well. That's at least what I'm playing for. I'm out in April. We'll see what goes on. But just taking a step back, looking at this in general, man, what do we think about this? I'm just looking at like just the last couple of weeks. I'm looking at how we are still, I think, negative on this week. It's another situation where we had some volatility. We had markets move down and we bounced up. This whole AI fear situation, it just keeps popping up. It hits certain industries. This week it hit the commercial real estate, as we talked about. It hit the transportations as well. I mean, I don't know what to make of all of this, like it's just really kind of strange. And again, like I'm glad you brought this up, volatility. That was one of the things I thought was strange too, right? We were in backwardation. This thing was 2085 this morning, and the H was still underneath the G and the J contract, which I thought was, I don't know, kind of telling, meaning like it's not as bad as it seems. It wasn't full on strong backwardation. I mean, are we due for another week like this where everything's fine? Oh my God, AI fears once again. And this time it attacks, who knows what the hell industry it attacks next. And then those names fall. I don't know. I wonder if it's like the sign of something bigger. Liz brought up a good point this morning. The things aren't exactly the same, but they do rhyme at times when we talk about trading. A year ago, around the same time, we were pretty weak and we were off all-time highs, but we were kind of like where we are now. I don't know what are we, like 5% off all-time high? Is that we keep getting rejected at 7,000 in this situation. That wasn't the case last year. But before you know it, a month later, March, April last year, things got uglier. Are we in store for that? Or is this just like some silliness for now? You know what? I guess we were getting it rejected at something 6,100 last time, huh?
Yeah.
I just wonder.
Yeah, I mean, especially to start this year, if we just isolate 2026 right here, like it's been the same story every single week. You get the rally, you get the big crush, you get the reversal to the upside, you get to 7,000, you sell off. You get to 7,000, you sell off. You have a couple days of rally, you sell off. Like it's just been very much the same story, which is why we were saying yesterday, like even though we had that big move, we weren't seeing vol react in the same way. And I think it just comes down to the lack of continuation here. Like if we get the sell off and then we bounce the next day and we do that consistently, then eventually it's the volatility that cried wolf. Like you're just not going to get the vol expansion unless there's a continuation and that pattern breaks. So we said that yesterday. You made that great point yesterday with the H and the J, how yes, the G was above the H, but the H was below the J. So, and now we're back into contango through all of these cycles. So, and this is a 30-point rally, which is not even the biggest rally that we've seen, of course, just erasing a fraction of the move yesterday, and we're still back into contango. So, yeah, I think the market wants to see more of a continuation to the downside in order to really juice up that volatility structure and go into a steeper backwardation. But yeah, until that happens, I'm just going to keep doing the same thing. Any kind of sell-off, look at the vol structure. If it's pretty much flat or not moving as much as you might expect, then I'm going to play for a reversal. And it's happening today. We'll see what happens if it continues through next week.
It doesn't matter if you look at SPX or ES. We're basically between 7,000 and 6,800. So like somewhere in between that 200-point range. I don't know whether I'm supposed to be like taking longs off more often or just, kind of letting it ride. Like, and again, it's funny you brought this up. The dollar is down again, I think, on the week. So it's another week where the dollar is suffering, if you will. It's so strange. This is kind of a strange environment, to be honest with you.
Yeah, things are definitely not as connected as we would expect, at least right now. We're seeing a lot of things kind of move in isolation and move for different reasons. So yeah, kind of a weird week, kind of a weird start to 2026, but yeah, we've navigated it pretty well, and we'll see if we can, get some steam in one direction or another. But
for sure,
good to see Bitcoin ripping higher, almost back to 70,000. I see some questions in the YouTube chat. If you want to join us there, we are streaming live. Just head over to Tasty Live's YouTube channel. You see this video front and center. You can throw in your trade ideas, questions along the right-hand side chat. I've got the Tasty Trade referral program pinned to the top of the chat. If you invite a friend and they deposit $2K or more into a new account, you both get $100. So check out that link pinned to the top of the YouTube chat. We appreciate your support.
Yeah.
I saw a question about IBIT specifically, just because I have this pulled up from Brian. IBIT put got assigned today, 14 days to go. Now that I have shares with an average basis at 40, selling calls seems out of the question. Is there something else you would do? No, I mean, the stock is right at your basis. So I think selling calls is exactly what I do.
So did I. I got assigned. I didn't realize.
There you go. Yeah, getting assigned at 40 is much better than where I'm at. I'm at 65, but that was because I was in this trade from last year and IBIT was way up there. Still a nice trade. And now I just have static delta. But yeah, my basis is down at like 35. My 60 strike is worthless. So I'm just making money equivalent to the move in the stock. So I'm not using any extrinsic value to improve the position right now. But at the same time, like I would rather not sell anything against it until we get closer to like 45, 50 and we see a better recovery here. But if your base is at 40 and you want to be efficient with it, yeah, you can go to March. You can sell the 43 for $1, the 42. You can get into a ratio spread if you want to get more aggressive. So like something like this, like a 40-42 for 50 cents, basically gives you another 100 shares of upside potential between 40 and 42. You still pick up 52 cents. So you improve your basis a little bit to the downside. But if you get a move from up to 42, you ultimately have the same return as if you had another 100 shares between 40 and 42 with a 50-cent kicker. So those would be the two things I'd consider, is just selling a call against it in March up near 42, 43, or getting into a ratio spread. You could do the same thing in a further dated cycle, but there's no April. So you'd have to go to May. I guess you could go to the April 2nd here, but not going to be as liquid as your monthly cycles. And a week from now, when February falls off, or probably before February falls off next week, you're going to get an April monthly cycle. So I would wait until you get that if you're trying to go into April and go from there. But yeah, if your base is at 40, you're looking okay.
Yeah, you are. I like it. I always like those ratio spreads, especially when you already have like a stock position. It's nice.
Yeah. Yeah, we were doing that in crude a little bit with the micro crude position. But this iron condor is looking good so far.
It is. I'm just noticing IVRs in the 30s now. That's good.
Yeah. Seeing some premium come in. 50% profit, which is our target, is around $250, or actually exactly at $250. So we're almost there, and we're right in the middle of the range. So nothing to do with this position for now. And we'll see if we just keep chopping here as foretold.
As much as I was complaining about the week, there are things that we're starting to depend on. I mean, again, we got to bounce back in the market after a volatile day down. Looking at gold and silver, there's not too many times if you had 2 days in a row where they were down. They go down big. They certainly jump up the next day. They might not return exactly from where they were, but still you can rely on that. Oil, this is the reason why I'm bringing it up. We have that iron condor because, again, we're relying on the fact that oil pulls back right after these geopolitical situations. That's why I got the ZB trade. This is the only one that I need to work too. I want that to show me the same thing that some of these other ones are doing. So there are some reliable things so far in this environment. You go to 7,000, you get rejected, et cetera, et cetera, et cetera.
Yeah. And seeing a big continuation here in ZB.
Strong.
Just looking at CME, and we can talk about the CPI report this morning too. So CPI came out basically as expected. core CPI 0.3%, which is right in line. And then the CPI was for January was 0.2% relative to 0.3. So yeah, coming in a little lighter than expected when you look at year over year and the January CPI. And the markets are basically reacting positively that there wasn't a surprise, is how I would categorize that. But
I gotta say though, one of the most confusing reports in the damn world. I mean, the way that they publicize this thing, it kind of doesn't make much sense. Seriously, it's so stupid.
Yeah, it is. It is. All these reports are really just diving into the weeds. But you can glean information from it, especially if you think one thing is being presented, in a certain light where the data might show otherwise if you look at different reports. But yeah, generally speaking, I don't really dive into it unless there's a big expected move. And when I say big, I'm talking like 100 points. We used to see that. We did actually see that yesterday. We saw like a 60-point implied move for one day. But until those are much larger, you're just not going to see the same reaction in the market unless there's a surprise, of course.
I mean, I guess we do have an 85-point range on the day. We'll see how far we keep going up. If it gets bigger, that's effectively can be like a 100-point move. But overall, what they say, inflation was lower year over year. Was it lower month over month? That's the part I didn't really catch. I think overall.
For Jan came in at 0.2 relative to the forecast of 0.3, and the previous was 0.3. So it came in lighter for Jan. And then definitely came in for CPI year over year, it came in much lighter, 2.7% last year, 2.4% this year. So we'll see.
So
we'll see what happens.
We don't necessarily need a rate cut, even though the market wants one, even though the 10-year now is under 4.1.
Yeah, and I'm looking at the FedWatch, the CME FedWatch tool right now, and it looks like for March, over a month from now, 90% chance that we do not get a cut. April, 70% chance that we do not get a cut. June is where you get your first cut that's priced in, 25 basis point cut, 52% chance. So still, that's not a great probability. And then July, same thing, sitting around 3.2535. And then September is when you get your slight probability that we get another cut and we arrive at 3.325. That's a 38% chance. So yeah, it's the same thing every single year. We get to January, there's like 6 cuts priced in, and then we have 1 or 2.
Yeah,
pretty much. That's been the story for the last like 4 years, literally. So yeah, we'll see how it all shakes out, but the markets are going to, of course, react once we get more information, and that will be priced into the FedWatch tool. So always a good thing to check out.
You know what does look ugly today that had earnings is DraftKings. The Liz and the Ginny were both asking me about DraftKings and the like and what's up with there. Obviously, I mean, there's been, I don't know what they said on earnings, but I'm pretty sure a lot of this chart has to do with prediction markets, right? I don't know. Do you trade any of these? I certainly haven't in a while. I don't really intend to. They look ugly.
Yeah, this actually was originally my year-long trade. Because DraftKings has always been kind of in this range between $20 and $50. It spiked up to 70 at one point, but as you can see, I'm just scrolling through recent trading ranges, and it is volatile. This is when I had my year-long trade. It went down to 7. That wasn't fun, but yeah, it's basically been between 20 and 50 for the last couple of years, and it always has 70% implied volatility or around there. So it's a nice trading vehicle if you're willing to take the risk, but definitely super volatile, as you can see from the move today. And yeah, they did announce earnings, and I believe they had some weak numbers. But yeah, I think really it's going to be interesting because the whole narrative now is like, so first of all, like DraftKings, sports betting swept the nation. Every state became legal except for a couple of them for whatever reason or another. But now it's a scenario where it's kind of taking the other side with prediction markets cannibalizing profit potential from the books but the books have different regulations than the prediction markets. So I think you could see a lot change over the next couple of years, because like why would you be able to bet on a game's outcome or a prop bet in the prediction market in a state that's illegal for DraftKings? Like that's going to be a huge to do for the regulatory bodies. And of course that's going to affect one or the other. So we'll see.
Yeah, you can see that's what's happening to these stock. Flutter, FLUT is its counterpart, FanDuel, of course, and that's the other one that's struggling with this as well. Their stock's getting hit also, and has been for a couple of months.
Yep.
Again, looks nice, looks interesting, but not going to trade it. Just like I mentioned with CHRW, CBRE, these things are just not as liquid as you would like.
Yeah. DraftKings, Flutter isn't. DraftKings is more liquid, but if you're trying to get in at multi-year lows, then go for it. But
there it is.
Still plenty of risk.
Indeed.
Let's see. Bought a micro Ethereum. How do I see when I need to roll it to the next contract? Good question. So
yeah, that's a good question.
I think in the future we will do our best to add some of that information in, but ultimately you need to go to the source. So if you just look at micro Ether futures, you'll be able to find the settlement date, and it's ultimately going to be at the end of the month here. The Feb 26 cycle is usually going to be near the end of Feb, which means if you're trying to roll into the next cycle, you have to roll, before it settles to cash. So
yeah, it's in 14 days.
Yeah. And even then, if you forget, like this happens to me all the time, I'll just forget and it'll just settle to cash. Problem with that is if you miss the move that you're looking for, but there's not going to be too much of a difference if you roll now versus later. Just make sure you're rolling before the contract settles.
Good question.
And yeah, looks like the days to expiration column will tell you 14 days. Interesting. Yeah, I don't have that column listed here on mine. Maybe I should add that for these futures products. Did I make the watch list for VIX futures myself? Yes. I know Nick has been trying to get this into the platform for everyone, but it's really easy to do. You just create your own watch list, and then you just go down the list and type in the future symbols. You can pull up a list of the future symbols from CME or from any Google search will do the same for you. But yeah, I just manually added this. It takes a couple minutes, and then you can sort from earliest to latest, and then you can see that vol structure. Adobe. Let's see. Adobe Iron Condor. What do we got? 235, 245, 285, 295. 35 days to go. I can tell you right now, I'm not going to love this one because it is in the earnings cycle. 285, 295. So yeah, chicken iron condor, risking one to make one, collecting $5, risking $4. Only problem with this is you have a 44% pop because you're inside the expected move on both sides. So the closer you get to the stock price, the more it just trades like a butterfly. And additionally, because you have the earnings announcement in the March 12th cycle, this trade is not going to move in your favor all that much until after the announcement. But you will realize risk if there's a big move to the downside or upside. So these kind of trades where you're inside the expected move and you're playing for a vol crush, the vol crush isn't going to happen until after earnings. So I would hold off on this until March 12th and then throw this on for earnings. Like I'm willing to bet that this trade at 550 will probably be trading for $5.25 or $5 if Adobe is trading right here on the day of earnings. And anytime you have risk on both sides and you're in an earnings cycle where you're not getting the vol crush until the earnings happen, I'd rather just sell the put spread or just sell the call spread if you want to lean a little directional. That will help you make profit if you get the direction right. But these neutral trades, I always wait until earnings just because you're holding risk with not much return.
Totally agree.
Is an inverted position better to let expire or close before the bell? Well, if you have an inverted position expiring today, both of the options will offset, but you'd have assignment costs on both of those contracts. So if you're trying to get out of the position, you could just buy it back for the intrinsic value of the spread or around there. And buying back those options, if it's an equity, isn't going to cost you anything, where assignment would. So I would just close it prior to the bell if you're trying to exit. Still shorting a put in SLV. Yeah, I mean it's definitely come down. Yeah, we have 87 strike short puts, I believe.
You do, yeah. I have the 75 in March.
The 75 in March. Yeah, I've got the 87, you got the 75. Both of these options still have plenty of extrinsic value, so very little assignment risk here. $150 in mine at 87, $400 in Jamal's at 75. But yeah, still plenty of premium here. Even though it's green today, you can see you've lost a little bit of premium if you look at the net change on these put options into this rally. But still, 65 strike for $3, like you can reduce cost basis by almost 5% of the notional value by just selling that option. So I dig it, especially when you consider this huge drop and the fact that you'll still see violent moves in either direction. You just got to be comfortable with that risk. Ooh, let's do this butterfly. So the question is, would you establish the SPX butterfly hedge today, again, on this up move? Yes. Let's do it. 6,800, 67.66. So literally the one we just closed. We could actually just pull up from my activity.
Yeah.
So the one I closed 14 days to go, I sold it for $750, and it is trading for $750 right now. So still decent. Probably because I sold it when we were down like 70, and then we sold off another 30 points, getting us to like 110 by the end of the day. But yeah, let's get back into this kind of hedge here. And I do like these kind of hedges. So yeah, I have a put spread in here. I have a short put spread to finance a long call spread, 5 points wide. So the nice thing is I can put on this trade. So the 6,800, 67, 66. I have another short put spread in here. So yeah, let's do that. This is going to be interesting. So let's actually look at this curve analysis. Let's get rid of this. And I
love it. You got so many SPX positions.
So many. Let's go to March. Let's go to March 13th. So 1 week prior to expiration. This is my risk profile. So you can see I'm taking on a lot of downside risk because I have these two short put spreads that are 10 points wide. And then I have my long call spreads up here to offset. So kind of a bullish risk profile. Now let's throw on this butterfly. Let's do 6,800, 6,700, 6,600. For $6, 34 days out. Now, if we throw this on, you can see I open up a window of profit potential in the middle here, and I go from a bullish structure to a neutral to bearish structure. Very interesting. However, what if we look sooner? What if we go to 14 days to expiration? much more flat, neutral structure. I like it. So yeah, let's throw this on. And then the nice thing about this trade is if we do get the rally, the short put spreads will lose value. The long call spreads will gain value. And basically what I'll do is I'll close those trades, especially if we get up here, like closer to 70.50, I'll close this one paired with the short put spread. If we get even higher, I'll close that one. And then I'll just have this butterfly on. And this butterfly will probably be trading for $3, $4, even if we get up here to 7,000. So yeah, let's do it. Let's start low, 610.
Yeah.
Oh, instantly filled. Shouldn't have done
that.
Whoa. Hate to see it. But yeah, like we said, love these butterflies. We've always paid like $5 or $6 for them. And if we look at my little order chains here for this year, you can see they've worked out pretty well. If we just isolate these butterflies, made $80 on that one, 150 on that one, $200 on that one. Yeah, love to see it. So yeah, half this year-to-date P&L has been from these downside butterflies, just closing them into those sell-offs. So yeah, nice neutral range here. Plenty of flags, puts and calls and everything in between. But yeah, good day to put it on. Let's see. I use the web platform. What's up?
So can't beat it.
Can't beat it. Gotta love it. Using the web platform when I place a diagonal trade, the curve simulation doesn't show the analysis I see when you do the same. Should I see the desktop to see it properly? No, you can use the web. You just have to, let me pull up the web here on my side screen. You just have to make sure you're looking at Theo. You're probably looking at the expiration graph. So if you're on the web and you throw something on, you have to go to the trade mode curve. And then along the right side, you've got to make sure you're looking at the theoretical P&L. Yeah, so on the bottom where it says analysis with the little microscope, you click that, and then in the zones, you'll see the lines at the top, P&L Theo, P&L expiration, click P&L Theo, and then zones, click Theo, and just isolate whatever trade you're looking at, and that should help that out for you. But if you have an issue with that, just send a screenshot to support@tastytrade.com and they'll be able to troubleshoot for you. What else we got?
Wow, I just realized the Russell is outpacing so strongly today, almost 2%. Didn't see that earlier. Huh?
Yeah, big move. Yeah, it is interesting when you look at these. So like the Russell erasing basically the entire sell-off from yesterday.
Yeah.
The Dow, not even close. Let's call it 25% of the realized move yesterday, and it started lower. The Dow did today. NASDAQ, similar story, erasing about 40% of the realized move yesterday. And then the E-minis erasing about a third of the move realized yesterday. But you can see they wanted to go lower. All these bars, all of these were at 6,800. E-minis are at 6,800 earlier today. And then CPI came out and they ripped higher. So very sensitive market, to be sure.
Sure, yeah.
Yeah, and if we look at these one-day charts, so 7:30, you got the spike, and then in the morning, you got the rally. Let's see. Yeah, 7:30 a.m., you got that spike, and then continuation higher. So lots of sensitivity. Wonder if it's a good day to sell a broken wing butterfly in SPX. You could. So broke wing butterfly is basically just taking on more risk in the credit side versus the debit side. So if you wanted to do like, let's choose a different expiration just so I'm not overlapping in this one so much, but end of March, 46 days to go. Downside, when you set these up, Jamal, do you like to go to the expected move or do you go somewhere else?
I do a lot of, expected move. I always do a lot of things around the expected move. I just feel like there's always ends up being like a strike like that too. I mean, even if you're not, like 6,600, right? Like that's the other part of it. I mean, it's either expected move or like a major strike or zone or something like that.
Yeah. So ultimately a 50-point wide debit spread financed by 100-point wide credit spread. You can see there's better markets here on these round numbers, 6,650, 6,600. But yeah, if we just throw this on, you can pick up almost $6 for something like this. And if we get rid of all these other positions I've got on, we can see in the near term, you want a rally here because you're going to make most of your money from the 6-point wide credit or the $6 credit. But at expiration, your max profit is to the downside. So these type of trades, I like throwing them on. But if we get another 50-point to 100-point rally next week, the first thing I would do is move this 6,500 to the 6,550 and give up some of this credit, pay a debit to make that move, and then you leg into a free butterfly to the downside, remove all that buying power requirement, and go from there. This is still a very large trade. So this is just an example of what you could do to the downside. And then same story to the upside. Into this rally, you could center it around the expected move. Let's call it 7,200, 7,150, 7,200, 7,300. Picking up $2 for a similar situation, but you could slide this down to give yourself some more premium. But yeah, something to consider if you're willing to take the risk. And you can make them smaller. You can do a 5x10 or a 10x20. You're just not going to pick up as much premium. Let's see.
I suggest playing around with the strikes on those, kind of figure out what works for you. And again, like Mike said, see, what kind of credits you can pick up.
Yeah, definitely. Going back to backwardation in VIX futures, is the backwardation of the G contract as telling when it expires next Wednesday? Not really. And I think that's really the point that Jamal was making yesterday. You're always going to see the near-term contract react most violently when there are big moves, because if there is premium in a short-term cycle, that implied volatility is going to be higher. And you see it all the time. Like the reading of implied volatility is going to be higher. If we look at NVIDIA that has earnings at the end of the month, you can see 57% IV, 14 days to go, 54% a little bit later. And even though it has a higher expected move, it's not as high as the difference in time. So 14 days, 14 points, 28 days, 17 points, not 28 points. You would expect to see double if these IVs were the same. And since they're not, you're seeing more premium in the near-term cycle. So yeah, same story with the VIX. Same story with VIX 1 day. Like if there's some kind of binary event that's propping this up, you're going to see that reflected in the VIX 1 day. Or if there's big moves if there's a big move like yesterday, you saw the VIX 1 day pop, and now you're getting the reversal, you're seeing it drop. So yeah, that's why we look at the curve as opposed to just the VIX, because the curve tells you when there is true fear. And Jamal's point yesterday where the H was still lower than the J in yesterday's move, I think that is more telling than the fact that we flattened out and that the G was in slight backwardation. If the H was above J, that's when you have real fear priced into the market, because that's a longer term cycle.
Sitting here looking at this market, and I'm like, we're up 45 points. You brought up NVIDIA. NVIDIA's down. After the 5% move in Apple yesterday, it's still down. So I'm like, what the heck is up? Well, it's the same names we've been talking about. Walmart's up. Costco, bro. Costco. Woo, wow. Yeah. can't stop, won't stop.
Yeah.
XLP is up today, so it's interesting. Another fascinating day. Still a little bit of rotation here. It's not like techs are pushing us back up, and maybe that's why, like you said earlier, we've only erased 1/3 of the move. Maybe because the techs aren't participating as much as you would expect.
Yeah, this is a crazy chart. Super staples.
Just like 7 weeks in a row too. 7 weeks in a row.
But yeah, Amazon, Apple still down. Microsoft chopping around that 400 level. Yeah, I mean, and that's really what's going to be the case. Like, you ask yourself, what's going to bring the E-minis back to 7,000 and above? What's going to bring the NASDAQ back to 26K and above, back to 27K? Like, it's going to be Microsoft going from 400 to 500. It's going to be Apple going from 260 back to 280. It's going to be Amazon going from 200 to 250. Like, that's where you get the moves. When those stocks recover, when this tech AI fear goes away, E-minis are going to be back above 7K. NASDAQ's going to be back to 26K. That's just how it is. But until these highly concentrated products start moving to the upside, you're not going to see the huge rallies that we are accustomed to. You're going to continue to see this chop as we see sector rotations.
Yeah.
Uber. Assigned early on a Feb 20 expiration. How exactly does that work? If I have a long put in the money, can I have it exercised? I assume there was extrinsic value. Yeah, so if you're assigned early in the Feb 20 expiration, you have 7 days to go. It's probably up here. So you probably had like the 80 strike or the 85, something that has no extrinsic value. So the counterparty, it's not some other human. Like, yes, it is technically, but at the same time, you're in a pool. So whenever you're assigned stock, it's because you're in a pool and you need to fulfill the obligation of selling a put. But yes, because you have the long option, even if you had this short put at 80 and you had a long option at 75, a long put that's in the money at 75 is representative of 100 short shares of stock below 75. So even if you have 100 shares at 80, you're totally protected to the downside. And now that you have 100 shares at 80, in this example, if Uber rips higher above 75 and above 80, you can now make more than you could with your short put spread because you have static delta in your 100 shares at 80. So yeah, you can exercise this put, but similar story. If you're exercising the option, you're paying an exercise fee and you're burning this 20 cents of extrinsic value that remains in this option. So I would just sell the put and sell the shares. So if you have 100 shares in your portfolio, if you want to exit the position, you can just put an order in to sell the shares and sell the put at the same time. And once you're filled, the whole position will go away and you'll save yourself a couple of pennies and you'll retain this extrinsic value that's associated in the 75 in this example. In a Costco mess. Oh no.
Costco mess. Oh no.
A whipsaw, I assume. All right. Let's pull this up here. 960 call.
Short, I assume.
Yeah. Short 960 call in May. March 995 put. Okay. Have been selling puts and rolling positions to narrow gap between calls and puts. How would you manage with earnings looming? So $34 credit. $34 credit with these two options. Let's just look at this thing. Okay, so first things first. You have a 35-point inversion between your in-the-money call and your in-the-money put. You have a $34 credit. So you don't really, you don't have any way to make money on this trade as it stands. First thing I would consider is getting this March put out to May. and earnings are coming up March 5th. So kind of a tough scenario because you have a $34 credit, 35-point wide inversion. Anywhere the stock moves as it stands, you're in a tough spot. However, if we get rid of the 960 call and we just look at like, what if you were to buy this back and move this to May? You could move it to the 960, pick up $1.90, and what would that do? That would bring you to a 960 straddle, and you'd have $3,500 of extrinsic value. If you don't want to do that, certainly don't need to. You could move this to the 990, bring it down a little bit, pick up $1,100. Now you're in a 30-point wide inversion with $4,500 in credit. Or you could go to the 980 inversion, 960, 980, 20-point wide inversion, and you'd have $4,000 in credit. So that's what I would do. Is I might lean a little short if you're comfortable doing that, and just get rid of that inversion, because then you would arrive at, let's just say you've got the 980, 960, and you'd have a $4,500 premium. Now at least you can make money on a downside move. Like right now you're not seeing profitability, but after earnings, if we hold this through April, get closer to May, like that's when you're really going to have earnings profit potential, especially if this crushes a little bit. Let's give it a 5% crush. Like you want to get in a situation where at expiration, you have the ability to make money. Right now you don't. So that's really it. I think you can move your March options to May and just make sure that you have a net credit greater than the width of whatever inversion you create. And as long as you're going to the same strike or bringing it down a little bit, you'll be okay. And then you're basically just leaning short Costco, and you need to see what happens up to that point.
Assuming no crazy movements.
Yeah. Netflix is at a 2-year low. Yeah.
I'm so uninterested in that stock right now. I mean, it's one of those where honestly, the only thing that's interesting to do is if you do put a position on, whether it's leaps or, hell, at this point, you can even do stock if you felt like it, but options are still the way to go. You just put it in your back pocket, meaning like you just don't really look at it, because I think this thing is still going through something, and it's going to be a while before it seems to be bounced back. But I don't blame you for trying here. It's just probably going to be frustrating for a while. Make sure you give yourself some duration.
Yeah, totally agree. I think this is such a big move to the downside. This stock was twice as expensive just 6 months ago. If you want to acquire shares, selling a put is an efficient way to do that. Put ratio, another option. Like if you want to just pick up a little bit of credit if it gets a little bounce here, but give yourself a much lower break even if it doesn't, you can throw this on 75.70 in April, still keeping the credit. Your break even's down below 65. That would be a big cost basis reduction. Or because of this split, you now have a $70 stock. Like you could go May, you could do a diagonal spread here. Like these are really cheap options, all things considered.
True.
80-85 diagonal spread for $4. If you go May, March, or you can go April, I'd make it a little wider. Yeah, look at that. 80-90 May, April for $3. Do it right now. $4 for a 10-point wide diagonal with 90 days to go in a stock that's at 2-year lows. It's like these are the price extremes. Someone was emailing me about how to find or how to be patient and find quality trades. And my answer was just like, if you have limited capital, these are the opportunities I'm looking for. Like defined risk trade, $400 in risk, 2-year lows, household name, upside profit potential. If it does have a big move, your return on capital percentage is huge. So like Netflix is a consideration. Microsoft is a consideration. Obviously Microsoft is much more expensive, but If you ask yourself, like, do you see a possibility of these stocks rising 20% from here? And if the answer is yes, then those types of trades can have nice returns. But yeah, I'm happy to take a $4 shot and make $400 if we get a rally of 10 points in the next month or so, or even not, if we get a longer term move. $4 for a 10-point wide is always going to be a nice return if you're right.
No doubt about that.
Ooh, Target. Short call ratio spread, 120, 125, 35 days to go. Look at this thing. Like, here's another example. A couple months ago, we were saying targets at lows, targets at lows, and now huge move to the upside. Call ratio spread, I think, is a little tough just because you have to go really narrow, like we're seeing here. $1.50 for a 5-point wide. I mean, if you want to have short delta risk here, it's okay. I really don't like having short calls in equities. I think in the long run, it can create more trouble than not, especially when you consider like the violence of this move to the upside. And then you look at where it was trading. If we zoom out here, this thing was a couple years ago, it was trading for $200. So that could be a painful move if you're wrong. But yeah, I think it's okay. I still would rather be defined risk personally.
Same.
What are we doing with the coin double calendar? If you were in Jamal's, you're loving it. If you're in mine, you're not. I'm just going to hold on to this towards the end of the day. But if we don't get a sell-off, I'm probably just going to close the call side for a scratch. It looks like it's a 50-cent loser at this point. And then see if we get a sell-off towards the put side later next week. I don't think you can disconnect these because the short call, if you buy this back for $1,500 and then the stock drops, you're going to lose all this value in the long call. So you can't disconnect the short and long call if you're trying to keep this risk defined. So I'm going to see what happens at the end of the day. Keep my eyes peeled, but we need like a 5-point sell-off from here. And maybe we get back to a lesser loss, but super sensitive trade as it stands.
Pulling back as we speak. Yeah, I mean, I'm not doing anything. I'm just going to see where this lines up towards the end of the day, maybe with a hour or half hour to go. Probably eventually close it.
Yep. Last one here. Do you look at IV rank or actual implied volatility in the cycles? For example, in Tesla. I look at both. I think IV rank is a great tool to bring your eyes to certain products that are at IV extremes. But at the end of the day, the actual implied volatility on the right-hand side here is what the premium is represented in terms of the product itself. So if I see an IV rank of 2 in Tesla, but I see an IV of 50%, like if you want to sell premium, you still can in Tesla. Like 50% implied volatility is plenty of premium relative to notional risk to make it worthwhile. Of course, you'd rather see Tesla at an IV rank of 80 or 90 and an IV of 60 or 70. That's going to be a better environment. But like TLT, GLD, I'm trying to find a higher IV rank. Okay, here you go. GLD, 55 IV rank, but the actual implied volatility is only 30%. I'm still going to be defined risk in here because even though the IV rank is higher, the implied volatility is still low relative to the notional risk. So yes, love to see a pairing of high IV rank, high IV, but I could see an IV rank of 2 like in Tesla and still see decent implied volatility offered for taking the risk. And if you want to sell premium, you can.
One more thing to add to that, it's a good way to get an idea of different stocks. So like Walmart and Target, right? Similar type of company, similar field. Just looking at those, the reasons why you should look at implied along with just looking at IV rank. You can see the difference in between them. This is in the 30s. Target's just a little bit higher, and that gives you a little bit of insight to the companies as well. So it's implied vol is just kind of the lifeblood of a stock.
Yep, totally. Well, that's it for us. Thanks for tuning in. We got through almost all the questions. If you want to reach us and ask us any more questions, you can always do that on Twitter. I'm at Trader Mikey B there. Jamal is at Jamal Chandler. Stay tuned though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We're off on Monday for President's Day, so enjoy the holiday if you have it off as well. Markets will be closed, but we will be back same time, same place, 11 a.m. Central on Tuesday. And we'll see you then. Have a good weekend. Peace.
Later.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Baby, your love
What is going on, everybody, and welcome back to Risk and Reward. Today's Friday. We had a full week in the markets. We got a little bit of an expansion in volatility. We got a little bit more crypto talk. We got more headlines with Bitcoin, all the above. Today, we got Dan here, and I'm actually excited that we have you here today, brother, because I actually got a couple questions, especially when it relates to the blockchain, AI slop, all these kind of things and how they can kind of come to fruition. So before we get into everything, hope everybody's doing well. Brother Dan, how we been?
Good, man. Good. I'm happy to be here. I was lucky enough to get the ask from Gus to fill in, so I'll try and do my best.
Bro, you're great.
Certainly not as good as Gus, but really excited to be here. And yeah, I can. We had Coinbase earnings too, which was pretty big. So we'll break down some of the crypto markets, but I'd love to kind of hear what you're trading and hear what you're tracking because
absolutely.
I've been deep in the crypto rabbit hole. So
you've been in the trenches, the crypto trenches, right? Yeah, Crypto Dan, yes sir. What's going on, Grumpy Mike, Big Deal, Rodrigo, everybody else? No, just been still looking at a lot of NASDAQ. We'll get into the charts here in a moment. And then I've been eyeing a lot more crypto, a lot more Bitcoin, just getting a feel for the overall sentiment, you know what I mean? I feel a lot of people are kind of in the same boat. Something I'm going to bring up here in a little bit, though. I saw a really interesting topic on Twitter. And I always thought this could help the blockchain come into fruition, but we have so much AI slop, right?
Yeah.
We have difficulty figuring out what's authentic and figuring out the authenticity of things. As this AI slop continues to grow, as work continues to get stolen and produced and all of that, do you think that could create an argument for the blockchain in terms of verifying the validity of an asset, a digital asset, whatever it might be?
Yeah, for sure. I mean, again, I'm not going to get too deep in the weeds on like the technical nerd sniping stuff, but I do think that this like crypto AI, crypto XAI, they're calling it, is a huge narrative.
Crypto XAI.
Yeah, crypto combined with AI.
Okay.
So,
can you give us? Okay.
Yeah. So, I mean, I can throw out some names, and we can look at charts, but like,
if you don't mind,
Virtuals is one. There's a protocol called BankerBot, which is attaching wallet to an AI agent to allow you to trade with it. So there's like some of these like functional applications, but at the protocol level, or what you're specifically speaking about, is like validity of truthfulness or proof of person, whatever you want to call it, or proof of AI. That is something that's being discussed, and there's a number of projects out there tackling that, and I actually think you're spot on in the sense that I do think crypto rails or crypto protocols or blockchain, whatever you want to call it.
Yeah,
I think that AI in order for AI to come to fruition, in order for us to understand like what's slop and what's not.
Yeah,
it needs a blockchain rail to prove that it's
100%.
real and valid. ZK ZK proofs are one of the like core technologies behind that.
Okay.
And again, I don't want to get into like nerd sniping.
Yeah, we don't have to.
But like, certainly something being worked on. Certainly a huge narrative in the space. And there's a couple tokens you can play if you really want to capture some of that. Movement.
We have the trading view, so we'll probably take a peek here in a little bit.
Cool.
5 days into the week, we see a little bit of expansion and volatility. Any specific underlyings, anything in the market? We can go ahead and jump into the Tasty Trade platform. Go ahead and just do a little tour to market, see what VIX has been up to, see what SPY's been up to, see what QQQ's been up to, and then see if there's any other standout names for the day. But let us know what you've been trading. Let us know what positions you're managing right now. Fully got out of the Netflix position, so I'm not in Netflix anymore. That one's taken an absolute nosedive. And if you guys are in the Netflix position, let me know how you managed yours. But I did have a little bit of long delta on in Netflix. I don't know if you kept up with any of the headlines in regards to Netflix buying Warner Bros. And then Paramount trying to come in and do a hostile takeover and try and buy them instead. So it's been a whole fiasco. Did you hear any headlines about that?
So I heard the headlines. Okay. I follow this awesome podcast that kind of does like, it's sort of like a breakdown of the markets each week, but they cover like major news stories. So they were talking about the Senate hearing around that antitrust?
Mm-hmm.
Is that what it is? Antitrust hearing. And it sounds like the Ellisons are involved. The guy, Larry Ellison from Oracle, and I think his son, does he run Paramount or is he have?
I forget. I know he's heavily involved. Yeah. I forget if he runs it or I forget what his business in the business is.
Yeah. And they're trying to block Netflix from acquiring it. Is that what it is?
Yeah. Something along those lines. I think they favor Netflix, but Paramount is trying to offer a larger incentive. They're trying to be like, well, why aren't you going to accept ours? I think they're just really trying to drag this whole thing.
Yeah.
But
And it hit Netflix specifically, or
kind of in a way. Like you would think that them acquiring Warner Bros. Right? You would think that long term this is going to be really good for Netflix because they get a lot of the licenses, right? I know somebody yesterday brought up Gus and I didn't mention the comics that they also own a lot of the comics, right? So there's so many ends of the aisles where there's so much value in these licenses and things like that. So it was a little bit of a surprise to see Netflix take such a hit after something that you would think is a little bit positive.
Right.
But at the same time, I guess they did just dish out billions of dollars, right, to purchase as Warner Bros. So nonetheless, it's kind of been sliding a little bit here, but we have seen a little bit of an expansion in volatility here. So I'm not going to put anything on in Netflix right now, but it is something I personally want to. I typed in Netflix to the indicators. I'm trying to pull up implied volatility. But I'm not going to put on anything right now in Netflix. More so just going to keep an eye on it for the next couple weeks.
This thing really got hammered.
It did, bro. It hasn't had a change of character, since it's been sliding to the downside. It's pretty much been the same story, just new lows. So let's see, what do we got here? Let's catch up on these. JT, I hear you. I'm not the biggest fan of Fridays. When it comes down to the market, I'm not the biggest fan of Fridays when it comes down to the market. Still hunting support on Netflix. Yeah, it doesn't look like we found any level of support just yet. Yesterday we made a new lower low, but today we haven't. But with that being said, if we go to the weekly chart, it'll give us a better perspective on what Netflix has been up to week by week, and no signs of slowing down just yet. I need Netflix back over 100. Think that may take a while. Yeah, I think it'll get there. It may take some time. May take a little bit of patience there, Grumpy Mike. But as my mom used to tell me, patience is a virtue. Patience is a virtue. Patience is a virtue. Love you guys. Tell Tom Salzoff he needs to quit messing around and board. You guys need to offer him as. He doesn't need. Anyways, let's check out VIX and see where volatility's been. So vol has been expanding a little bit. I'm excited about this because volatility is a trader's best friend. But with that being said, we're sitting around 1940, 1950, just shy of 20. Volatility likes to cluster, and volatility tends to cluster, right? The aggressive pullback on the overall market a few days ago, over this week, seemed like maybe we actually get a pullback. Is it time for a pullback in the overall market in these indices? I don't know, but volatility likes to cluster. Volatility has been expanding a little bit, so I don't know if this market is prepping for some type of directional move. I'm not going to say hopefully to the downside, but some type of volatility we might experience soon, I kind of feel.
Yeah,
we'll see where we're sitting at.
I actually agree with that.
Yeah.
I don't want to, I don't want to say it's to the downside, but it seems like things have slowed down and there's been a lot more, I don't want to say like negative news, but certainly like volatile days. Like the last week that the software stocks getting sold off. Mm-hmm. Crypto, I've always noticed this with crypto. Crypto always sells off before major market sell-off.
Okay.
Like
you see some volatility there prior sometimes to the indices and other assets.
Sometimes it can be a leading indicator. It's a smaller market, so it's not as maybe not as big of a signal, but it certainly is like a risk-on market. So when people de-risk, they tend to do it in crypto first.
Yeah.
And then it seems like we've gotten kind of a little bit of a slowdown. There hasn't been as much momentum.
Has been just a little bit. I know early April was the first time we got any significant pullback. I forget what happened in crypto last April, but that was the last time we had an actual slide in the markets where we actually seen volatility pop above, 60 for a brief moment. So haven't had anything like that since. But we'll see what we get.
I think didn't Japan change? What did they raise their bond interest rates for the first time in a while?
Oh, I did hear that.
The last April one was tariffs. I think was a tariff.
It was a tariff. It was a whole tariff regime. It was that was a driving catalyst for sure.
Right,
that increase in volatility
might be time to take a look and see if you can sell some premium if vol spikes.
I'm thinking about even selling some premium today, to be honest, brother.
Yeah.
I was thinking about QQQ. Let us know what you guys have on your radar. But I'm looking at SPY, I'm looking at QQQ. I might just start with those indices just to get a little bit more short delta on because, as you can see over here, we have an SMH position on. It's the only position on in the portfolio as of now. We frequently trade the micro NASDAQs, but we're a little bit more selective when it comes down to throwing on some premium. But today, with an expansion in volatility from yesterday, we're going to take advantage of that. I didn't mean to cut you off there. What
no, you're good. You're good. I'm just kind of, I want to know what you're looking at. QQQ, I actually was seeing there was a rotation out of some of the tech names earlier this year. Well, it is early in the year, but back to like consumer basics and some of the, like materials, industrials.
Right.
That was like a theme in the market where some of these tech names that had ran all last year sort of maybe like there's been a rotation. Certainly the metals trade was something that I think has pulled back a lot. So yeah, it might be time. It might be time to do something there in the queues.
Yeah, we'll see what we get. I mean, I'm going to go to 35 days out, give myself a little bit more time. Maybe go $5 wide. I could sell this for $250. Premium is definitely pumped a little bit. I mean, I know I'm sitting at the delta's pretty high on this one. Yeah, I might do a vertical.
Okay.
I want to collect at least a third of the width of the spread. So if I'm going $5 wide, I want to make sure I can collect at least $1.6666666666. That'd be like perfectly a third. I don't know. Sometimes like those even numbers are in my brain just feels good, And I know a third of the width is around there. Here we can collect about 217, 219. It doesn't seem like the markets are too wide right now, pretty liquid. And the more credit that we get to collect on the spread, the more it'll reduce the risk on the trade. Because if we do the $5 wide, if we take the credit, if we put this on, let's see if we can get this on. 215 would be pretty solid. There we go. We got an instant fill. QQQ is pretty liquid. But if we get filled for let's say we got filled for 220, I think it was like 217, 220. It was a $5 wide. What we can do is we can subtract that credit from the width of that spread, and that's going to let us know the exact dollar amount of risk we have on the trade. So that's a worst case scenario. So $5 wide, if we take in $2 worth of credit, our max loss, worst case scenario is going to be $300.
Right.
So the more credit we can take in, the less risk we have to assume. So when this vol pops, it's nice to collect that additional credit to cover that downside just a little bit more. So we'll see what we get out of here. We're down $3, $2. Dan, you should have told me not to put this one on, bro. We're already losing some money over here. Come on, bro. No, I'm just kidding. Which number was probability of touch? You're gonna have to remind me of that one again, big deal. SGov, I only do ultra short bonds for the dry powder. If I want more risk in return, I do equity as opposed to longer term bonds. I hear you, Theta Trader. Good to see you guys, by the way. We got another Dan in the chat. I hear you, Dan. I see your comments. You got TK. What's going on, Ryan? What's going on, guys? Let's take a quick look at the watch list. We got 2 positions on in the portfolio now. We got 2 ETFs, right? We got the QQQ ETF, which is the ETF of NASDAQ. And then we got the semiconductor ETF, SMH. So I guess we're a little fond of some of these ETFs. Like, can't complain.
Did you do anything in the metals? Were you guys following that at all? Oh my gosh.
I'll have to show you. When we hop into the TradingView platform, I'll show you what I was trying to do in the metals.
All right.
I caught some decent moves, and then I caught a couple paper cuts, and it's been a difficult trade to position in. But what about you? What have your thoughts been in those metals?
I mean, I had been buying GLD over the last year just to kind of, that run gold had was crazy. I didn't make any moves because that's just not, like, I didn't really know how to position myself appropriately, but I'd been following it for sure.
Right.
No, I just was wondering because that was like all the talk for the last month or so.
Yeah, no, Gus and I were pretty much touching on it like every day.
Yeah.
But I do still think the metals, are still sort of in play here in terms of it's probably still going to offer some volatility. I know we got the SIC product, which is a smaller silvers product, so you can actually trade it. This silvers product is massive, but they just released SIC, so it's even smaller than the micros on silver. And I do still think gold and silver is in play here. Like just looking at it from a technical perspective, this was a first crack in momentum that we actually got to show like a change of behavior here.
Right.
So, I still believe that, silver and a lot of these metals are still heavily overvalued, obviously, but, we don't know if we're going to get a dead cat bounce. This is one where if you start to get short a little too early, it's going to stop you out of that trade because it's tough to sit in a drawdown on something like gold and silver. So,
yeah,
going to try and be as patient as possible. If we get a little bit more of an increase in pop, maybe I might, maybe even utilize SLV, maybe utilize GLD too. So now that you bring it up, I might have to take a look at these.
Yeah. Well, the other thing you can look at, and we can probably see that, I don't know if this is on the platform or it's on TradingView,
GVZ,
which is gold volatility index.
Okay.
So when that rolled up, now it'll be on TradingView.
We'll check it out in a minute.
Yeah. It's like basically the gold VIX.
Okay.
So when that spiked from like 20 up to about 48. and it began to roll over right when that crash happened on February. What was it, like February 1st or January 30th? So it's like I was talking to some traders here, and they were like, they were kind of monitoring the gold volatility index to see when that rolled over to get short. Now it's hard. I think it's hard to time, but certainly there's some indication there that trade was going to roll over, that spike was going to come back, and you could have got short.
I hear you.
Yeah.
Getting another perspective from the volatility of gold definitely would be helpful.
Yeah.
So we'll check out that GVX too. 100%. I forget where we saw it. Be confusing acronym. Yeah, we just got on this this gold spread, so we got a little bit more short delta on in gold. We'll be patient there. I'm hoping gold and silver's done taking out its new highs. I mean, what a run we were on. I mean, a historical event.
Crazy.
For sure.
Yeah.
For sure. Not sure what RZLT does, but happy I bought 2K shares when Gus mentioned it. Yeah, I know Gus was mentioning that, yesterday I think it was, or 2 days ago. But RZLT is absolutely flying to the upside today. Not sure what the catalyst or what the news is on the day, but this thing is flying. Their drug failed in December for some rare disease.
Resolute Incorporated, late stage rare disease biopharma company. Phase 3 clinical trials for the treatment of congenital hyperinsulinism. Ultra rare pediatric disorder. Okay, so it's a biopharma.
Gonna degen into some GLD VIX. Is that what you're gonna do, Jared? I know we just put some short delta on in GLD. I'm gonna be content with that position for now. I'm not gonna touch the futures just yet. I'm gonna touch SLV just yet, even though the puts on SLV propped the portfolio up and gave me a massive cushion to start the year, I will say, unintentionally. So I'm gonna try and protect that as we just put on a little bit more risk. I just bought a couple puts, but the volatility on the puts went up tenfold out of nowhere. And I mean, I was down most of the contract value. And then when we had that crack that day, I mean, they boosted the premium of the puts. It was nothing crazy, but a few extra $1,000 of cushion in the small portfolio was very helpful to start the year, because now you're not as scared to put on certain risk in certain areas. You can divvy up that risk a little bit. And especially I scalp a lot of the NASDAQ futures. So it's nice to have a little bit of a cushion as you do that. TYL, let's take a quick look at that. Saw them on the radar the other day. January 7th is when you mentioned it. I bought it at 210. That's awesome. TYL. I'm pretty sure he has a pretty good average on it too. I think, I forget what it was, but he'll remind us over here on Monday. TLY has been pretty beaten up as of lately, but this isn't looking too bad for someone that leans contrarian. What's going on over here? Let's see. Options chain looks decent. Options chain is not very attractive. But I'm curious what the news was. We got a little bit of an expansion of volatility. Yeah, we'll take a quick look at that. Let's go over here to this watch list. See what some of the larger movers on the day are. Over here, let's see. Let's start from the bottom up. Let's see pins. Massive gap down, trying to rally. See if we can get something else on. Don't mind getting on a little bit more premium on in the portfolio to take advantage of. DraftKings, do you have any thoughts on DraftKings? Just the whole speculative environment that we're kind of in right now?
I mean,
we got the prediction markets around the corner. We got, DraftKings and FanDuel. Those were blowing up over the last few years. I just feel what Gus and I were touching on the other day is, our generation is becoming a little bit more speculative,
Hyper gamble generation.
It is. I mean, I don't know what it is. I think it's a combination of a lot of things, to be honest.
Yeah, go ahead.
No, I was just reading up. I think what was it? You guys are going to have to refresh my memory. I was reading up on something where people were a little bit more risky, especially younger individuals in the 80s, 90s. I forget for whatever reason, but I think we're kind of in the stars are aligning kind of thing for these industries to pop off a little bit more, but kind of interesting to see.
Yeah, I mean, I think DraftKings and FanDuel are a little bit exposed to some of the regulatory stuff. I think they're going to come down heavy on either the states are going to add fees or they're going to come down heavy on some of this stuff, because it's kind of crazy how much they've popped, and they certainly, some of their sales tactics I've read are a little bit shady for some of these people that are addicted to gambling and high rollers. the prediction markets might kill some of the might introduce some competition, kill some of their margin. Generally, I think they're pretty popular, pretty entertaining, probably decent businesses long term. But I don't know. This is just randomly popped in my mind, but I found this company called Rush Street Interactive, and they
have a ticker for that?
RSI.
RSI.
It's a Chicago company. They're over on LaSalle Street, I think. Or actually, I think they're on Rush Street Interactive. They create software for casinos and online gambling platforms. So they provide the software technology and gaming systems for casinos, and they have like a big portfolio of casino entertainment companies they provide it into. And I've been holding this for a couple of years. I bought it at like $12. It's
nice.
It's gone up to 20. It's just was an interesting like local company I found randomly.
22.5.
Yeah. So just I haven't traded any options on it or anything, but
my man supports local businesses.
Local businesses.
There you go.
It was listed in Crane's Business Journal, and I was like, I didn't know what this was, and I looked at it, and I was like, oh wow, okay. They signed with like Bally's, they signed with like a bunch of South American casinos, and they have like a software division. So I was like, seems like a decent company.
That adds a little bit of lure to it for them to be local.
Yeah,
be able to do your research a little bit more too. It sounds like there might be a little bit of emotional investment there.
There is, just a little bit. I'm an emotional investor.
I hear you.
I'm a crypto guy. So.
Yeah. You got to feel for the sentiment. Tyler Technologies sells software and platforms that help local governments run their operations, from financial systems to courts to digital services and payment processing. Found what they do. Thanks for that, big deal. It's very helpful. Vic's low of day. Yeah, local biz kid. Yes, sir. Dan the man. That boy Dan. See Vic's. Yeah, Vic's low of day. It's looking like NASDAQ is over here making its highs as of now. I wonder if we'll get an opportunity in NASDAQ. I'll let you guys know the value.
What would you look for? I know you said you scalped that.
Yeah,
this is out of my realm, so you got to like.
No, totally fine. Yeah, we can actually jump over to the TradingView platform now, and we'll take a quick look at what's been going on over here in the NASDAQ market. But one thing that I'm very fond of, Dan, is the volume profile. I think the volume profile is like the foundation, I think, for trade ideas and just being able to have any type of conviction in whatever it is that you're looking for. But just a quick brief run through on the volume profile. So what we'll do is we'll take the volume profile and we'll find these ranges called value areas. And in the value areas, it lets us know that about 70% of the trading activity occurs within these value areas, because it's going to be the one standard deviation on the distribution, so that bell curve.
Sure.
So where it gets fat on that bell curve is kind of where our value areas will be. And the reason why that's significant is just because we understand there's more liquidity in those areas, so we understand time is going to spend more time in those ranges. So that just helps us gauge the market behavior a little bit better, right? So we're not going to be looking for breakouts in value areas, because we understand price spends about 70% of its time in this range. We don't know exactly what's going to happen,
right?
But if price spends more than 50% of time in this range, it lets you know breakouts are going to fail more times than not.
Gotcha.
So with that being said, whenever we're trading within value and the market is confirming that we're range bound, what we'll look is for mean reversion strategies. So whenever the market gets too far out to its edges, then we'll use other tools to look and see if we can position ourselves for a mean reverting strategy. So all that to say, the only two things that we really need to pay attention to, because I think there can be a lot of noise in the market, is just our areas of interest. And right now, our areas of interest in the market is going to be over here at 25,104. And our next area of interest is going to be at 24,748. So that's going to be the value area low. And then the first number was a value area high, which kind of gives us that range, right?
Okay.
So now all we're going to do is just wait to see how price responds at our value area high. So a lot of the times it can just be a waiting game. It takes a lot of discipline. And I think as you see it more and more, you start to gain a little bit more confidence to actually pull the trigger. And then once you see how the numbers crunch after 100 trades, 200 trades, whatever it might be, then I think it doesn't seem so mystical after that.
Right.
So,
okay.
yeah.
So this is your system. This is the rules you follow.
100%.
Yeah.
It really falls under the idea of auction market theory.
Okay.
And it's another theory that's very popular actually within the crypto space. There's another software that I use. It was actually built for native crypto traders, actually.
Okay.
Funny enough, but I use it for the futures indices. But no, with that being said, it can just be helpful to at least know where the most market interest is at, right? Sure. And auction market theory just lets us know that it lets us know how and why the market moves, right? And I believe that the market the market's sole purpose is to seek fair value, right? Fair value being the price range or price level where buyers and sellers agree on price,
Right.
right? And that's why we call it fair value, and that's why we call it the value area, right? And how do we know if buyers and sellers are agreeing on price? It's typically going to be the price range or price level, again, where price spends most of its time. That's how we can dictate market interest, right?
Okay.
So with that being said, this morning was pretty difficult. We had CPI today, so things got pretty volatile. But just for some quick analysis, we had marked off the data highs over here. Take whatever you might find valuable. But sometimes if you're looking to get long, if you guys, and we should track more statistics on this. One thing that we should do is we should start taking the data highs, data lows from CPI, FOMC, whatever it might be, and start doing more fun calculations. Maybe we can even make a YouTube video about it, spin one up into like a Bitcoin style one.
Yeah.
I don't know.
Well, that is actually a big thing. Like that Bitcoin traders focus on is
What's
like
that?
fair value.
Oh yeah.
And so they have like different ratios, like MVRV. I actually have this software called Crypto Quant.
Okay.
And it breaks down all this. CoinGlass is another piece of software.
Okay.
And in the futures markets, in particular in Bitcoin, in crypto, is the perpetual future, which I think we've talked about a number of times, and it's the funding rate.
Right.
Kind of gives
Oh,
it.
you mentioned that last time we
Yeah,
spoke. Yeah.
It's based off of like a funding rate mechanism, which is sort of like how swaps work, interest rate swaps and stuff. So it's like if the funding rate is high, traders will short to bring it back down to the spot, closer to the spot price. So it just kind of gives like an idea of where fair market value is.
Yeah.
And a lot of times, market analysts point to that number to say like, okay, Bitcoin was clearly overvalued at 126,000, but maybe like back in the 60s, low 70s is where fair market value should be.
Yeah.
You know what I mean?
Yeah.
So I think it works a lot better on Bitcoin in particular.
I hear you.
But, yeah.
I hear you. Curious. Do you know of any crypto traders that utilize order flow at all? Or is that a topic you even dove into the slightest at all? I know you're like in the crypto weeds, and I know there's so many.
Yeah, I would think so. A lot of what people follow are like exchange flows, and then now with the ETF flows to kind of give an idea of like what people are doing on chain. So there's different analytics you can follow because you can kind of see everyone's wallet. You can kind of see kind of how like miners, right? Like in the Bitcoin space, like where miners are selling, where their break even is. Some of that is useful. I don't know. I'll have to do a deep dive on that. Maybe I'll get the research team to help me because I think that there's like a whole other side of the market that isn't just like punting meme coins and like random stuff. There's actually real flows and
100%.
trade.
Yeah.
So
100%.
I'll take a look at that.
Yeah, absolutely. Let us know what you find. But no, we had a couple value areas. We were using this value area high as some level of support, a little bit in the pre-market guys. Then we had CPI about 30 minutes later. Then we rip up here right to our point of control. We see a little bit of market reactions at our point of control. Point of control just being the price level that did have the most trading activity, and that usually shows up as a volume node on the volume profile.
Okay.
But with that being said, we put in the data highs over here. We're just going to do a quick walkthrough of what happened today. Market opens up. We sell off back to our next value area. Now, whenever the market sells off into something like this, we have to ask ourselves, now, are we accepting into a new level of value, or are we going to use this again as a level of support, kind of like how we saw 2 times in the pre-market? But with that being said, we rallied back up to our next level of value, and things started getting choppy, right? So whenever I personally see something like this, the market flying back inside value, flying back outside of value, and just that barcode type action, especially around a value area, that's just more of a sign for me to be like, yo, step out the charts before you do something stupid. Like,
when it chops around like
yeah,
that,
especially at our areas of interest. It's like, all right, bro, hop off the charts before you for real do something stupid, because I think the longer the market does things like that, you can get a little bit frustrated.
Right.
You don't want that to come out in your behaviors, and you want to just check yourself sometimes. So just pointing out, today wasn't the best price action, and was kind of making those comments to myself. But with that being said, it looks like we're rallying right now as VIX is making new lows on the day. So lastly, again, we'll spin back around to this. We just want to see if the market can make it up to this value area high, and that'll give us a little bit more of an indication on what we might want to do.
Okay.
So it's easy to see the full order book with crypto. I want to say it's easy. Oh. You want to say, do you think it's easier to see the full order book with crypto? I don't want to speak on...
it's not so much order book, like that is part of it, and it's more of like you have open source access to all the data that's happening in the market, because there's no like you don't have to pay for exchange data. It's all kind of there. You can see what big players are doing. You can see where money's moving from different exchanges, or stablecoin flows is a big one, right? Like when you talk about flows, it's usually like stablecoin flows, because it's people moving liquid cash on chain through the stablecoins. There's Bitcoin spot flows that you could follow. Usually when people move more money into exchanges, it means they're going to liquidate. So I think it's just easier to see what's going on in the market from like, you have more access to data.
Makes sense, right? You get a little bit more clarity in terms of what's going on.
Yeah.
I think Galaxy S3, great phone though. Samsung loves their bloat. I remember the Galaxy S3 was like one of the most popular phones when it was coming out. The Galaxy S3 really competed with the iPhone 6, or I'm sorry, the iPhone 5 or iPhone 6, but that was the era when Samsung finally started to increase the size of their phones a little bit. I remember this like it was yesterday. I was like 11 or 12 years old, but I was pretty fascinated by the tech. I can imagine the 10A is much different, not to check the specs, so it's easier to see the full order book of crypto. It's happening in the market, but you can't aggregate what different wallets and major exchanges are doing. Sergio, from where is that point of control measured and what time frame? Thank you. So this point of control is the point of control from the previous, from all of last week. So that's where we got that data point from. Let's see what we got here. Never thought of that before, but great idea and way to look at crypto, 100%. So we're gonna have to swing back around to this. Oh, it's actually Gus right here. See what's happening in the market, because I read that, didn't even recognize. Absolutely. That's over there. What's that?
No, finish. And I wanted to ask you a question about, didn't you guys go to like the Chicago AutoZone?
We did. We went there last Friday. It was pretty fun.
Was it fun?
It was a good time. So from what I hear, I thought it was really cool and had a good time, but maybe I thought it was really cool because it was my first one.
Yeah.
But based off of what I heard they used to go a little bit more all out. But nonetheless, Gus and I still had a great time. It was fun. It was fun.
Okay, cool. Anything interesting coming out of that?
No, it just felt like you were at a car dealership, to be honest. I'm gonna keep it a buck. It just felt like you're at a car dealership.
Oh, really?
They had some really cool vehicles. It was cool to see some of the new EVs. I think the Broncos are really cool. Those are some dope vehicles. They had certain ramps and obstacles that they took you through in these vehicles, right? Just to show like, so you went on like a 60 degree incline. They're showing you all the little cool things that you can do with these vehicles. They had a Corvette concept car there, which looked like a hypercar type thing.
Okay.
Pretty cool. Other than that, it was pretty dope. You know, a lot of car salesmen around. They're probably just trying to get a lot of cars out the door, especially as we're headed into Q1, Q2. So other than that, I can't complain. It was a good time. The convention center is massive.
McCormick Place?
It can have its own area code.
Oh, dude, it's huge.
Holy crap. It's nuts.
Yeah.
But it was good. It was good.
It's awesome. I was like following some Reddit traders, Reddit communities for Rivian. There's like a big X and Reddit community around Rivian.
Is there?
Yeah, I don't trade it. I mean, I think they're cool looking, but I don't know if it's a profitable car company. I don't know. But.
I haven't been keeping up too much with them, but I know they're getting a little bit more popular. They look clean too. I'm not gonna lie.
Yeah,
they're pretty expensive too.
Yeah.
Wasn't the S3 black in like 2015? Was it? I could have swore the ones that I remember. I believe the ones that I remember were white. No, they had white and gunmetal gray, I think it was. I think they had two versions. It's slipping my mind. Errol, what time frames do you include? Last week, previous day? Do you also use developing day? I do. I'll use developing day. Developing week if it's relevant. Previous week is my favorite because it's the most relevant data. But I think with those three, you'll be pretty much good with those three. The only time that I go further out from the previous week is whenever there's not a level of value in proximity to where price is at. So if the market sells off too much one week, you can't use the previous week's data because the previous week's data is all the way up here and the market's all the way down here. So you might have to go 2 or 3 months back to when we were trading at these price levels to see what kind of liquidity was being traded at those levels. So the only time you got to go further and further and further and further back is whenever you can't find those levels of value. So it can be a little bit subjective in that way. And then also one thing that's very helpful that I was going to pull up here is I'm honestly not a big fan of the TPO on TradingView. Neither am I a big fan of the footprint charts on TradingView. That's why I haven't really brought them up too much. But I want to take a quick look at their TPO, because the TPO is something that's super useful, so underrated, and the entire trading industry is not talking about it, but it's such a useful tool. It's called time price opportunity, very similar to a volume profile.
Okay.
Volume profile calculates volume, and it gives you a distribution of volume, right? TPO is time price opportunity. It looks like a volume profile, but it's giving you a distribution over the market spent most of its time.
Okay.
So this has given us like a three-dimensional view of the market now. We're using volume, we're using time, and then also we're going to use market structure. So we get that 3D dimensional view of the market in terms of making decisions, which I think can be extremely helpful, that I've found for myself. So if anybody wants to dive into more topics about TPO volume profile, I'd highly recommend it. But I just wanted to see what TradingViews was looking like. Never been a big fan of it. Pulled it up once before, thought it was kind of ugly. But let's take a quick peek. If anybody isn't familiar with the TPO, each block represents 30 minutes.
Okay.
We'll go into more details another time, but let's just quickly see where most of the TPO has been aggregated. So you can kind of see right off the bat. Okay, so this is a TPO, and it's also putting the volume profile right beside it. I bet you can go into the settings and you could have only the TPO on. Let's see, volume profile right here. Look, see, we can take volume profile off. Okay. So now it's going to show us the TPO for each day. Again, they look very similar. The only difference is one calculates volume, the other calculates time. So even here, right? So if we were to get long, if the market wanted to break out of this level of value, we can understand where's most the value traded over the last few days. Up here, you can see if we aggregated all of this data, you can clearly see value here, value here, value here, value here. If we combine that, you're going to get a value area low there and a value low or a value area high over there. So if you're using a footprint chart and you're able to identify any type of absorption going on, iceberg orders on your footprint chart, whatever it might be, and you see we can break out of our value area high, right? This would give you the confidence to do that. Because look at these single bars. We got a single print right here. These single blocks let us know the market barely spent any time over there. Right. So if the market wants to rebound, it's going to have an easier time to do that if it wants to. It doesn't have to, but that's how we can make a little bit more sense of the trades that we take there. But that's the TPO, time price opportunity, just a distribution of time. And it just helps us, it gives us a visual view of value in the market. That's about it. That's all.
Nice.
It's nothing crazy. I know it looks all whatever, but it's really not. It's really not. I'm guessing no spoofing crypto. I'd imagine there's spoofing in every market. Yeah, I would imagine
crypto,
maybe.
I think what's fun about crypto is it's a lot less efficient, so there's more opportunities for individuals to make some money in it. Like if you know what you're doing,
right?
You know, like there's a lot less sophistication. I think.
Yeah,
it's getting better. Obviously, I think with the ETFs and some of these institutions moving in, it's better. But
I know exactly what you mean.
Yeah. So
that's why I used to like small caps back in the day. Certain names that you traded didn't have too much institutional involvement, so you got to take advantage of that inefficient work because there's no institutions playing down there.
Exactly,
it's a little bit easier. Yeah.
So
I hear you.
That's why I liked crypto. I like crypto is a lot more edge. I think.
I got you. See what we're going on over here. Don't worry, I'm gonna clean these charts up. Give me 2 moments. Well, we're gonna clean this up a little bit, but we're gonna jump over to Bitcoin here in a moment too because. Bitcoin is one I've been eyeing as well. So we'll see if we put on a longer dated position there. You're in Nashville. Yeah, Gus, let us know how Nashville is, brother. Probably either than
I'm typing on his account.
Oh.
It's me. I thought it was mine, but then I was like, they must have him logged in.
Yeah.
So that's actually me. So I guess I'm impersonating Gus.
That's actually hilarious. He's like, I got to get this off my chest. Probably earlier than that, Galaxy was one of my first smartphones, but have had Pixels since. I got you. Today's bounce looks right on the close of Thursday the 6th. It's warm. Let's jump over to Bitcoin quickly. Let's see what some of these crypto markets have been up to. Oh, wow. We got a little bit of a rebound in crypto. So let's clean this up a little bit. Let's clean this up. So we came over here to our value area low. And this is where, again, we were talking about at our value area low, it'll give us an idea. The market is going to make decisions here.
Right.
It's not that you can't predict where the market's going to go. And anybody, I challenge you to test this. Use your volume profile and test those value area lows and value area highs and use data on them. But we'll typically see a lot of directional movements or decisions being made at those value area highs and lows. And the thing that I like to always stress is, no, it's not that we're going to be able to get the direction right every time. That just doesn't even make sense. That's not how the market works. But we can use data to help give us an idea of the behavior we typically see. So this one being that important decisions are being made at these levels. But with that being said, the crypto boards are happy today. It's looking like we're going to creep back up to this point of control on this leg down that we had here. So at least a little bit of a relief pop, right? Yeah. And I mean, that was a pretty brutal down move for the overall crypto space.
Yeah, it was. It's just been in nothing but a downtrend since October. So
has it been that long?
Yeah,
I'm sure you know exactly.
Yeah, so that sell-off was this last week.
Has been a while.
Yeah, this was last week. Got all the way down to 59.60, and then it bounced back up to 71. So this is kind of the reflexivity in this crypto market because of the way, I guess, leverage unwinds in this space. You get these like auto liquidations because they're all automatic exchanges. There's no like human element to this. I mean, there is, but these big wick downs are all auto deleveraging on the big futures exchanges. So you get these like reflexive pops back up. So you can capture like 60, these psychological levels like 60K. 60K was a big bounce. Like, so if you put your limit order there, it goes up to 71. You get, it's a $10,000, $11,000 move to the upside.
Yeah.
Still in a downtrend, still in what I would consider a bear market, but we recover pretty quickly after some of these big events.
Yeah. No, 100%. I'm really liking the volatility here in Bitcoin. I know one thing too is like looking at Bitcoin, looking at NASDAQ, looking at gold, looking at silver. They definitely all tend to have their different personality. And like to the point that Big Deal's bringing up, the NASDAQ looked easier to read on Bitcoin's volume profile. And, that's a pretty subjective take, right? Big Deal too. Like one thing that I've really found too is I found traders that really prefer trading on gold in the volume profile, and I don't. I found NASDAQ and ES to kind of be those assets. Some people might find Bitcoin to be those assets that they kind of vibe with a little bit better. I think that one thing we don't talk about enough either is I think there's certain assets that are going to be more conducive to your personality. So I think kind of just having a basket of those stocks and figuring out kind of what you like, what volatility you like.
Right.
You can kind of figure out the products that you like looking at on a weekly basis. Check out Coin. Yeah, what's been going on with the Coin? You brought them up earlier. I know the CEO fell from one of the richest people in the world because of whatever has been going on.
Yeah, so Coin has been getting hammered. It actually trades somewhat almost perfectly correlated with Bitcoin price, even though it's a relatively diversified financial business now.
Yeah.
We were covering this. We put out some content, Ryan and I, on the crypto team. We were covering Coinbase earnings before yesterday and just how it moves, how the vol spiked, how you could play it with some puts. So this thing has gotten hammered, right? And we were kind of figuring that it would bounce at some point and get maybe like a surprise earnings announcement. And they killed 2025 estimates because they reported Q4 yesterday. But it's a little bit of a relief rally here, it looks like, because it's just gotten hammered since, October?
It has. We'll see if it can sustain, but I mean, good Lord. How many consecutive down days did we have over here? We had 1, 2, 3, 4. That broke the consecutive down days, lucky enough. 1, 2, 3, 4, 5, 6, 7, 8. And that's not including some of the gap downs that we had on the way down. So, wow, very decisive in terms of direction Coin trades in.
Yeah.
I mean, it looks like a very decisive product. When it's going one way, it's really going one way.
It's also super volatile because it's tied to the price of Bitcoin.
Oh, good Lord.
But they reported some interesting stuff. Like they're releasing prediction markets. They have like, I think it was 12 business lines now that make over $100 million.
Good Lord.
So like it's pretty well diversified away from trading volume, trading activity.
Good Lord.
I think it's a good business still. But obviously in a crypto bear market, it's not going to trade that well.
No, I hear you. I mean, it's moving nonetheless, right? I mean, there's a lot of movement for whatever traders want to take advantage of that. decent support going back up. Yeah, we'll see what we get there. Yeah, looking pretty decent. I mean, if I was going to be a buyer of coin, I'm not going to buy this right now, but if I was going to be a buyer of coin when I zoom out here, I mean, these prices look a lot more attractive than they did a couple months ago, right?
Right.
This is almost looking like Bitcoin, actually. When I zoom in to here, it's kind of looking like...
You can do the correlation.
Yeah.
Can you do a correlation?
Yeah, I believe so. Take that line off. Yeah, good call. We got Bitcoin USD right here.
Yeah.
We could change this. We can change that to a line chart too, so we can kind of definitely change the color of one of these. Or we'll just keep this. We'll do that. So yeah, I mean, highly correlated, as you can see here. Whenever we overlay both of the assets, you're right. I mean, extremely correlated. They almost look not 1-to-1, but I mean almost.
Right.
Right. Whenever Bitcoin's getting a pop, coin's getting a pop. Coin looks like it experiences a lot more volatility based off of the scale of these right now. Yeah, that's what we're looking at. Hood is strong today. Take a peek over there. Is Kalshi messing with businesses? I think you meant Kalshi. We'll circle back around to that. Big deal. Let's check out Hood. Hood's still taking an absolute landslide to the downside. Now let me go ahead and take off this Bitcoin, clean the chart back up. I'm kind of messing with these hollow candles, guys. I kind of like the hollow candles. Let me know what you think. With that being said, a lot better day for Hood. I will say that because the last couple weeks has been pretty brutal. Grumpy Mike, what have you been doing Bob, what have you been doing in Hood? What have you been up to? I'm going to quickly look over here. I'm curious to see what the premium is at. 32.5 IV rank. I'm not against, I don't think I can long Hood. I don't think that's right. I'm over here longing Hood on the tastylive network. That's crazy. That's crazy. I got to short Robinhood. I got to short him. Say, hey, I don't know Dan. What does Dan do over at Tasty? You want to introduce yourself, Dan? Dan the man?
Yeah, what's up, guys? I'm Dan. I run crypto growth at Tasty, so I focus specifically on the crypto business lines. So done some content on when we were doing Tasty Crypto Network, kind of was a sub-brand, but now we're doing a lot more on the Tasty Live, so you'll hopefully see me a little bit more.
Yeah.
But I'm behind the scenes in the crypto trenches.
Yeah.
So
in the trenches, that's where you can find my mans.
Yeah.
Absolutely. Absolutely.
Dan just collects a paycheck and really does not do anything.
No,
that's pretty accurate.
I troll. Just a little bit of troll.
That's pretty accurate.
A little bit of troll is good now and then. A little bit of busting our gears is good. Now, with that being said, let me change these candles. They're actually messing with me a little bit. There we go. Back to blue. Easier to see. Easier to see. I could barely see the candles with my eyes, actually, when we switched it. But no, we were talking about gold and silver earlier. Still trying to look for positioning on here. We just got on some short delta, so I'm a little bit more comfortable now that I at least have some exposure to the metals market. But in terms of the futures market, you need to be so precise with the futures contracts sometimes just because they're such a large size. Let me go to gold and I'll show you what I've kind of been up to in gold and how we've kind of been trying to take advantage of it. I'm going to go over here, turn these on. There you go. But this is what we've been up to over here on gold. So we traded it a few times. We were looking to manage the volatility. Let me clean this off. Over here were some trades where we just kind of sit in it. A lot of these were break evens, just kind of getting out of the market because we didn't want to be too early. So over here, we were looking to get short the market, right? Don't want to sit in this type of drawdown on a metals market. So that's why we were so keen on closing our positions. So we did take a few trades over here. I'm not sure why this one isn't popping up. We started getting involved over here somewhere first. But now we're kind of just in the territory of, is it going to be a dead cat bounce or are we going to rally back to the highs? So that's something we got to ask ourselves. And I'm going to be comfortable with the GLD position we have on. Not going to be quick to rush the MGC position. If I put something on in the gold futures, it'll just be one contract. But that's what we've been eyeing. That's what we've been eyeing. I like to zoom in on these executions because I think by somebody's entry and exit, you can kind of pick apart their psychology a little bit. And I think when we look at some of these, you can really see the lack of conviction.
Right.
I think you can see the fear in people's execution sometimes. I think you can see the lack of conviction.
Yeah.
I think you can see the greed in your execution sometimes. So I think there's a lot that you can read just by looking at executions and clearly no conviction in these trades over here on gold. Wanted to get some exposure, but literally had no conviction. Not even a market I spent too much time in, but always fun to gaining a little bit more experience in other markets at the same time.
I think those micros make it easier to
definitely
to trade.
Definitely.
Because if you're on a smaller account, you don't want to be,
Yeah, 100%.
The big ones are tough to stomach.
I mean, that silver's contract, I think, is the largest futures contract that you can get exposure to.
I have a funny story on the first time I started trading Bitcoin futures. Most of the exchanges.
They pay him in Ripple, sorry. That's funny.
I wouldn't take Ripple. I would take maybe a Dogecoin.
Yeah, that would be hilarious. That's hilarious. Anyway, sorry, I didn't mean to cut you off.
Yeah, so first couple times I started trading Bitcoin futures, the exchanges have it automatically set to like 50x leverage. And you could slide that all the way down to like 2x, but the max is like 50x. So stupid me was like, oh, I'm just going to keep it at 50x, right? And I'm like throwing like $20,000, $30,000 positions on and getting liquidated. So like I had a friend that is a professional trader at one of the trading firms here, and he like looked at my
no way.
Yeah.
Chicago?
Yeah.
That's sick.
He looked at my setup one day and he goes, yeah, I'm just going to have you slide that back to 5x.
We're just going to go ahead and change that lot size.
But once I did that, it was like I didn't have as much risk on, and it was like easier to kind of like manage positions, right? And not be emotional. And
absolutely. I think it's like our brain is kind of like a muscle. Like I think the dollar amount can shock your nervous system, and I think you got to train it little by little. 2 contracts,
right?
And you're good. Okay, 3 contracts. We can't shock that nervous system,
right? Yeah, right.
Makes sense. That's funny. So yeah, we're gonna go ahead and just
slide that back
down there, right there. That is funny. Now, with that being said, volatility still at its lows right now. Personally, I'm thinking a little bit more downside. I got some short delta on in QQQ. Got a little bit of short delta on in gold. We got 35 days left till expiration on both those positions. Nice to get on some more positions today, but we are running out of time here. Anything else top of mind that you want to leave us with?
No, not at all. This is great. Would love, if anybody's interested in crypto, feel free to reach out. I'm happy to answer any questions, but yeah, this has been fun.
Absolutely. Dan, as always, we appreciate you having you here. Thanks for coming and chatting it up with all of us for a little bit. With that being said, I think there may be some stuff that aren't allowed to answer if you do this for Yep. And you guys have a great rest of your day. It was a great week. We got a little bit of expansion volatility. We'll see what we get over the next couple weeks. That's going to do it for the segments. Be sure to stay tuned for more coming on next. We'll catch you guys next time. Peace.
This is Jimmy. He's 55 years old, married with 3 kids and 3 grandkids, and he's been investing ever since he graduated from Central Michigan University, Fire Up Chips, over 30 years ago. And given how strong the market has been these past 3 decades, he's done really well for himself. In fact, his retirement portfolio just crossed over the $1 million mark. But he's stuck, earning the same old 7 to 10% annual gains from the market each year, and he's at the mercy of market volatility. With hopefully only 5 more years to work before he retires, Jimmy wants more control. He wants to take hold of his future and his returns. Well, my name is Jim Schultz. I'm a finance PhD, and I've devoted my entire professional career to understanding the markets, starting as a professor in academia, where I taught undergraduate and MBA classes, and also did my academic research solely focused on the markets. I've since been a practitioner in the markets, actively trading since 2007. For the purposes of this video, I'm going to be Jimmy. So I've had a great run in the market over these few decades, but now I want to really unlock the full potential of my portfolio. While the 10% average annual return that the market has given me has been great, I'm intrigued at the prospect of producing portfolio returns that are even higher than that. I've heard with enough skill and ability, it might be doable. And maybe even more importantly than boosting my returns, I'm very interested in reducing my overall portfolio risk. Being that I'm closer to the end of my career than the beginning, I want to be better prepared to handle extremely volatile conditions or big market meltdowns, like we had during the internet bubble in 2002, the financial crisis in 2008, the COVID crash in 2020, or even the trade wars and tariffs that we're experiencing right now in 2025. Well, whatever the reason might be for you or Jimmy, If anything about his story resonates with you, then you are in the right place. I'm going to show you how to begin to make the transition from a purely passive approach with your portfolio to a much more active approach that steps into the world of derivatives. And we're going to break it down into 5 simple steps as I take Jimmy through a first-hand example. And we start with step 1. Taking inventory of where you're at. I've taken the passive approach and it's worked out great, but it's important to remember that those 10% average annual returns are exactly that, an average. While the market does go up most of the time, it can also go down and sometimes seemingly out of nowhere, just like we've seen to start 2025. Well, that is what I'm trying to avoid. Until now, I have been simply buying and holding, absorbing whatever blows might come my way. But I am tired of this lack of control. I want to be more involved. I don't want to be so reliant on market direction for not only generating returns, but mitigating risk. Now, you may be just like Jimmy. You don't want to stand passively by, needing the market to move higher to hit your return projections. All the while, the performance of your nest egg seems to be directly tied to the next Trump tweet. You want to take control and add a brand new strategic component to your portfolio. Well, once you fully immerse yourself into the world of derivatives, all those things can happen. But before we dig into the real details, we have to progress to the next step in the journey, where we are now going to tap into all the tools that were available to you as a passive investor who was reliant on the market moving higher. Specifically, let's talk about the power of dividends and dollar cost averaging. Step 2, the tools you need. Now I'm ready for action. I'm going to ditch the purely passive approach, but to be fair, I have done really well as a passive investor over the last 30 years using the 3 Ds, direction, dividends, and dollar cost averaging. So naturally, there is still a part of me that really likes all these strategies. The thought of abandoning those long bias strategies completely has me feeling a little bit uneasy. Well, here's the great news. Continuing to collect your dividend payments or improve your basis through dollar cost averaging are both still very much in play. You're going to see that there will still be a home for you to carry some share positions in your favorite stocks. And even in the options portion of your portfolio where you might not own any direct shares, any dividends that the company might pay automatically get factored into the option pricing. For example, if instead of buying stock in Apple, you decide to use a short put position, which is a classic option strategy, you are still going to collect any upcoming dividends that Apple might pay with that short put strategy. This happens because you're able to sell the put for a higher price based on the simple fact that the extrinsic value moves higher due to the dividend itself. But all of that is way beyond where we want to go here today. Not to mention, we've already done a video that covers all of that in depth, and you can watch it right here. But what about dollar cost averaging? Well, I learned early on that it was a great long-term strategy to add to my investments in individual stocks or broad-based indexes when the price of those stocks or indexes was falling. If the company was solid or the overall economy would be strong again, then I knew there was a really high probability that the stock prices would recover. Well, with derivatives, high probability trades are at the core of what we do, and here's the best part. It happens right at trade entry. You don't need to wait for the stock to drop or things to go south. You start improving your basis right from the very start. Now, I'm very happy to hear that both the returns from dividends and the spirit of dollar cost averaging can be alive and well with the option strategies inside my portfolio. But now, I'm even more intrigued to hear about how I can actually make money without needing the market to go higher and without being so reliant on market direction. That sounds crazy to me. Well, both you and Jimmy are in luck because that is exactly where we're headed next. Step 3, trading time and volatility. Now, I have to be honest, this completely blows my mind. I was under the impression that to make money investing in the stock market, you buy stocks and you need a move higher in the stock to make money. Well, it turns out that's not necessarily true. It's important to understand that in the world of options, any position you might have can and will make money from 3 different parts: direction, time, and volatility. So let's start with direction. Now, working through all the inner workings of calls and puts and option pricing is way beyond our focus here, and we can't get into it in this very video. So I would encourage you to watch this video right here. For the sake of Jimmy's goal, we want a broad overview, and it works like this. There are option strategies where if I'm bullish, I benefit from the stock price going up, and I'm hurt by the stock price going down. So very similar to being long stock. There are also option strategies where if I'm bearish, I benefit from the stock price going down and I'm hurt by the stock price going up. So very similar to being short stock. But here is where things get interesting. With options, if I'm bullish, I can set up a strategy that benefits from the stock going up, but can also make money if the stock goes nowhere, and even possibly make money if the stock goes down a little. And similarly, if I'm bearish, I can set up a strategy that benefits from the stock going down, but can also make money if the stock goes nowhere, and even possibly make money even if the stock goes up a little. And the reason we can do that is because with options, we're not only trading direction, we're also trading time and volatility. You see, with options, there are various components to an option's price. The underlying stock price of the stock the option is on is a component. The risk-free interest rate in the economy is a component. Even the dividend that the company might pay is a component, just like we saw in the last section. But one of the largest components to an option's price is the time that is left on the option contract. Every option contract expires on a specific date. So some contracts might expire in 7 days, some might expire in 45 days, and some might expire in 360 days. Simply put, the more time the option contract has, the higher its price. As time passes, the number of days left in the contract decreases, and so that time value follows suit and also decreases. Here's the best part. You can play any directional bias you want, but you can also play time along with that same strategy. More specifically, you can benefit from the simple passage of time. As the days go by and the time value dissipates from that option's price, it helps the P&L on your position. Now, for our strategy examples coming up, we're going to focus exclusively on time, but it's important that you're made aware that you can also trade another non-directional metric, volatility. Now, volatility does share a reliable relationship with direction, but we'll leave that discussion for a future time. For us, we want to understand that much like time value is added to an option's price, a volatility premium is also added to an option's price. And also very similar to time, more volatility means higher option prices, and lower volatility means lower option prices. This will come as no surprise, but this video right here explains volatility in great depth. But for our purposes, here is what we need. Market volatility moves up, it moves down, it moves all over, just like everything else in the market. But generally speaking, on average, volatility is in a state of contraction, so it's moving lower. And just like we did with time, we can set up option strategies to take advantage of that natural volatility contraction. But now, you've got to be wondering, all right, I see how time can help me, but I still can't for the life of me understand how I can make money without being directionally right or even being directionally wrong. Well, that's where we're going next. Step 4, strategic breakdown. So let's unpack 3 different strategies, starting with a covered call. I'm used to owning stock, and one of my favorites over the years has certainly been Apple. Well, the beautiful thing about a covered call is that it starts the same way that all of my positions have started, with long stock. The difference is, on top of that stock, we're going to add an option component, specifically a short call. This is what is called a covered call strategy. Let's suppose I own some Apple that I bought earlier this year for $180 per share. Today is April 9th, and right now in the option market, I can sell the 200 strike call in the May cycle that is 37 days away for $2.50, which is $2.50 per share, or $250 for the whole contract, because option contracts are always in 100 share allotments. Now, a key part to understanding how a covered call works, or really any short premium strategy, is this. If the stock price is above the strike price on a call, the call is in the money, meaning it has value. But if it's below the strike price on a call, the call is out of the money, meaning it is worthless. If the stock price is below the strike price on a put, the put is in the money, meaning it has value. But if it's above the strike price on a put, the put is out of the money, meaning it's worthless. And when you sell options, you always want the options to be out of the money. That is because that allows you to keep what you sold it for. So back to my covered call. Let's explore 4 simple scenarios by May expiration. Apple goes to 160, Apple goes to 200, Apple goes to 220, and Apple stays right at 180. If Apple falls to 160, then I'll lose $20 per share on my stock, but my short call will expire out of the money, so it will be worthless, which means I'll get to keep the $2.50 I sold it for. So my net P&L is improved to only losing $17.50, which is good. If Apple rises to 200, then I make $20 per share on my stock, and my short call expires exactly at the money, which is the same as out of the money at expiration, which also makes it worthless. Again, this means I'll get to keep the $2.50 that I sold it for, so my net P&L is improved again up to $22.50. Also good. If Apple rises all the way to 220, I make $40 per share on my stock, but now my short call slows me down because it is in the money. I do get to keep the $2.50 I sold it for, but now the short call loses the difference between the 200 strike price and the 220 stock price. So again, my net P&L is plus $22.50, which is good, but not as good as it would have been if I just held the long stock only. But lastly, what happens if Apple stays at 180? It moves around, up and down, sideways, whatever, but at May expiration, it's right back to 180. Well, I don't make or lose anything on the stock, but again, my short call expires worthless, so I get to keep the $2.50 per share. So in other words, I generated a positive P&L on my position without needing the stock to go anywhere. And that, my friends, is the power of options. Not to mention, I also improved my net P&L in 2 of the 3 other scenarios too. Okay, so next up, the vertical spread. And specifically here, we're going to talk about a short vertical spread using put options. So this would be a short put spread. Let's use Tesla as our example. Here, I won't have the familiarity of long stock to lean on, as my position will be solely options. But I'm bullish on Tesla, so I want to set up a short put strategy in the May cycle with 37 days to expiration. To do that with Tesla at $250 per share, let's say I set up a 225 220 short put spread that I'm able to sell for $2 in the May cycle. Now, an important aspect of short vertical spreads like the one I have here is that my maximum gain is always whatever I sold the vertical for, so $2, and my maximum loss is always the difference between the width of the vertical and what I sold it for. So $5 width minus $2 credit, or a $3 max loss. So let's work through 4 different stock price scenarios. Tesla rises to 300, Tesla stays at 250, Tesla goes down to 230, and Tesla goes down to 200. First, Tesla rises to 300. In this scenario, this short put spread expires out of the money, so it's worthless, which means I keep what I sold it for, and my P&L is plus $2. Next, Tesla stays at 250. In this scenario, again, the short put spread expires out of the money, so it's worthless again. I keep the premium, and my P&L is plus $2. Next, Tesla falls to 230, so it went down when I wanted it to go up. But here's the crazy thing. Again, the short put spread is still out of the money, so it's worthless. I keep the premium, and my P&L is plus $2, even though I was wrong about the direction of the stock. And lastly, Tesla falls to 200. In this scenario, the short put spread is fully in the money, so this trade would be a loser, where I would lose the most I can possibly lose for a P&L of minus $3. Now, as you can see, I'm not hitting home runs when the stock moves in my favor in this Tesla example. Not at all. But it's pretty crazy that I'm able to make money when I'm wrong on the stock price direction completely. Well, that is exactly what we meant earlier when we said you're able to benefit from the passage of time. When you sell out of the money options, if they stay out of the money, then you are able to allow that time value to drive your ultimate P&L. So now, the third and final strategy, the short strangle. Here, let's say I want to do an option strategy in Starbucks. And for this one, I don't think Starbucks is going to move much between now and May expiration in 37 days. So I want to set up a strategy that is a pure time play. It could be a volatility play too, as we alluded to earlier, but for these examples, again, we're just focused on time. So with Starbucks at $95 per share, let's say I sell an 80-110 strangle. So an 80 put and a 110 call in the May cycle with 37 days to go for a $4 credit. As long as Starbucks stays between 80 and 100 at May expiration, both options will expire worthless, and I'll keep my $4. So that means it could go up to 105, it could go down to 82, and it could do everything in between. It won't matter to me, and it won't matter to the position. As the time value comes out of the option by expiration, I will make the $4 profit from time alone. But here's the catch. Anything above 110 or anything below 80, that's where my risk is. And even more specifically, I have an unlimited amount of risk on both sides. Now that right there, you might be thinking, man, I am out. I am not interested. No thanks. Well, that makes sense, because you're just getting started. I just wanted to take the opportunity right here, right now, to introduce you to the short strangle, because it continues to be one of the most popular and effective strategies that experienced traders use every single day. And you yourself are probably striving to become an experienced trader one day. For now, though, there's no rush. This is not a competition. Start with covered calls and then move into vertical spreads. There will be plenty of time for other strategies like short strangles sometime down the road. I promise you, covered calls and vertical spreads alone are going to keep you plenty busy. All right, so next up is the final step of this whole crash course, where we are going to work out some different ways that you can break down your total portfolio and show both you and Jimmy how you can split up your assets between a passive approach and an active approach. Step 5, portfolio allocation. So now I'm beginning to equip myself with more skills to attack the market from a variety of angles. I can trade time, and I can trade volatility in addition to direction. But to do that, we have to figure out how are we going to split up our assets. More specifically, what percentage of our assets are we going to keep doing what we've always done, and what percentage of our assets are we going to devote to this brand new derivative strategy? This is a really important question to answer, and here's the most important thing to keep in mind. You don't have to go all in with 100% of your assets into an active approach in the derivatives market. Definitely not when you're just getting started. It's understandable that shifting away from a passive, long only bias in the market that has done you so well for so many years is going to take some time. But practically speaking, what might some asset breakdowns look like? Well, if you remember, my retirement portfolio just crossed the $1 million mark. And in addition to that, I also have a $100,000 brokerage account that I might use to play a hunch from time to time. So in my situation, the starting point here is easy. While I'm certainly intrigued at the prospect of not having to be passively long all the time, I'm still confident that the upward trajectory of the market will continue to some degree or another. So I'm going to start with my $1 million retirement portfolio, still doing what I've always been doing, long some market indexes and some of my favorite stocks, but I'm now going to devote my $100,000 brokerage account to a more actively managed approach that focuses on derivatives, just as we've been talking about today. So that means that $100,000 of the $1.1 million total, or about 9% of my assets, will be actively traded, and 91% of my assets will continue to be passively invested. This is a great start. And over time, as I gain more experience and my skills improve, I suspect that that ratio is going to shift in favor of more assets being actively traded. But maybe you have a $500,000 retirement portfolio and a $200,000 brokerage account, and you want to devote more assets to the active approach now. Again, I think splitting up the approach to whatever is in your retirement accounts to passive and whatever is in your brokerage accounts to active makes a lot of sense. So here you would be about 29% active and 71% passive, so still the bulk of your assets passively invested, but a much bigger chunk devoted to the active approach. Or maybe you have a $200,000 retirement portfolio and a $40,000 brokerage account. Again, with the natural split of retirement assets into passive investments and brokerage accounts into active trading, you're looking at about 17% active and 83% passive. Of course, you don't have to do it this way. You don't have to use your retirement accounts for passive funds and your brokerage accounts for active funds. You can certainly do it a different way. You could even mix it up if you want to. But when you start to learn about things that we were not able to cover in this course, with buying powers and margins and things of that nature, it does make sense to begin with passive funds in the retirement accounts and active funds in the brokerage accounts. There are many, many, many ways to split this up. But whatever you decide, here are some important things to remember. First, by keeping some amount of your assets in passively invested positions, you'll maintain the familiarity of what you've been doing your entire investing career. So playing the natural market drift higher, collecting dividends, dollar cost averaging, all that stuff. Second, remember the strategy I suggest you start with for even your active stuff is the covered call, which we introduced just a little bit ago in this very crash course. So even within the active portion of your portfolio, you'll have that same familiarity of long stock. From there, you can grow into vertical spreads, possibly even short strangles down the road, and many, many other strategies. But lastly, again, do not forget, this is not a race. This is not a competition. The market will always be here. So don't go fast just for the sake of going fast. And don't dive into the deep end before you've even dipped a toe into the water. You're going to mess up and you're going to make mistakes. So ease into the active approach little by little and only do it as you are ready. And I'm here to help you as much as I possibly can. So please, you can always email me. I'm jschultz@tastylive.com, or we can connect on X at jschultzf3. But now, where do you go from here? Well, given the nature of this crash course, there were so many things that we were not able to unpack, that we were not able to dive deeper into. And so, if you want to use this crash course as a catalyst to improve your skills and improve your abilities, then I would strongly encourage you now to dig into the live show on the Tasty Live Network, dig into the archives, and maybe possibly even check out some of the other crash courses that are already available on the network and on the YouTube channel, such as the one that dives deeper into what it means to begin to trade options, and it happens to be starting right now. As a kid, I used to always tell my mom, I think I was born with speed and intelligence. She still reminds me of that. And I'm like, yeah, I definitely have no speed. But on the intelligence side, I think I figured a couple things out. My mom was a stay-at-home mom, and my dad really provided. He was a very blue-collar worker. In fact, my family lived paycheck to paycheck. And so I saw that. I actually said, I want to be financially independent one day. For the better part of my undergraduate career, I was convinced I wanted to be a stockbroker. I actually worked an internship at a major financial advising firm, and they offered me a job. They said, Jim, just go graduate, come back. But then I actually had an experience. So for all 4 years of my college career, I tutored students in accounting, economics, and finance. And most of the time, the students would come to me and basically to do their homework for them. And I would usually send those people on their way because I wanted people that really wanted to learn. Senior year, young girl comes to me, name's Carolyn. She needs help in microeconomics. She is completely lost. Her graduation hinged on her performance in this class. Obviously, she wanted to graduate, but I could feel this natural desire, this yearning to actually know and understand the material. I mean, I had to explain marginal revenue to her at least 38 times before she finally got it, but she got it. We go through the whole semester, we say our goodbyes. A couple days later, I'm standing outside waiting for my friends to come pick me up. I get a phone call and I missed it, but I felt my phone buzz to tell me I had a voicemail. And I looked down and it's from Carolyn. And literally, that 60-second voicemail changed the entire course of my life. So she basically said, Jim, I just want you to know that I'm gonna graduate this Saturday, and I'm only gonna do it because of what you did for me. I'm only gonna do it because of the patience and because of the time that you took with me. I never would have made it without you. I will never forget what you did for me. I hung up the phone, and I had a feeling inside of me that I'd never felt before. And I said, wow,
I said, I need to explore this. I canceled plans with my friends immediately. I went to the computer lab. I started researching PhD programs. I said, I want to have more of this experience. I said, I think this may be what God wants me to do. Most of financial media is all based off of story and direction. And it's really interesting because it's either you try to find the story to predict the direction, or after the direction happens and you realize you didn't know anything to begin with, you find a story to attach to the direction in a very ex post type of way. We acknowledge, we own up to the fact that nobody knows anything from a market direction standpoint. So what do we know? What can we rely on? And it's the math, the statistics, the probabilities. It's changing the landscape of investments forever. And to be a part of this team, I count that as a tremendous blessing.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
One foot in front of the other, put your best one forward. You've got everything that you have ever wanted. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even
I gotta keep it smooth. You gonna want it right. They gonna bring it down. I gotta feel good. You wanna see my moves? Let's party all night. We gonna build it up and then we tear it down. They gonna know our name all over this town. We gonna stir it up and do things our way. So if you wanna move, get out of our way. I'm feeling fly tonight, like a rocket ship. I wanna drive fast in this red hot whip. We gonna stand our ground and show off all our moves. Get out the glitter ball and play some dope blues. I wanna play the game, I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing. This body totally bussin'.
Schultzen, this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Friday edition of what it is that we are trying to do. Guys, welcome to a post-CPI world. Like, are we actually here? Did we actually do it? Again, as usual, I am not exactly sure. This could be Lost Season 5. This could be Lost Season 4 where nobody really knows what's going on because you've got flash forwards, flash backwards, flash sideways. Like nobody has a clue what is happening at all. I have a feeling we're in that exact same situation right here and right now. But we're together and you guys are here and I am here and man, we are doing it. So thank you guys so much for being a part of the show. It's only because of you guys that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and you can communicate with your brethren who are also watching the program. You can celebrate, of course, if you are a bull. You can commiserate if you are a bear. But it is, of course, a good time had by most. And naturally, if you have a question for me, I would get it in the chat box as early as you can so that the likelihood or the delta that I get to that question is even higher. You don't want to bank on a surprise and delight. Like, you don't want to push all your chips in the middle on a surprise and delight. Like, man, that's like buying and expecting a butterfly tailing Dr. J for earnings. Like, do you really think that's going to work? That is absolutely not going to work. So, Josh, go ahead and bring us into the market. Man, let's have a quick little look-see. Yeah, I don't know what they printed. I mean, I know it was imaginary and fictitious, but yeah, the market loves it. It's totally made up. but the market couldn't get enough of it. EME S&P is up 29. You've got the risk-free instrument, also known as the NASDAQ Futures, extremely high-risk product for all the new people out there, up 165. You've got the Boomers up 157. You got the Russell 2000 Futures Index up 39. Man, lots of green on the screen. Everybody's excited. Bonds up 17. Notes up 11, oil up 7 cents, UB40 up 19, the Shifties up 116. You've got the Hunt Brothers. Where are my Hunt Brothers at? SI, SIL, same thing, whatever, other than the fact that it's 5x the size, of course. Silver up to 78 after kind of crash boom banging yesterday with the metals getting absolutely clobbered. You got the British pound is up, the euro is up. Man, everything is up. What's Bitcoin doing? Are they still around? Yeah, they're doing it, man. Up $3,000 today, up to $69,000. So the crypto brothers are celebrating, the Shifties are celebrating, the Hunt brothers are celebrating. Everybody is celebrating. Obviously, volatility is going to be down on a day like today. Volatility futures down 40 cents. And the VIX spot volatility is going to be down only $1.17. I'm a little bit surprised that it's not down more than that. I mean, the market's not like, it's not matching yesterday's drop, so it's not up as much as it was down yesterday. So we still have some work to do, of course, but we've got an hour and a half left, man. Like, we've got an hour and a half left to go in the market trading day today. It still could happen. It's not totally impossible. VIX at 1960, now down a little bit over $1. So, all right, so what I want to do today, man, look at this portfolio. We got a lot of positions on, man. I mean, let's count these up really quick. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15. I typically like to live between 5 and 10. That's generally where I'm the most comfortable, where I feel like, you know, I can give the positions the attention that they need and require. When I get to like 12, 15, of course, now things begin to slip through the cracks because I'm trying to really go through all the salient details of whatever position might need to be communicated about with you guys. I mean, that's the purpose of this show. Like, that is literally the objective that I'm trying to hit, you know, every single day. And we typically get there maybe 2 days a week, maybe 3 days a week, but we try to get there every single day. And so when I think about, you know, position and number of positions I carry, this varies so wildly from one trader to the next. And so some traders like holding, you know, 3 to 5 to 7. They kind of like a smaller number. Some traders are kind of like 20, 30, 40, 60, 80, whatever. I'm kind of on the lower end of that spectrum, and I'm generally between 5 and 10, I would say. And I don't think there is a right or wrong answer here. I think it's largely going to depend on a lot of factors. Your account size is a big factor. Your experience level is a huge factor. Your skill level is a big factor. What you're trying to accomplish is a big factor. Your schedule is a big factor, right? Like, can you trade essentially all day long? Like, are you in a position where you're able to kind of be plugged into the markets whenever it required, whether they're working or not? I mean, whatever. I mean, some people have a lot of flexibility with their work. Other people don't. And so you have to kind of take that into account when you're trying to figure out how many positions do I want to carry in my portfolio. I'm going to say, having communicated now, I mean, it's thousands, maybe tens of thousands of traders over the years. I mean, email, you know, the live chats on the show, at live events. I mean, it's a lot of traders. I'm going to say the median number of positions that I see traders carry is probably around 15. It's between 15 and 20. I'm going to say most traders are concentrated right around 15 to 20, 13 to 14 maybe on the low end, 19 to 20 maybe on the high end. And so if you're looking for a number and you're like, man, I need a reference point, I would kind of start somewhere around there. And obviously, if you have less experience, you're going to be even lower than that. I would only start with a few positions, maybe 2, maybe 3, maybe 5. If you have more experience, then I would experiment with more positions. Because obviously, you know, the smaller you can remain and the more things you have, the more logs you have in the fire, the more you're able to do things. You're able to capitalize on opportunities. You're able to diversify away different, you know, levels of risk, whether it's directional risk or volatility risk or time risk and duration risk. I mean, you can really spread yourself out in a lot of different places, which obviously can be really, really nice. Not only, you know, the time and the direction and the volatility, but also products. You can be in options. You can be in crypto. You can be in futures. You can have a little straight stock, you know, kind of in the mix. And so you can do a lot of different things if you try carrying more positions. But you'll figure it out. Like, it will naturally kind of hit you where you're kind of like, man, I think I bit off more than I could chew here. Like, I think I'm a little bit overextended here on the number of positions. And so, but I would try, you know, a higher number as you gain experience. And then you're just going to, you know, kind of let the wind blow you wherever it's going to blow you. So, all right. So there's a few thoughts around, position, number of positions, not really position sizing. That's kind of a separate deal. So let's talk about a couple of things going on in the portfolio. And then, man, I see you guys in the chat. Man, look at you guys. Dexter's here. Man, Ramsey's in the house. Man, look at Alaska Synthetics is in the house. Man, Finwest and Daniel Perkins and JT. Man, iPod Touch is even here. Man, this is not your day, iPod Touch. Man, I would have probably called it in today. Today would have been a good day to take off. But Sam L's here, or Daniel's here. Man, look at Ash Fan, the Preston, and A. Wills, and so many others that I'm missing, of course, but I'm just grabbing the ones that I see. And so, all right, so let's go ahead. So let's talk about MES and MNQ really quick. This will be super quick. I mean, we're talking no more than 7 minutes. And by that, I mean no less than 7 minutes. MES, we're short a 6750 put. MNQ, we're short the 24,250 put. And so obviously on a day like today with the market ripping back, well, I wouldn't really call this a rip back. With the market slowly matriculating higher on a day like today, relative to yesterday, of course, because, yesterday, ES was down 100, SPX was down 100, NASDAQ was down 500 or whatever it was. And so it was not good, man. But MES and MNQ, right now you can see we're at about a scratch on both of these trades. We're down a little bit on MES. We're up a little bit on MNQ, but I'm going to essentially qualify both of these guys as a scratch right here and right now. And so this is very much a do nothing situation, right? I mean, you look at, MES, I mean, you've got the stock at 68.80. The strike is 67.50. We're 130 points away. We're 130 points away, and we just made it through the most important CPI print that I've ever experienced and that I've ever studied. And I went all the way back. Man. I went back to the Roaring 20s. I went back to the Tulip Mania. I was back in like first century Judea. And I'm like, I don't think I've ever seen anything that, more impactful than the CPI print. And yet, here we are. We made it through. And so because of that, I'm like, all right, now I think we might be on easy street, maybe, possibly, probably not. But let's just sit tight on this MES short put because we've got so much room between where the stock is and where the strike is on the strategy. And let's just let it play out. Like now's the time. Let's let the theta do its thing. Right? This is so important to remember. I was talking to a couple trader guys last night. Like it's just so, and we were all having a long discussion around when the option is out of the money, regardless of what your P&L says. Now, right now, both of these are about a scratch, so this is obviously going to make sense. But even if your P&L is red, hear me on this. If the option is out of the money, the position is working. If the option is out of the money, if you sold it, of course, if you bought it, that's a totally different thing, and you're getting hurt, and you're hemorrhaging cash, and that's not good. But if you sold the option, like the foundation, the fundamental tasty principles, you sold the option, it's out of the money. It's working, regardless of what your P&L says. Now, you might be out there and you may be looking at a position in your portfolio right now. You're like, Jim, that's crazy because I have a position. It's still out of the money and I'm getting crushed. I'm down $2. I'm down $4. I'm down $9, whatever. Well, in my opinion, it's still working. In my opinion, it's still doing its job because remember, if you play that thing out to the end, if you fast forward and extrapolate forward, that thing is going to expire worthless. Now, the closer it gets to being in the money, the closer it gets to being tested, you're starting to lose some of that buffer. You're starting to lose some of that wiggle room, right? Obviously, it's gimmies and gotchas, right? And at a certain point, you run out of the buffer. And at a certain point, you're in the money. And then at a certain point, it's not exactly working anymore. And all that is, of course, true. But when we think about when we're selling options, what we're trying to accomplish, we just want the option to stay out of the money. That's all we want. Now, of course, if it's a directional play, I sell a put, it helps a whole lot if the stock goes higher, right? I reach my profit targets more quickly. I don't take any heat, blah, 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 blah. Of course, I sell a call, the stock goes down. I reach my profit targets more quickly. I don't take any heat, blah, 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 blah. So if you have a directional play, and you get the direction right, obviously everything is going to work a lot more easily. But don't forget, when you sell out of the money premium, which is what we're doing like 97% of the time with the options that we sell. Yeah, sometimes we might sell something at the money, and every once in a while, just to mix it up and kind of shock the muscle, we might sell something that's in the money, right? But most of the time, it's going to be out of the money. That buffer, that real estate between the stock price and the strike price is incredibly valuable. Like we're talking St. Petersburg beachfront property. I mean, that stuff is upper echelon stuff. By that, of course, I mean, it's somewhere around the B minus. range. But that's what you want. You want that buffer that's in there that's going to absorb moves against you. And so when I look at MES or I look at MNQ, it's the same story. The trades are working. I don't need to go in and do anything special. I don't need to go in and try to override the process and start meddling with things and potentially creating, a much worse situation for myself because I wasn't willing to just be patient and kind of, take my foot off the gas and be like, hey, let's do nothing. Man, we got a 3-day weekend this weekend. Right? 3-day weekend this weekend. It's banana natties for everybody, man. Banana natties for all. Right? So MES, MNQ, it's all working. And so there you go. So all right, so there you go. I think that actually was 7 minutes, which is pretty funny because I said it sarcastically, but no, we pretty much nailed it. And so MES and MNQ, market's selling off a little bit. Okay, all right. MES and MNQ. All right, so those two guys are do nothing. I also want to talk about, let's talk about, let me see here. Yeah, let's talk about Starbucks for a second. So this guy is really interesting because this is our, we have our long shares and then we have a call that we sold against those shares. And this is our investment style covered call, right? If you've seen the show for any length of time, whenever a covered call comes my way, whether it's, one that I have myself, which is this one, of course, or you guys ask a question about it, I always start by, making sure everybody is clear. We have to differentiate between a trading style covered call and an investment style covered call. A trading style covered call is kind of like an in a 45 out of 21, like kind of a smash and grab. Like this is going to be kind of a quick deal. Investment style covered call is intended to be longer term. It's intended to be selling calls against shares that you don't really want to get rid of, right? You've held them for a long time or you intend to hold them for a long time. And you're like, yeah, this is not at all kind of an in and out, kind of a wham, bam, thank you, ma'am type of situation. Like I really want to hold this thing. I'm not even sure how long. Could be months, could be years, could be decades. I don't know. But I'm intrigued at the prospect of bringing premium into the mix so that now I have more ways to potentially be profitable, increase my probability, and just all that good stuff, right? For my Starbucks cover call here, I've been very clear about this. We've had this position on for like 15 months now. This is an investment style cover call. We've treated it like that. We've treated it like that the entire way, and I'm not going to change now. Like I'm not going to pivot now and call an audible and turn this into something it was never intended to be. So understand that when I talk about what I'm going to do with this call for the next couple of minutes, like 10, 11, 13, whatever it ends up being, I'm talking and speaking through the context of investment style cover call, which is different than a trading style cover call. But I actually think, if I could just wax poetic for just, 9 minutes, I mean, it's a Friday, man. I think for most traders, actually, the covered call is going to most often land in the investment style bucket. I know some traders do covered calls like trading, like for a trading vehicle, like more shorter term, maybe on earnings or whatever. But I'm going to say that's a lot less common. Just based on my own, just interactions with people, conversations with people, and just thinking about the strategy, right? When I'm thinking about a covered call, and correct me if I'm wrong, like somebody tell me in the chat, am I completely misrepresenting what a covered call is? Like, please tell me, I want to know. And the algo would love to know, I can assure you of that. When I think of a covered call, I'm not really thinking of a quick mover. I'm not really thinking of, volatility is super high. Let me take advantage of this. What am I going to choose? A covered call. It's like number 10 on the list. It's like number 20 on the list. Oftentimes it's not even on the list, right? I'm going to short strangles. I'm going to short puts. I'm going to ratio spreads, like whatever, right? Covered calls, they kind of already self-select themselves into this investment style bucket, this longer term bucket. And so that's, one of the reasons why I keep coming back to the Starbucks position. And I think it's been a great case study for the last 15 months, because for those of you guys out there and you gals out there that are using covered calls, I'm willing to bet that 75% of the time it is for something that doesn't have an indefinite time horizon, that you are intending to hold for the longer term, and that you don't really want to get rid of in the next 45 or 21 days. Now, sometimes you obviously pivot and you change when the stock moves around, and that's because markets move and things change, and we have to adapt. But going into it, like when I sell a strangle, like I'm looking to get out at 21. Like that is very, very clear. I'm not looking to hold this thing for months and quarters on end. If I do, then something went very, very wrong, right? But a covered call, I think most traders are looking to hold that for the long term. But somebody please correct me if I'm wrong on that. And I am completely misrepresenting the covered call with no disrespect paid to the covered call, of course. But if I go to Starbucks here, so for this short call, you can see the stock is down, right? Starbucks down $2 today. And you've got, we're short this 100 call. I sold it for $2.25. It's marking at $1.36. So we're up about 90 cents on the trade so far. Or excuse me, we're up about 90 cents on the short call. Remember, with a covered call, whether it's a trade or an investment, you never want to break them apart. You always want to view them together as a package. I'm up about 90 cents on the short call. I'm obviously losing on the stock on a day like today. The question becomes, what am I going to do with this short call? Am I going to manage it at 50%? Am I going to do something different? Like, how am I going to handle this, from this moment forward? Generally speaking, with an investment style covered call, I am not looking to manage this guy at 50% of max profit. I am looking to get more juice out of the orange. I am looking to get more like 60% or 70% or maybe even 80% out of that premium. And part of the reason why is because I want my management and adjustment to match the spirit of the strategy, right? If something is kind of an investment, quote unquote, style strategy, I don't know, and maybe I'm wrong on this, but it doesn't feel right to me to go in there every day, every week, a couple of times a day, whatever, and like do a bunch of things around the edges. It kind of feels more feng shui to me to kind of have this thing be a bit more laissez-faire, kind of have this thing be a bit more conservative and hands-off and just let the strategy cook over time. Just put it on the back burner, low and slow, and check in on it every few days, every week, whatever. Now we check in on this guy pretty much every day because it's a big part of the show. But I mean, if you're out there and you've got one of these on, it's not really something that's intended to be looked at, multiple times throughout the day. It's kind of like a one and done type of deal, kind of like a musket, right? And so when you think about, your investment style covered calls in this fashion, I think this is the time to go for more than 50% of max profit. Whether that's 60, 70, 80, you can decide. But I think it makes some sense to actually go for more juice out of the orange. Now, I also don't think it makes sense to take it all the way to expiration. Like, I think, if we get to a point with this call, for example, where I sold it for $2.25, if this thing's marking at 50 cents, right, because Starbucks is getting crushed in the next week or so, now there gets to a certain point where it's like, okay, it doesn't make any sense to hold this any longer. Like, why am I holding this? All it's doing is it's capping my upside potential, and I have really not much more juice left in the orange. Not to mention, remember the decay curve. In fact, here I'll even bring up, man, I lost my black drawing board because I have so many positions on. Wow, look at that. Where can I muster a black drawing board? Brutal. Okay, we'll have to do this down here. So if you look at a graph, and this is not going to be drawn to scale. I'm not even sure if I'm going to draw it correctly, but I'm going to try and do this from memory because I don't have it on me at the time. If I look at, extrinsic value over time, that's EXT on the y-axis and time on the x-axis. The decay curve, oftentimes when you see a decay curve, you see something like this, right? This is kind of your prototypical decay curve. Well, that's for an at-the-money option, right? And so when you think about an at-the-money option, it's going to decay in that kind of perfectly concave fashion that we've all become accustomed to. Like we've looked at this graph a million times. I brought it up on the show a million times. And so this is what we're used to. But if I grab my glacier freeze here, an out of the money curve doesn't decay like this at all. In fact, it looks more like this. And again, I may not be representing this curve perfectly, but I should be able to grab the general spirit of it. It's going to look kind of like this. It's going to be a little bit flat, and then it drops off, and then it flattens out again. So it looks almost like a reverse S, I guess that would be, where, it's kind of flat in the beginning, similar to an at the money curve, but then it really drops off. And this is like maybe between 35 and 14 days. I want to say like this really steep region is approximately 35 to 14, I want to say. But then right when you start getting close to expiration and you're still out of the money, you are not getting paid day by day by the extrinsic value dissipation like you were previously on that trade. This, by the way, this little glacier freeze deal that I did a terrible job of drawing in that tiny little corner of the screen. Like, man, how could you guys even make that out? Like, I don't know, but just follow me verbally through the forest. That glacier freeze graph, which is a train wreck. So if you're just listening to the show today, you are not missing anything. In fact, you're probably in a better spot because you're not even trying to decipher what I just put on the screen there. If you are selling out of the money options and you're like, okay, in a 45 out of 21, and you kind of want to know, why am I doing this? Like, why am I getting out of 21? A big reason why we get out of 21 is because of the gamma risk. The gamma risk close to expiration, blah, 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 blah. We've talked about that a million times. Here's another reason, though. This is another reason. The decay for an out of the money option, it just doesn't really pay you like it did before when you are around 14 days to go and then inside of 14 days to go. And so when it comes to holding on to your out of the money options to get every last little drop of juice, it just doesn't make any sense at a certain point. So anyway, that's a big reason why we take things off early. And so so for Starbucks though, I'm not going to wait till the very end and run it all the way to expiration. That doesn't make any sense. But yeah, so those are my thoughts. Those are my thoughts on Starbucks. And then yeah, everything else. AMD's looking fine. Amazon looking fine. Look at Hood, man, up $5. That's some good stuff. I got Meta. We're long a little Meta. Look at the SLV strangle. I think it's cooking with SLV up today, so that's nice with a 59-100 strangle in SLV. Look at Snapchat, just absolutely scorching, up 4 cents. And so Snapchat is in a really, really great spot. And then Tesla, obviously up $3. We're good to go on Tesla. And so, all right, so there you go. There's a couple of things, but I want to see where you guys are at, man. Let me see where you guys are at here on this CPI Friday. Which again, talking about things that are not feng shui, that is absolutely one of them. So, all right, let's see here. Let me see if I can surprise and delight some people near the end. I kind of like doing it near the end because that really mixes it up a little bit. Okay, let's go to, well, first I'm going to go to Brian Dowdy. Man, I appreciate you there, Brian Dowdy. What's going on there, my friend? Brian Dowdy says, my investment style cover calls just happen to always take my shares away, and I understand that's a high-class problem. Yes, it is a high-class problem. And so, correct, right? Like when the stock runs up through the strike and you just hold it such that the shares get taken away, or they just get taken away a little bit early, which can happen, of course, too, once the option is in the money. That is a high-class problem. Like that's a good outcome for you. Now, of course, if you buy a stock at 100, you sell a call at 110 and it rips to 150, it doesn't feel like a high-class problem. It just feels like a plain old problem. Like it just feels like, man, like, am I the worst trader ever? Like, why didn't I just hold the shares? Of course. But again, remember, guys, the ranking system is clear. Roman Anthony is batting 420. The rear view mirror, 405. And so it's very, very good at what it does. It's not quite at the level of a Roman Anthony, but it's very, very close. And so give yourself, a little bit of slack. Give yourself a little bit of leeway when you're kind of evaluating the decisions that you made after the fact. Like you're evaluating these things with, the benefit of hindsight. Like you're trying to evaluate how things went when you already know how they played out. It's never quite that clear in the moment. So that's why we just try to put ourselves in a position to be, to give ourselves multiple ways to be quote unquote right on the position and make money and move forward. That's why you sell a call against shares. And so it is a high quality problem, Brian Dowdy. I'm glad that you recognize that because a lot of traders don't actually. And I understand it can be, you have to kind of get used to it and you have to put your reps in. But yeah, it's always a high class problem when the stock runs up and goes through the short strike. Rodrigo is in the house. I see Rodrigo near the end. Rodrigo says, hey, Dr. Jim, when starting an Iron Condor with 45 days to go, 45.21, 50% wheel, 12 total in SPY, SPX. Is it better to open 3-4 at once when the VIX is high or ladder? Or you mean ladder like LADDER or ladder and open one per day? Thanks. Okay. So this is a great question. So when, so you have, and this could apply to your specific strategy or encounter, this could apply to really any strategy. So you have a situation where, your maximum size on a given strategy, so Iron Condor, vertical, whatever it might be, defined risk is going to make a little bit more sense here because undefined risk, the sizing is so different from one trade to the next, based on buying power and obviously, implied volatility, the price of the stock, things like that. Let's say that your maximum position size is 4. Should you put all 4 positions on at once, or should you layer them in tranches, whether it's 1-1-1-1 or 2-2 or 2-1-1 or 1-1-2 or 1-2-1? There's a number of ways that you could kind of slice and dice that guy. I actually, generally speaking, like layering them in. I like, generally speaking, to kind of apply a tranche approach to where you understand what your position limit is. And you're like, all right, I'm going to go in. Even 2-2 would be fine. If 4 is your maximum total, 2-2 would be fine. Maybe you do 1-1-1-1. That's also fine. But I actually like a more kind of methodical approach to exposure. It's just graded exposure, right? I'm looking for a graded exposure effect on this position, especially Like right now, for example, you've got the VIX at 19. Is that really high? No. Is it 12 or 13? It's not that either, but we're not talking about the VIX at 27 or the VIX at 33. When it's like, okay, in those environments, maybe I'm pretty close to position limit, I'm pretty close to capital allocation limit, but we're not at that point now. And so, especially when volatility is kind of, it's inching higher. I mean, it was at 21 or whatever earlier today and then yesterday. And so, those are situations when you want to take advantage of it to some degree. But I actually like, kind of doing it in a later approach. And so, that's what I would do. I don't do that on the show, of course, because the show, this is for educational purposes, right? So that's why you guys are always seeing me do one lots and things like that. I'm not really layering in with tranches and such. Although maybe we could start mixing that stuff in some way, shape, or form. But hopefully that helps you there, Rodrigo. And so let's see. Let me go ahead and let's see. Let's go all the way back to the beginning. Man, look at you guys. Man, you guys are putting in work today, man. Look at you guys on this algo. It's not the algo's. The guy's gonna break the algo. Speaking of things that are getting broken, where's that by touch at? EMI S&P is only up 14. Boomer's only up 70. Man, yikes! It's happening out there, guys. I don't know what it is, but it ain't good. So Sam L's in the house. Doc, what's going on? What's going on there, Sam L? I need your guidance on a trade. My Valentine has a delta of 25. What do we even do now? I don't know how to take that. I'm not sure how to evaluate that. I'm not sure if that's good or if that's bad. Like I'm not sure if you're talking about like your Valentine, like your date, or like your date, or are you talking about like the Valentine gift? Like I'm not exactly sure. But I do know that a delta at 25 generally means this is not good. Right? Which is funny because when we sell options, we're oftentimes selling at 25 delta, which is very, very good. But when we're talking about like everyday life, obviously we want to see deltas north of 50, usually. Like 25 is kind of like, all right, we got some work to do. And so it sounds like, my friend, that you've got some work to do and only you can figure out how to do that. And then Sam L says, we survived CPI barely. Yes, we did, my friend. Again, I'm not exactly sure that we're here, especially given the fact that we're about to be red on the day. So we're about to be red on the day. By touch, please save us. Like you didn't tell us this was going to happen, man. I mean, you probably did yesterday, but I don't remember hearing it or reading it. And so Wolf is in the house. Dr. Jim, friends coming to Dallas this weekend. What's going on, my man? That's awesome. They think they are here for a college baseball game, but I'm going to lock them into the house and loop the option crash course on the TV. That's exactly what you should be doing because, again, your boy needs that watch time. I'm just doing my part. And then Wolf says, after the 5th hour, I might introduce them to the Banana Natty. Have a great long weekend. Yeah, you too, my friend. Oh, you got me on that one. That's some good stuff, man. I mean, can you think of a better weekend? And by better, I mean, can you think of a worse weekend than the options crash course on a loop, a never-ending loop with just banana natties on tap? Like just a steady stream of banana natties just coming your way. You can't avoid it, right? Like, oh man, like I'm not sure like what Dante, wrote about with like the Inferno and like the layers of hell and stuff, but that's got to be one of them. It's got to be. And so, but I appreciate you there, Wolf. Thank you, my friend. JT is in the house. JT, I swear Dr. J is describing my undergrad experience, except I told my mom, I think I'm slow and stupid. She assured me that I'm extremely fast and not to worry about it. Oh, that's so funny. Oh my gosh, that's so funny. And so, yeah, moms are the best, man, aren't they? Like moms are the best because moms, they will make you feel like you are literally the most important, most special person in the world. I mean, that's how my mom oftentimes made me feel. And then I went out into the world and I realized I'm just an average schmuck. I realized I'm just like an average dude. Like my mom kind of lied to me, but man, they will pump you up. They will 100% pump you up, much like yours did there, JT. So that is some good stuff. KT is in the house. I love a chart of SPX in general. What you're seeing as is so toppy. Man, let's take a look at SPX. I don't even know if you're asking me there, KT, but I'll offer up my unsolicited thoughts. If I go into a chart of SPX, okay, is that a daily chart? Wow, this is a daily. This is what we're doing now? This is what we're doing now. Really? Okay. I mean, look at that, man. 7,000 to 6,800. Like, there it is. This might be the 4th level of Dante's Inferno, right? The 5th level is options crash course on a loop with banana natties. But I think the 4th level, the level you actually get to before that level, is this right here, where you have SPX topping out at 7,000, SPX bottoming out at 6,800. And we just do that over and over and over and over and over again forever. And so I wouldn't call that toppy there, KT. I wouldn't call it bottomy necessarily either. This is kind of, back and forthy, I think. And so I don't know there, KT, but let me know how you're seeing it. I'd be very curious to know, and the algo would love to know. And so the Preston in the house, Dr. Jim, what do you think about TLT? Up or down? You're the man. Man, I appreciate you, the Preston. I appreciate you very much. Let's take a look at TLT. Okay. I mean, looking at TLT, you've got some gap and go, right? I mean, you kind of got a nice little combination, right? I mean, there's a little, gap and crap, little gap and go, little gap and crap, big gap, big crap. And then gap and go. So I don't know, man. It looks like, I would have to say that, interest rates are clearly going lower. I don't know the pace that they're going lower. I mean, with the new Fed person and whatnot, I mean, all that stuff is kind of up in the air, right? But interest rates are clearly going lower. And so the expected move on bond prices would be to go higher. But what's tricky about that is, that's what the theoretical construct would suggest. And I understand, rates changing in the short term does not necessarily mean long-term rates or prices are going to follow suit. And that's where you get, inverted curves and steepeners and things like that. Right. But I mean, TLT is a 20-year product. I mean, this is more along the longer end of the interest rate range in terms of duration. I actually do I see bond prices potentially going lower, as I think the market this year, I think it might surprise some people. It could be inflationary effects. It could be a number of different reasons. But I think bond prices are going to surprise some people by being weaker than a lot of people expect, which will send longer term rates a little bit higher. And I think that that's going to potentially put the Fed in a little bit of a bind, especially with a new person in charge. And so it's like, man, what is this new person going to do? What is this new guy going to do? And most importantly, what is he going to wear? Like, is he going to maintain the purple streak? Because it's quite a streak at this point. Or is he going to come in on day number 1 as a total power move and go neon green? Like, is he coming in day 1 fire engine red? Like, that's what I want to see. Like, show us that you're willing to shoot from strength. Show us that you're willing to stand on your own 2 feet. If you come in with lavender or you come in with lilac, it's like, okay, here we go again. Another 4 years of the same old song and dance. Like, no, man, I want new ideas. I want novel thoughts, and I need neon green or fire engine red. But that's just my take. And so TLT, I actually think it's potentially going to go lower, sending longer term rates higher, just to be a little bit contrarian. Let's see. Ashfin is in the house. What's going on there, Ashfin? I'm in my car and driving, but it's still Dr. Jim time. Let's go, man. I appreciate you so much, my friend. Thank you for being a part of the show and just being, inside the core position. And I appreciate you so much. A Will's in the house. We did it, Dr. Jim. We survived another CPI. Again, I'm not exactly sure. I mean, that's what they're telling me, but they could be in the same dream that I'm having. Right. And so it's like, I don't know. Is this really happening to us? I'm not sure. But A Will says, been much more successful since implementing the do nothing strategy. Thank you for sharing, man. You are welcome. And so I know we have a lot of fun we try to have some fun on the show, and we keep it light. We keep it, entertaining and whatever. But I do try to offer up at least a few breadcrumbs of wisdom along the way as well. And one of them, all kidding aside, has been the do nothing strategy as my default setting. Like, this is over years and years and years of anecdata, like years and years. I've just learned. I'm like, man, if I actually didn't do anything, a lot of times I'm in a really, really good spot. Now, you have to know what you're signing up for, right? There it is again. We say that almost every single show. If you're going to implement the do nothing strategy, what do you need to sign up for? Well, you need to sign up for the simple fact that, okay, am I small enough on order entry? Like, have I sized correctly such that I can do nothing? Such that I've given myself the flexibility to do nothing? Because I've been here many, many times. A number of you have also been in this same spot. You want to do nothing. You're pretty sure it's the right move, but man, you are sized up to the gills. And now all of a sudden, you're not doing nothing. You're doing a whole lot of something, right? To change that sizing problem that started with trade entry. And so the only way the do nothing strategy can be all it can be is if you're sized correctly, number one. And number two, you have to think through all the pathways forward through the forest. You have to spend some time, like mentally, down pen and paper, right? Excel spreadsheet, have your AI agent do it, whatever. You've got to think through, okay, if this happens, what am I going to do? If that happens, what am I going to do? If the other thing happens, what am I going to do? Is nothing all three of them? It could be, right? But you just have to think through, okay, I sold a put. What do I do if I'm tested tomorrow? What do I do if the stock goes up? Am I going to manage it quickly? Right? What do I do if it just chops around? Like, think through these things and go through these thought experiments. It's incredibly valuable to kind of run these reps through your mind, because when you think about it, just bring it back to the baseline. Stocks can only do one of three things. They can only do one of three things. They go up, they go down, they go nowhere. That's it. That literally is it. Now, there's degrees of magnitude, there's gradients of exposure, there's a lot of things that go inside of that. But if you just zoom out, like super high level, like let me just survey the landscape. It's up, down, nowhere. That's it. So what am I going to do if it goes up? Think through that. What am I going to do if it goes down? Think through that. And what am I going to do if it goes nowhere? Think through that. And again, you may land on doing nothing in all three scenarios, but it's very helpful to run those kind of play those things through your mind so that when they happen on the screen in real life, real markets, real prices, decision making under duress, like it's all happening, you'll be prepared. Right. And then once you do it, once or twice or thrice or 10 times, 20 times, 30 times, whatever, now you're building the muscle memory. Now you're building the reps to where you're like, okay, I feel a lot more confident kind of executing what I'm trying to do because I've done it 30 times just this past month or whatever. Right. And so that's kind of the playbook that I like to follow myself. But that's awesome to hear there, A-Wills, man. That's really, really awesome. Sam L, posting for the Algo to flag. Appreciate you, man. Doc needs guidance on the trades and Valentine's with Miss Marie June. Now you're just playing with me. That's good stuff. Yeah, I think we're going to lay low, man. Like, I think now, again, I've got to be very, very careful here. I think I remember talking to my wife just a couple of days ago, and she was like, no, she didn't ask me. I asked her. I said, what do you want to do for Valentine's Day? And she said, honestly, I kind of just want to lay low. Now, right away, I was keen on the fact that this feels like a trap. Okay. I said, you really just want to lay low? Like, it's a Saturday night. Like, we'll just chill out. Like, get a movie, whatever. Like, quiet, and I put the kids to bed early and just you and me. Am I hearing you correctly? And she said, yeah, we'll just lay low. And so I am going to proceed with caution that is our plan. I could be completely wrong. When I come tomorrow night with sweatpants and a hoodie on, and I'm like, hey, what movie are we getting? It could all backfire and blow up in my face. And so the do nothing strategy may completely backfire tomorrow night. And I will let you guys know on Tuesday of next week when we get back from the holiday weekend. But yeah, we're not doing too much. We're just laying low. And I mean, with 3 small kids, it's like we rarely have time to connect and time to just hang out together. And so honestly, it's really nice for me and Autumn to just hang out like on the couch for like 2 hours and just talk and just kind of, I want to hear about what's going on in her life. And then I tell her what's going on in mine. And, she's heard the same B- math jokes that you guys hear. And she's like, yeah, do you have anything new? I said, no, actually, I don't. And so usually when I share the things with her that's going on with me, it's pretty quick. But anyway, I digress. And so JT is in the house. Ashvin, no need to look at the road. Dr. Jim is almost on. Ooh, yeah. Yeah, I don't know about all that. Maybe go with the audio only version if you're scooting around town there. Orgdenu in the house. What's going on there, Orgdenu? Hello, Dr. Jim. Could you do an educational series or a webinar about position sizing, specifically for defined risk? Lately, I am not doing so good, and I think it's because of sizing. Thank you so much. Okay. So defined risk, position sizing. So we actually have some very exciting things that are happening on the network with content that's going to start. I'm not sure if it's going to start next week. It may be the following week. But you guys are going to see a lot more educational content coming out from me specifically, and other personalities and hosts on the network too. But I can speak for myself personally. You guys are going to see a lot more educational content. And so I'm very excited. And so Orgdenu, that may be the first piece that I do. And so thank you so much for all the support. I love the ideas. If you guys ever have any ideas for shows or content, let me know. Put it in the chat, shoot me an email, come by the house, come by the property, and just let me know. And then that would be, I would really, really appreciate that. And so Old T is in the house. What's going on there, Old T? Old T, hey, Doc, when you trade futures, why does the same amount of buying power vary? Why does the amount of buying power vary for the same contract depending on when you go into the trade? Do I have that right? Great question there, Old T, and thanks for joining the show. I don't recall you having been in the chat before. So a couple of things to consider. So number one, buying powers change. They change from day to day, and they can change even throughout the day, depending on how volatile the market might be. Like silver, for example, is a really great example of this. The buying power on a silver contract, whether it's SI or SIL, it changes every single day. And that's because the CME actually changed the margin requirements when silver went ballistic crazy the last couple of months to where it is now actually pinned or pegged to the notional value of the contract. So as the notional value changes, the margins change with that. And so that's one situation where it's always going to be kind of in flux. But even for like other futures like NASDAQ and even S&Ps and whatever, like, you know, if things are getting more or less volatile, the margin requirements on that same future can change. But generally speaking, again, leave silver out of it for a minute, leave maybe even gold out of it for a minute. But like S&P 500, NASDAQ, like the Dow, the Russell, they're going to be fairly static from one day to the next with maybe small changes around the edges. That's largely going to be driven by the market that we're in and volatility and the conditions and things like that. And so, but I got to go. Guys, I got to go. I'm totally out of time. Man, it's so fast. You guys have no idea. But I appreciate you guys, man. I see Patrick's in the house. Man, I appreciate you guys. I see Cameron's here. Man, I appreciate you. I thought Tuss showed up. Look at that. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys on Tuesday.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Hello everyone, happy Valentine's Day Eve, I guess. This is Tim Knight. We've got a 3-day weekend ahead of us. Monday is President's Day. One of the, I guess, lesser holidays on the calendar, but is a holiday nonetheless. And so we're going to wrap up this full week before we head off into Valentine's and presidential celebrations. It is a green day, but it's still a good day. I'd say 60% of my shorts are sort of down, and in general, charts are doing good things. I feels like a real stock picker's market. Charts are working well. Classic technical analysis techniques are working well. And so I'm very pleased to be here to share with you my own ideas and suggestions and thoughts. So let's jump into the charts and kind of catch up with what's going on out there. We start off with a blank screen. Okay, hello. Yeah. Okay, here we go. All right, yeah, please, everyone check out my personal data. Let's go to the charts, like so, and hey, they work. Okay, cool. Pinterest. This is getting zapped. Now, I'm not short it. I have no position, but it's interesting because there's a lot of stocks I'm seeing that used to be the hottest thing in pants back in 2021, and they have just fallen to pieces. Pins is an example of one of these. As you can see here, there was a time that it was like, I used to just like the NVIDIA of its day, but NVIDIA is not a very good example of that anymore because NVIDIA's been just flopping around like a dead fish. Actually, dead fish don't flop, like a dying fish since July. So NVIDIA is a crummy thing to use as a archetypical hot stock, but you get the idea. Things like Pinterest used to be just dynamite, and these days it's not so much. This is down almost 20% on the day. There's just such a tremendous rotation going out away from software as a service, these kind of smaller kind of also rans in the social media space. Another good example, very much an also ran, is Snap. Back in the day, it was called Snapchat. I think the ticker symbol was S&PS way back, but now it's just plain old Snap. And they've tried to reinvent themselves a bunch of times. When they first came out, this was famously their whole meaningful difference was that you could send pictures and they would disappear for whatever reason that might be. That is, as they say, a feature, not a company. But in spite of that, they were very valuable, worth many tens of billions. And they are basically at the lowest they've ever been in their entire history as a public company now. They obviously have been completely subsumed by the likes of Meta. And yeah, they're just dog meat right now. But back in 2018, 19, 20, 21, just incredibly hot, almost a triple digit stock, almost $100. And now it's like $4. And so they've plunged for the past couple of weeks to prices never seen before. In sharp contrast to this, one that really got away from me, and I'm going to talk about this for a second, is Rivian. And I mention Rivian from time to time. Here was the mistake. My observation of this was twofold. One, Rivian, wild as the trading has been on it, and this line is not helpful, let's get rid of it, has generally been in a series of higher lows. So we have this low here, higher low, higher low, higher low, higher low, higher low, again and again and again. And so it'll blast higher for some months, and then almost all of it roads away. But that's almost all of it. It's a lower high each time, a higher low each time. So a general uptrend in spite of all this craziness. The error on my part was thinking it might get just a little cheaper, maybe work its way down to this price gap so I could get a real bargain on my hands after earnings. Didn't happen. Earnings came out and it was off like a shot. Oh, the second observation was very anecdotal. I see a lot of Rivians these days. Lake Tahoe and in the Bay Area in general. This is a bit of a bubble, so that's not necessarily some definitive proof. But whereas I used to see Rivians never, now I see them every day. And anyway, missed that boat. I would say that as lovely as the chart is, I'm not chasing this thing because there is another price gap to worry about right here, which is getting quite close to. So the price gap I was, getting greedy about and thought I could wait for, it was way down here. But we got real close to it with this latest thing. We went from like the 20s all the way down to the lower teens. Weeks and weeks and weeks of selling. And I was waiting for just a little bit cheaper. Come on, that was dumb. So anyway, the earnings came out as off like a shot. I do not think we're going to be seeing these prices again. But I would also, I'm not going to chase it because I think that gap is medium important resistance to respect. The FANGs, FNGS, are up a little bit. I'm ending this week milder than usual on the short aggressive side. And because, we've been in this series too of lower lows and lower highs for a while, and I could see a possibility of some kind of little rally there taking place early next week. It could happen. I think the top is in, but again, I don't want to be really aggressive about it. We've got this 3-day weekend. Who knows what could happen? And it's just kind of oversold in this instance. So I don't have... I've really kind of lightened up, taking profits, even though, thank goodness, this Friday was nothing like last Friday. Last Friday was very destructive to bearish profits. Today, it's just like a neck, nothing, just a little bit less than yesterday, very little damage. But we are kind of deeply sold off here. SMH, the semiconductor ETF, approached yesterday a new high. Luckily, it didn't get there. We had a nice bearish engulfing pattern on it. Right now, it's up 0.5%. It still has not made any definitive break, but fingers crossed. I've actually gotten a little aggressive on this one because I have bought puts on SOXL, which is a triple leveraged semiconductor ETF. And so we'll see how that goes. But SMH is kind of stalled out here. Really no clear direction unless it A, breaks above this teeny little triangle, which would be bullish, or B, much bigger deal, a failure of this ascending trend line. Couple of items that I'm short in that space are Broadcom, AVGO. So that's looking pretty good. Hasn't quite completed the pattern yet, but it's getting there. And NVIDIA has been having a kind of weak day today. It's down 2.3%. And we have been, ever since literally July, as I said, grinding around and not really going anywhere. So it's been just a snooze fest. As of July, you could point to it as an example of just incredible success. Now everyone's not that interested in Jensen Huang's black leather jacket or his pontifications because it just hasn't been doing anything for the past 8 months. So anywho, still short that. Some other shorts I'm in right now just to share things I haven't really talked about much. Futu, F-U-T-U. Really cool head and shoulders top on that one. Look at that, breaking down nicely. Today over 1% negative on Futu. There's the hyperscaler finance company Owl Capital, and they've been engaged in this series of progressive distributions and then drops. So that's moving down. RCL, which has been my nemesis since time began, this is down nicely, 3.15%. What I really want to see is a failure of that uptrend. It'll take a lot of selling to get there. But and that goes way back before Liberation Day. But remain short that. Also CRDO, which was a tail unto itself this week. This is still looking good. Barely changed right now, but that top is still looking pretty decent. Give it kind of a B plus quality on that one. And some puts I own that have really worked out has been Uber, UBER. Lovely round the top on that, and it's just been red. You don't see that very often in this market, so that's worked out nicely too. I'm hanging on to those. All my puts are at least June expiration, so tons and tons of time. I pushed into triple-digit profits on this position with those puts. Items I'm staying far away from as a bear are these muscly critters that have been blasting higher. I've mentioned a few times this week, XLB, Materials Select, XLE, which is energy. All of them wobbled yesterday, but they're strong again today. And XLP, which is the consumer staples, lifetime high again on this one. Just a tremendous run. So I ain't going near them. One theory I had, which I've dispatched with, is that interest rates would be strengthening and bonds would be falling. I have that ain't happening. Interest rates are continuing to sink. Bonds are continuing to strengthen. 3 ETFs that help express this are IEF, which is the 7 to 10 year kind of medium range bonds, and this was breaking down, but as you can see, the past couple of weeks it has completely shaken off those blues and it has invalidated this pattern. LQD, which is the corporate bonds, those hardly even turned down, and those are strengthening lately. And then TLT, the big one, this is the Treasury bond ETF. Again, had a nice little top there, sold off for a while, but over the past 7 trading sessions or so has zipped higher. So bonds have strengthened. Overseas, and just before the camera clicked on, I shorted this one. EWJ, this is Japan. It has had a tremendous run, lifetime high yesterday. It's up a teeny bit right now, but I've decided enough is enough. I've shorted this sucker in size with a stop just above yesterday's peak. EWY, I'm not in, but just wanted to share it because it's up also strongly, 2% plus lifetime high. This is South Korea country fund. And closer to home, IWM, which I had nice profits on yesterday with a short position that I covered. This is up pretty strongly, 1.14%. I have re-shorted it earlier today with a tight stop. And very broadly speaking, so long as it stays underneath this price gap, it still looks pretty good. But as I've mentioned, what we really want to see is a failure of this ascending trend line. That would be quite the big deal. So a couple of minutes to wrap up here. Might even finish a few moments early for a change. ES, the ES S&P 500 has continued to work its way away from this completed wedge. Lifetime high remains intact from back here late in January. And ever so subtly, we have been banging out a series of slightly lower highs each time. And of course, what I'd love to see next week is another lower low to match what's going on here and here and here. Let's add another one down here. The NQ, and things are starting to, I noticed the ES just slipped red after being green all day long. Here's the NQ, unchanged. Now it's red a little bit, but we had a bounce on that earlier. That's gone. And this won't really matter too much unless and until it can break below this distribution top. The low was set back here. So we're getting toward the lower portion of that. Obviously keeping a close eye on that, hoping for the failure there. And still, crypto remains worth watching, even if you've never traded crypto and never intend to in your whole life. It's worth watching. It's an important element of the psychological zeitgeist, risk on, risk off feelings out there. I know that sounds really mushy, but it does count. And Bitcoin is a driver in the overall psyche of the market. And in my estimation, this is a decent reversal pattern with a very hard limit at around 81,000. And the more we can sell off, especially if it can crack 60,000, the more beneficial it'll be to the 1 or 2 equity bears still living here on our little blue planet. So it is the end of the show to the moment. So I'm going to say fare thee well. Happy Valentine's Day to those who choose to celebrate it. And I'll be here on Tuesday. So good night and good luck. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we're back. We're here to wrap up the trading day, the trading week. You're watching Last Call. This is Tasty Live. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, what did I miss this week? It feels like maybe there's some better breath out there today. I'm looking at a market right now where the S&P 500, NASDAQ are mixed. S&P 500 is down by 0.1%, NASDAQ off by 0.01. Your Russell 2000 is up 1.05% as we turn our attention to the charts here. I mentioned better breadth on the day. Your equal-weighted S&P 500 is up by 0.92, so not all bad news. We've had jobs reports. We've had a CPI report this morning, which, Ilya, I'm sure you have a bit to talk about in a little bit here as we take a look at the impact on Fed cut odds. But as you move away from that CPI report and a mixed market reaction here today, you do see that bonds are trading higher across the curve, and ZB is trading in at a level that we really haven't seen since the end of November here, back up to 117 and nearly 25 ticks. Notes finally moving away from 112. That's up at 113 and 6.5 ticks here. So lower rates across the board following today's CPI release. We do see that lower rates in the wake of that CPI release are helping pave the path for a little bit of a bounce back here for gold, for silver, which down over 10% yesterday, back up by 2 here in today's session. Although, Ilya, I do have some thoughts on the volatility profiles here, and bulls may not be that enthused to hear what I have to say. Otherwise, in the world of FX, we see that the dollar is mixed, and broadly speaking, the dollar had a pretty good run recently. It since has come off the board the past few sessions. It's stabilizing a bit here. Next week, not really a big week for U.S. economic data, so we're at the whims of the White House instead. Beyond that, Ilya, look to what's going on in broader stock markets here as we take a look at some of the individual performers right now. NVIDIA is the worst performing MAG 7 stock on my screen, off 2.7%. Microsoft, which has been a nightmare this year, has been a little bit more stable here today. Apple's continuing to pull back, testing that uptrend from the those July swing lows. But it's really a story of that breadth that's spreading out. I mentioned that we're seeing utilities that perform well, healthcare's performing well, industrials, consumer discretionary, consumer staples. Okay, so we've run through how the market's been performing today here, Ilya. What's the most surprising performance, just face value? Is it Bitcoin up nearly 5%? Is it gold bouncing back? Is it the fact that a market that could be sniffing out lower rates, say by mid-year, is not enthusiastically lifting stocks higher? Dealers?
Yeah, I think
I think the disconnect between what CPI was and how stocks reacted is very interesting and also very encouraging for some of us that have been looking at what's going on, in particular in oil prices, and saying, be careful what you think this CPI report is going to show.
Yes.
And I think that's the essence of today's market reaction. And the markets are ever wise and ever prudent because they see here exactly what's going on. I warned about this as I was writing the blog preview for this CPI report earlier in the week for the news and insights portion of the of tastylive.com, and it ran away from me. I ended up writing double what I thought. But one of the sort of interesting observations that I came to as I was putting together the data for that was December's move on disinflation was all about a smaller contribution from energy. Everything else was quietly inflating, not by a lot, but what got us lower inflation, what kept us from going from 2.7 to 2.8, let's say, in December, was energy. And when you look at
the gas was down 7.5% year over year.
When you look at these numbers, and this is what I was warning about, if you got another report where energy was the big disinflationary force, then you've got a problem. Because since the beginning of the year, crude oil has been going higher. And it takes about a month for that to show up in CPI, give or take, and break-even rates have already noticed. They've been marching higher with crude oil. So it's not like the market doesn't see it. They do. So what you get in the report today is precisely that kind of an issue. The biggest month-on-month decline in the various components of CPI here, I mean, energy and adjacent things. I mean, used cars and trucks are the biggest month-on-month decline. But of the major categories, energy is by far the largest. And if you look at the year-on-year calculation, you end up with much the same thing.
Well, you get this bump in, there's interesting double layer to this. First off, in the rates market, we had that rate cut bet for the month of June jump up a little bit here. We're looking at the SR3M6 contract on the platform. What was a market pricing in, roughly speaking, a 3.42% Fed funds rate in June is now at 3.4%. So only 2 basis points. That's roughly an 8% swing in the odds. You're seeing it pull up for December as well, where if we're getting disinflation or disinflationary forces, then maybe the Fed has more latitude to move further away in time. But that's not the case for volatility here, right? Where you see the uptick in Fed cut odds this morning around the CPI report, you likewise see a temporary brief dip in vol. VIX here pulled back to about 20.61. And it bottomed out during the day, roughly speaking, when we should have been on Futures Power Hour, Ilya.
Yeah.
Instead, 19 and change VIX, 19 and a quarter VIX. We've added 2 points here over the past 2 hours or so. And so that's not nothing. We talk about an equity market rally that maybe is, why aren't we taking advantage of those potential cut odds that have risen today? Volatility is coming back here into the close. And I can't help but connect that to some of the headlines that we're seeing out of the Middle East. I know oil isn't exactly shooting to the upside today with the U.S. sending a second carrier strike group to the region as announced by President Trump. Oil off by 0.2%, and volatility has come in meaningfully. We're only in the mid-30s now. Is this the top asset to watch in the coming days? I'm looking at a NASDAQ earnings calendar. I'm looking at broadly a market earnings calendar, I should say.
Yeah.
I'm looking at a macro calendar that feels rather light. What's the top item on our watch list in terms of the news that could potentially be the most disruptive to price action next week? Something that could really upend the way that volatility has been behaving.
Well, I think you've hit the nail on the head here. We don't really have a lot of scheduled event risk next week. It's kind of slim. We've got FOMC minutes. That'll be important. obviously the market is hanging on everything that Fed officials say, because in my mind, this is their safety net. You don't have to worry about AI being a blow off if you have cheap money, because if you get it wrong and you wipe out on some of what has been an amazing run, borrow back cheaply, go again. You don't have to worry about crude oil is going up when everybody was expecting a glut, and that's complicating all kinds of things, not the least of which the U.S.-China trade war, because what the U.S. is doing and what's driving up oil prices. And it's not just the U.S., it's the combination. Iran is teetering for organic reasons, plus the U.S. is doing all these things with tankers, plus Venezuela, plus. That's driving up crude oil in a way that China's not going to like. That's their supply. So there's all kinds of plates that the markets are spinning. It's not scary to spin them if there's cheap money that's coming. Because if you drop one, okay, whatever, we'll buy it back. So I think that's the biggest thing here. And so FOMC minutes will be critical, but to your point, so much of this is suddenly tied to oil, because what oil means is that maybe they can't get the cuts they want. How in the world is a Fed supposed to come out and say the service sector is hot, not for jobs, but for output? It's minting money. Crude oil is up and feeding inflation that clearly the bond market has noticed. What rate cuts? What? And the labor market is, if anything, mixed. The message we got from the collective data this week is we don't know if the labor market is good or bad, because the headline number was relatively good, but all of the revisions were absolutely abominable. I mean, for 2024, we lost 500,000 jobs, depending on what we thought we had. We thought we had 2. We ended up with 1.5. For 2025, we had 181-ish thousand jobs for the whole year. Whereas we thought we had 500,000 and some change.
No, it's not great, as we
not great.
Say in the business, Ilya. Hey, before we take a look at the top volatility movers over the past week, and there have been some fairly sizable shifts in some of the major commodities here, silver, natural gas in particular. Good time to remind everyone that if you're looking for a friend, you can get a dog. And if your dog has a friend, you can refer them to trade with Tasty Trade. Josh, did that work? Refer and referee, referral. Each get $100. Tastytrade.com/refer a friend. Tastytrade.com/refer a friend for more information. Producers say that was no good, Ilya, as a transition. I'm a little rusty. We'll get back on our feet next week.
I'll take it.
Okay, I appreciate it.
It's a Friday. I think we're coming in strong.
Ilya, I'm looking at the 5-day IVR change on the platform here. There's a lot of commodity names at the top of this list. I see wheat, for example, which not something that we necessarily trade or care about all that often, but that saw a 51.8% decline in implied volatility. Silver, though, is what draws my interest here, because silver is the kind of asset that in recent months, well, just from a behavioral standpoint, silver is the kind of asset in recent months that has really benefited from continued upticks and swells in volatility. And so the fact that we've seen this significant pullback here and refusal to more or less reestablish ourselves through key swing levels, we haven't been able to get a close back through the 1-month moving average ever since that decimation Friday, January 30th. Silver vol has come off the board substantially. We're no longer looking at IVRs north of 100. They're down in the 50s. Previously, we've seen contractions in vol and silver like we saw in April of last year, or here even in October. They have been correlated with markets that either pull back or go sideways. So I find myself as a silver person, as a gold person who, silver, the position I currently have sucks because it's a 117 call spread as I was continuing to chase the rally to the upside and putting coins in the machine. Sometimes the trends break and the last trade in the chain won't work. Gold feels better than silver still.
It does.
I know the vol has come in, but this is comfortably above its 1 week, above its 1 month, above its 50. Each have a positive slope now. This feels like the safer of the
vol
trades.
has come in. because the way that I was long this was selling out of the money puts. So,
well, there you go.
I like that the vol has come in. It's great. And I like that I'm on the long side of some kind of a vol contraction with essentially a long side bias, because I agree. I think this story isn't going away, and I don't think it's going to go away soon. I thought it was very telling that yesterday, when all the risk sentiment related assets melted down, gold melted down with them, to pointedly underscore this is now a risky asset. This is now a speculative narrative. This is not a haven. It was never a haven to begin with, but it is not an anti-risk sort of thing. There's nothing safe about gold. Gold gives the impression of a haven because it tends to or tended, 320.25, it tended to rally when yields fell. Well, of course, it doesn't yield anything. But when do yields fall? When there's risk aversion. So it gave the appearance of an anti-risk asset. I mean, take 2022 stocks were down all year, so was gold. Why? Because the essence of the risk aversion was higher rates. It's about rates for gold, or was about rates, and is normally about rates, and the dollar for gold, which are, of course, adjacent narratives. As far as a real haven asset, no. And the past year and some change, we're in February now, gold has completely jettisoned everything and said, you know what? I'm a speculative narrative in my own right. I am not connected to stocks. I am not connected to this. I'm not connected to that. I am the deglobalization trade.
And that trade's still on.
And that trade is very much still on.
Well, the dollar hasn't recovered, and that's probably one of the reasons why you could say that this globalization trade's still on. Ilya, thematically, I don't think that's going away next week. And, the fact that gold is still holding up, to me, says a whole bunch. And it's stabilizing around $5,000, $5,100 an ounce.
Yeah.
Maybe it's getting ready to just consolidate for a little bit like last summer, a little bit of up, a little bit of down, but nothing really changes long term. And then you get a chance to reload once the narrative seems to, or the spotlight seems to have shifted. Let's talk a little bit of the volume here today. These come from birthday boy Frank over in the booth. I suppose we owe Frank and Vanetta both happy birthdays around the corner.
Happy
5 million Qs traded today. 5 million Qs traded today. That's higher than the S&P 500, which 4 million options trade today. It's been about this way for 2 weeks, Frank notes. Significant trading volume in Tesla, which only has a 4.1 IVR. NVIDIA, which, as we noted earlier, that's had a pretty rough session with the 31-point IVR. But it's the bonds, Ilya. That's the one that takes the noteworthy crown in terms of vol for today. Better be lucky than good, I suppose, because we recently, after getting our teeth ground in last week, we began to flip positions here in ZB. So something going on here, for example, right now, the 115, 116 call spread, which was not looking too hot, all of a sudden saved by a prayer. Same thing.
Now, are you long here?
I was long here a week or two ago, thinking that maybe I could buy an out of the money call spread in bonds with Jamal if something happens with Iran one of these weekends, right? And sure enough, at the 0 and what's now at 7 DT, both of those has moved fairly. They've gotten the movement that they needed today. It worked out really well for some shorter dated things that typically don't. But you had the triangle here, you have the parallel channel here that was breaking. And so now that we've cleared out the former swing high from the middle of January, the bond market has a little bit of a different feel. Frank notes 58,000 bond options traded today, which that's a number. Here's the context. That's about 6 times their monthly average, or excuse me, their daily average. So this feels like a turn. We always talk from a technical standpoint. When you get these big volume sessions coupled with technical breakouts, it really raises your eyebrow and makes you think something different has occurred. It feels like we can say something different is finally going in notes and bonds, which have been so frustrating if you've been a directional trader for basically the past 4 or 5 months.
Yeah. I mean, I ran away from the long side once we broke back after that breakdown failed that you have there in the gray line. So I got out. I did not get long. And I'm kicking myself now because my rule for this year is we don't get out of positions. We flip them over. because if the position you had was wrong, then the other side is right. So, and I didn't do that here, and it's making me pay. It's making me look at this market go up without having any exposure. If you take a look at what's going on in particular in ZB, the downtrend from October, like mid-October, the 22nd was that high. That's busted. The range, as you were just saying, from the mid-January high, busted. Now we're up against the November 25th high. Maybe we'll get some sort of a reaction lower from that, and there will be a mulligan to find a buying opportunity. I'm looking at that because something has changed here. I think when you look at the priced in expectations for Fed policy moves, you get a sense of what that something is. We now, let's put this in context, the Fed still only has one rate cut on the menu for this year. We're out to 63 basis points for the markets. The markets think we're approaching 3-cut territory, or at least we're flirting with the idea that 3 cuts are now a 50-50 plus kind of a bet.
Cuts coming in this economy, that might not be good for good reasons.
Well,
but hey,
how interesting is that? Right?
The economy
is fine. Inflation is getting pressured higher by oil, and the market is so unnerved that they want 2 erring on 3 cuts this year. And the bond market says, yeah, that's right.
You know, what makes this interesting about bonds, this is a chart that we've played with a number of times. And no matter how many times we reconstitute this, Ilya, it could have been in 2024 when it said, will this break? Or 2025. So 2025 high in our ZB chart. And this is probably the most interesting chart now for me heading into next week. We see a break of the downtrend from the COVID high and then the Trump tariff highs last April. So meaningful market events that are occurring. We get the breakout in September and we move sideways. So let's just say for the sake of conversations, we need to reconstitute this trend line. This is the week that off the most recent local swing highs, going back to 2020, we've started to break out. Starting to see a little bit of shift. And I know this has been a false alarm previously. And if you've been trading it long, it's been frustrating. But the technical perspective here, Ilya, is that, you know, a triangle that terminates at the end of a trend, this should in theory be another shot at bonds bottoming. Maybe it's a careful what you wish for situation, because if bonds are rallying, given the context, we wouldn't get cuts for good reasons. And that would probably be negative for any equity bulls out there. If history is any guide, maybe this time is different. But the way that bonds and notes even getting away from 112, maybe we'll get up to 114. And with 7 days left, this reverse iron fly nightmare becomes something that can be saved, because it was at max loss just a few sessions ago. Now, not so much. Notes and bonds are going to be the 2 places of interest that I'm watching first and foremost next week.
Yeah. I mean, I think that'll be very clear. This is different. Something different is occurring here. And maybe we're finally getting into that space where the market is starting to say, right, so you're not going to do rate cuts sooner. That means more rate cuts later. And you're starting to see that kind of action. We're still, by the way, operating with a sense of urgency, because if you look at what's going on in the Fed funds futures for 2027, nothing, flat. Nothing is going anywhere. No changes. Whereas if you look, I mean, at this point, the markets have priced in a big 6 basis points in hikes. Ooh, that's a rounding error. But when you look at what's being baked in for this year,
can I just push back on that?
62 basis points in cuts. Yes.
You know, for 2027, and before we flip over to equities and look at some of these individual names as we go into the close and look at the IVRs heading into next week. This week alone, the SR3 Z7 contract, where will rates be at the end of next year? That's moved up from 96.72 open to 96.92, so 20 points there. Mm-hmm. That's 80% of one cut has been added to the board through the end of next year, just based on this week's economic data, which I find to be a fast.
You have to look at this in relative terms, though. If you look at the difference between how this moves relative to SR3ZF, the January contract, it mostly paces. And so what that is telling you, F7, what that is telling you is that the big changes are occurring before you get into 2027.
Well, it would be the end of this year, and maybe it's not for good reasons, though.
That's right.
Ilya, we turn our attention here as we wind down the trading day to some of the top individual stock movers. I mentioned in terms of the volumes before, you had your NVIDIA, you had your Teslas of the world. Let's switch this over into the list that we want to see here. There we go. Outside of Tesla and NVIDIA, the usual suspects are Apple here, which, as we go back to a daily chart, off by 2%. Your Amazon off by more than 0.5%. Palantir is up 1.5%, but this is a pretty ugly looking chart given the neckline break, especially after those better than expected earnings. If only as like a gauge for risk appetite in the market bid up Tesla with its 149 PE ratio after earnings, and since has dumped in a non-insignificant fashion, 161 down to 131. If that's a gauge of risk appetite here, you could suggest that maybe the market really is cooling off. But you've been doing the Bitcoin dance recently. I mean, there's Netflix in here, there's MicroStrategy, there's Micron, there's AMD. Crypto is the place where I feel like most folks are looking right now to try to bottom fish, if only because we are at the bottom point of a range that was in place going back to last April, and we're not recovering through it.
No.
Is that really the line for you as a bear? Until we get through last April's low, you're effectively trying to catch a fallen knife right now?
Yeah, I think so. I think we've made a critical break. And that April low also corresponds with the March 2024 high.
Yeah, that was such a beautiful
There's a horizontal line you put through this chart and go, there's the door.
Yeah, quite frankly, everything else, I think that's just
forget it.
Simplify it all.
What's the point? That's the line. Hear ye, don't be on the wrong side of the line.
Don't be on the wrong side of the line. We didn't get through there today.
And you can see it's stair step. I mean, I'm not doing anything that's rocket science here. There was a range at the top of this move. If you put a horizontal line, you see where the break is. That's what you sell. Then it gets down into a new range. It gets a new floor. It breaks that. That's what you sell. And I've been just quietly buying IBIT puts every time that it does that. So far, so good. This is the kind of momentum idea that you and I love. It develops over a period of some weeks. It's orderly. You can follow it. The market's got momentum. Great.
Well, I got bad news for the folks out there who are looking to buy a bottom here. If I'm just going to take this from a very technical perspective, which I think crypto probably offers you the cleanest technical trading on the board, followed by
certainly up there,
followed by forex.
Yeah,
like spot FX next,
especially like yen and stuff, like very technical currencies. Yeah.
October high to the late December swing low up to the January high. Fibonacci extension get you a measured move, roughly speaking, 52,500. So the way that I'm approaching this, having done my fair share of money losing on the long side of Bitcoin in myriad ways in recent weeks and months, Ilya, not just trading it, but not having, should I have gotten rid of more sooner? The 1 month moving average in crypto for Bitcoin here, 74,009, we'll call it 950. That is north of your line in the sand. The March 24 high, the April 25 low, that's about 74K. I think that gives us a pretty clean place to look. There's no reason to try to catch the exact bottom. Traders who try to catch the exact bottom, it's fun. I know that I do it once in a while. It's not on my plate as like the main course. It's like, oh, let me get this little, let me get a side dish of trying to call the top or bottom here. And like, if it doesn't work out, I had fun doing it, but I know that the odds are low. 75K. We're going to watch it this weekend because crypto has flushed into the weekend, Ilya. With that, we do have our closing bell here though. Our S&P 500 up a nickel, 0.05%, I should say. The NASDAQ here bounces back. It's trading a little bit higher on the session as well, 0.2%. Your Russell 2000 is your leader as we go into the weekend, up 1.26%. Ilya, we're going to keep an eye on these headlines out of Iran over the weekend. Yes. We'll have another Sunday night news dump because of a lack of action between the U.S. and Israel and Iran. We will see, and I know we'll see, because while we weren't on last weekend, thanks to the Super Bowl, I know, Ilya, you were watching the Bad Bunny halftime show performance. We are going to be back this Sunday for First Call.
We're not going to be back this Sunday.
Oh my gosh.
We have a long weekend.
It's President's Day.
We've got President's Day.
I know. Producer Josh told me, he's like, will you be my president this President's Day? And I said, no, I don't want to do that. But hey, that's neither here nor there. We're going to get off this call. We'll be back with regularly scheduled programming, Ben, at the start of the new trading week because Monday's President's Day. I got to check a calendar, Ilya. Hey, good luck trading, everyone. Thanks to everyone for coming in to tune in this week. Thanks to the producers for a great show. Good luck trading, of course. And we'll see everyone on the other side of the holiday weekend. You've been watching Tasty Live.